but only a few see the story unfolding in real time.
We are those traders.
Welcome to
Okay, I
Hola
think
Prime
we've
TV.
started.
The world's
Well,
number
the
one live
pre-roll has
trading
started.
network, where you
Together.
get Forex, futures, crypto, and stocks on one single platform.
From the pre-market buzz to the closing bell.
Gold rush moves, Forex fire, Mag 7 madness.
Deep dives, live setups, real traders.
No filters, no fluff.
Because we don't just talk about markets, we trade them.
Hola Prime TV. Trade, watch, learn, live.
Can't stop checking the charts.
Yeah,
That's why we built Hola Prime TV, the live channel made by traders for traders.
it's fast, it's raw, it's real. And it's the only prop TV that trades as hard as you do.
We don't just stream charts.
We live them. We are traders.
Hola Prime. Trade with transparency.
Hello, everyone. Welcome to the show. Hello, Paulie. Welcome to everyone in the chat. And good morning, Ray. Good morning, James, Perlin. A lot to talk about today, including natural gas, as you pointed out. James, just to put you out of your misery, I've just gone long on natural gas at 377. We'll cover that shortly. And yeah, welcome to everyone. It's going to be an interesting day today because we have the FOMC meeting in a few hours' time, and after that we'll have the presser, during which people will ask Jerome Powell some questions and he'll answer them. I think that's going to be the most important part of the day. I think we're going to get 25 basis points as a cut, unless there are any weird surprises, and I don't think that's going to affect the market much. I think the market's already moved in anticipation of that, but whatever Jerome Powell says afterwards and whatever questions he gets asked could be pretty interesting. I don't expect he'll say too much or give too much away, but you never know. People will be looking at his every single word he says, any changes to the pre-prepared statement and so on. And they're also looking at his tie color and his hairstyle and his the way his glasses are perched on his nose to try and determine what's going to happen in subsequent meetings. But it does look like we're going to get two cuts before the end of January, the way it looks now, maybe even three. So that's all in the mind of the markets. And of course, we got Donald Trump off to China tomorrow, but he is in Asia already talking business with Asian leaders. And tomorrow he'll be with Xi Jinping talking about China trade and tariffs. And if that is all successful tomorrow, we could see a massive move up in the market again, on top of what we've already got. So super interesting. And I've got a few key names and plays that I've got in mind going into the next few hours today and in tomorrow and the rest of this week. So I'd like to talk about some of those. Yeah. And we'll talk about the FOMC. A couple of currency plays I've got on. Energies, of course, Nasdaq, gold and silver, and of course Bitcoin, trying to regain and hold that 114,000 level, a little bit unsuccessfully as we're speaking. And then I've also got some interesting plays on some of the softs and grains, the agricultural products, some longs there too. And then lithium and uranium will follow that up if we ever get to that. I don't think we'll get right to the end, but there's a lot to get through. So, Paulie, what are you looking at? What's going on in your anticipation of, Jerome Powell in the meeting later on and going into the rest of the week?
Yeah, I must say I'm gonna mostly be focused on the indices today, and then probably I'm gonna be looking at I'm gonna be keeping an eye on crude oil and gold. So that's gonna be my main focus, those products today. If I'm being completely blunt, I probably won't be looking at too much else aside from those.
Okay.
But metals have been moving a decent bit still and everything, so there's been a couple gold trades here and there to make as well. So But yeah, that's
Yeah.
kind of what I want to focus on for sure.
All right. Well, I think let's leap straight into it. Now, we can switch across to my charts maybe. I'll just sort of have a look at a few things here. What I do think is that there'll be a fairly muted reaction to the initial news that comes out, probably 25 basis points. There could be a little flutter around that time, but probably not much. We'll see most of the action taking place as Jerome Powell answers questions and the robots pass through his pre-prepared statements. But there are a few things that are pretty interesting, and this is the currencies page. There's lots going on here, but I've picked out two particular plays that I think today might produce good results on. And the first one is the Australian dollar. I don't want to spend too much time on these currency plays because there are more interesting things to talk about and bigger fish to fry. But the Aussie dollar has fallen down in what looks like a descending triangle with a massive spike down there. When was that? Was that Liberation Day? Could have been March the 23rd. No, that was 2020. That was the big sell-off in 2020. That was the Liberation Day spike, this most recent spike down, and we've moved up ever since then. We are just approaching the 200 period moving average here and the channel descending line. I'm already long from the channel bottom, so I don't have to worry about what's going to happen here because my stop loss is at break even and we got long just on the 50 period moving average bounce over here. So I'm not too worried about this. I think we will drive through, and I think the Australian dollar has a chance because it's a little bit cheap and it's probably got a little bit of a bid under it in general because of commodity plays and the big boost up in precious metals and platinum group metals and even rare earth metals and minerals. So I think this is probably one of the better plays and it's looking good. We've got a good technical structure. We're attacking the 200-day moving average. That's week, sorry, not day. 200-week moving average. We are actually above all the other moving averages. And there's that channel line that we're trying to get through. So we've got a little Bollinger Band resistance up here above us at about 0.67. It's also that previous swing high. But I think if we can clear there, we'll move pretty quickly up to 69.50 and then probably beyond that into the 0.7s. The Australian dollar often trades between 0.65 and 0.75, as you can see here. And I kind of like trading this range in general. I started trading the Australian dollar about 30 years ago when I was living there, and I was trading exactly the same range. So it's kind of interesting. That was going back beyond this chart before this chart even starts. So, going back another 10 years to the left. But so that's one of my plays. And in line with that, I think we're going to see euro weakness and potentially a little bit of dollar strength. That will be affected by what happens today, of course, with the dollar. Whatever Jerome Powell says will affect the dollar and the markets in general. But particularly when we're looking at currencies, the dollar will be swayed one way or the other. And I think possibly, I don't know, actually, to be honest, I don't know which way the dollar's going to go. I have an idea that we could see a little pump up. But nevertheless, I think no matter what the dollar does in general, the euro is likely to be weaker than the US dollar against other currencies. This is the euro. We've fallen out of the euro's channel and looking a bit weak. I don't know what's going to happen. We did reach the 78.6% level that, I don't know if you remember, many of you won't remember, but I was looking for this level to reach and get short at on the weekly chart for a move back down after the big sweep down through the bottom. We've now had the sweep through the top. The range that we broke out of here on the euro is this inner range between about 1.12 and about 1.05. We cleared out through the bottom, a big sweep through the bottom, gathered liquidity, got rid of everyone that was kind of long, and now we've gone through the top to the same amount. And I think this is where the euro might actually falter at the 78.6, big resistance level to the left here too. So if we do see some general weakness in the euro and general strength in the Australian dollar, we must then look at the euro Australian dollar as an opportunity to sell. And I've now gone short on this trade. That was this morning, quite a long time ago, a number of hours ago now. When I woke up, basically, I looked at this chart. I'm looking at this bottom. We are approaching the bottom. We're at support, and that's the 200-day moving average here on the euro Australian dollar. But I like the way this has rejected the channel. The channel center line was rejected too. We didn't get to the top of the channel. We broke down through the bottom. And rather than waiting to get short, I've been short on this already, actually, previous to this. We took profits on those and got out, and I'm now short again. So I'm using a little bit of the profit from the previous trade to cover any risk on this one, hence my slightly premature entry. We did actually move down after I got in and dipped down quite sharply. You can see that here on the 1 hour chart. My entry was over there. We came down and we've moved back up again. And, we might have to move up a little higher, up to the breakout level. But nevertheless, I think that's a good trade. And this one could move down quite sharply once we clear down through the 200 period into some of these support levels further down. Maybe 1.71, 1.7, the big round over there. So those are the only two currency plays that I've got on or in mind. No, that's not true, actually. I've got another one here on the dollar yen, which I haven't really done much with. I have a short position from there. I had hedged it on the exit from the breakout level. I took profit on the hedge, looking to get short again to add to this existing short, using some of the profit from the hedge to offset the risk. We're above the channel center line, above the 20-period moving average here on the day chart. And so right this minute, we're being pretty well supported. If we can get through there, back down to the channel bottom, and then break down through there, we could see my red line eventually playing out. It doesn't mean we don't have to get to the top of the channel, though, and this is looking more and more tempting all the time. Let's just quickly zoom in. Top 200-period Bollinger Band and channel top, and we're bouncing off the channel center line and the 20-period here. So maybe we've got to get back up to the top. There's a big problem here with the yen in that the new Prime Minister of Japan, who's a fiscal dove, really, is likely to try and achieve the impossible, and that's by try and boost the economy, drop interest rates. I think there was even talk about, I don't know, back down to zero or thereabouts. I don't think that's going to happen. But trying to stimulate the economy and trying to reduce inflation at the same time. Japan has always, as far as I can remember anyway, over 30 years, had a problem with inflation. Not that it's out of control most of the time, but that it just exists. Japanese people don't like price of noodles going up. When a packet of noodles goes from $1 or 100 yen to 115 yen or 110 yen, just 10%, it really upsets Japanese people. Sure. This is just what I believe. I don't know. I've never been there. I've never lived there, but inflation is an issue. And if the new prime minister is to stimulate the economy, inflation may come back. And it's unlikely that we'll be able to get any further strength in the yen and drive this chart down. But there might be and probably will be intervention when the markets get out of control and this, it all looks a bit sort of going the way that we don't want things to go, particularly for the Japanese. There's always the opportunity to intervene, and they've been doing that for 30 years too. So I wouldn't be surprised if we saw a sharp sell-off at some point, intervention by the Bank of Japan in collusion with America. Mm-hmm. So just keep an eye on that. Don't get too bullish, but also it's probably not a good idea to be short. I'm trapped short here, and at this point, I wouldn't be taking any further trades on here. I probably will try and get out of this short trade by selling some more if we see some directional move down. Otherwise, if we keep on moving up, I'll hedge that short trade. It's only a small one, it's 10%, but I'll hedge it and decide what to do with it later. When in doubt, hedge is my philosophy. If you're ever in doubt about a trade, and it's a good way to approach it sometimes, and you can't always do it if you're day trading, but if you're a swing trader and you don't know, or you don't like something, or it's just confusing, or you don't like the setup, or something went wrong, or some bad news came out, but you don't want to exit the trade, but you're not sure, it's always a good idea to hedge and learn how to hedge. So that's probably what I'll do there. All right, so that's currencies, and then of course now the stock markets have moved up. Now I've got a couple of things that I want to go through. Is that all right with you, Paulie? And
yeah,
we can revert back to you.
No, yeah,
I just want to highlight my main plays, and then because there are things that we can do today to make some money, and that's why we're here. So the Nasdaq has moved up very sharply up to my blob now. I just have to move it along a little bit, but we eventually got there. And because we got to my blob, I hedged my position. And so let me just make this visible. So that orange arrow at the top there is my hedge trade. I've got a long position from these two green arrows below us, bouncing off the 20-period moving average, really, miles below us now. Of course, we've got a long way from the moving averages. We may need to mean revert, particularly now that we've got the FOMC meeting coming up. So I've taken, I think, about 1,200 pips on one of these positions and about 1,000 on the other. I haven't quite checked yet. I haven't taken profit. This is a hedge position. I've locked in the profit. I can close all the trades and what's the word? Assume that profit. No, that's not the word. Realize that profit. I could do that right now. But what I'm going to do is wait to see what happens with the FOMC. There may be sharp and dramatic moves which give me the opportunity to sort of manipulate my hedge position and maybe get some profit on some long parts of the hedge, some on the short, with big whipsaw moves taking place. That will be a day trading environment for me when the news comes out, and I'll be looking at my hedge positions particularly and looking to do some potentially day trading whipsaw action just with a hedge, not my long positions. Those I'll keep on for now. So that's my play on the Nasdaq. Same on the S&P, no different really. I've taken my profit, or locked in my profit on this trade. And we've been watching this for the last couple of weeks here on this stream. And so you'll know that these positions are real and that we got into these. We got into them on stream. And I've now hedged this one as well. This one's got a lot more to go before we get to the red blob. And the 200 period Bollinger Band right up at the top here, over 7,000. I think that's where we're going to go. I just don't know if it's going to be today or this week. I don't mean all the way there. I mean, I don't know if we're going to carry on moving up today, that we may have to retrace. We haven't retested the breakout. We haven't kissed it goodbye. We haven't done any of that yet. And so we may need, and it could be today, we may need to pull back into that breakout level, something like this, and then go on to reach my blob later on. So don't get too gung-ho on any of these, particularly as we are likely to see some very large whipsaws. Not just because it's the FOMC and not just because there's all this stuff going on with Jerome Powell. Trump might even announce a new Fed chairman sometime fairly soon. So there's a bit of drama going on there. But it's not only that, it's also that we've had a dearth of economic information. We've had no economic news for over a month now, or just about a month, 29 days I think we're at on the government shutdown. So we've had no other information. So any information that does come out, like this one, and it's a big one by itself anyway, any information that does come out will be amplified and exaggerated because that's what markets are likely to do. So be careful here. I've hedged. I'm not going to unhedge until after the meeting and after the presser. And during that time, I might even, as I said, do some day trading on the hedge positions, maybe take some profit on both sides of the market. Right, now let's go into natural gas. I'll come back to gold, Bitcoin, etc., and some of the other ones just now. There's a very specific question from James Perlin. Thanks, James. I appreciate it. And for those of you who are in the chat, if you've got any questions, please ask them now. Thank you so much for the super chat, James. There was another super chat earlier from Control Alt Alpha, who said he's made this channel his home. So welcome to your new home, Control Alt Alpha. It's great to have you. And James, welcome. Let's talk about natural gas. So this is the natural gas chart on the futures. I'm no longer trading the continuous, but let's have a look at the continuous chart first. This is the continuous chart. The only interesting thing about this really is that we've come down to the 200 period moving average here on the 4-hour chart. That's it. We've also got this rollover gap. Was that a rollover or a weekend gap? That was the weekend gap that has not been filled or tested. So yeah, right. Down to the 200, a little bit of a bounce. This is the continuous contract. I'm not trading this, continuous ETF. Beautiful little bounce and consolidating, could be a bear flag here at the support level. With that in mind, and I'm going to switch it back to the 4-hour, let's go to the futures chart where I am trading. And nice. I got long on dip down to my red line. We talked about this yesterday, the 375 level, absolutely key level on natural gas. Natural gas always reacts to it, and I don't really know why. After many, many years of trading it, it's just there, 375. Put it on your chart. We bounced off there today. I got long at the bottom. Let's have a look at the 15. Not quite, actually. I got long at 376 or 77. 77 with a spread, one penny, not quite 1 penny spread, but let's call it 77. And we're bouncing out of there quite nicely. This is the 15-minute chart. And if we go back to the 4-hour chart, you can see, unlike the continuous, We did not dip down to the 200-day moving average, 200-period moving average on this 4-hour chart. We did on the continuous, but not here on the futures. It's because of the rollover gap, and obviously that chucks things into disarray. I do think, however, we may have to revisit this level, the highest point of the original contract at 358, or let's call it 350-ish. However, I have taken the chance of going long right here and looking at the 15-minute chart, bouncing out of there. Didn't quite get there, by the way, almost. And you can see as we're speaking, it's moving up quite nicely. Every one of these little ticks up by 1 penny on natural gas is 0.3%. It looks tiny on your chart, but that little 1 penny tick is 0.3% on natural gas. So it's a fast mover, and it's likely to throw a few people under the bus many times, as it is called, the Widowmaker. That's its name. Bouncing out of there quite nicely. Let's see how far we can get. Remember that this contract is only fresh. It's this blob here is the current contract. I'm going to draw a thing around it because I like drawing stuff here. This is the current contract. That's it. That's as long as it is. This is a 4-hour chart. All of this stuff prior to here was the previous contract, the big green blob down here. We've now rolled over into the December contract. My feeling is that natural gas is likely to move higher over time rather than lower, even though it's a ranged instrument and it trades roughly between $2 and $4 most of the time. But I think we're moving into the $3 to $4 range rather than the $3 to $2 range, which we've been in for the last couple of years. And so I think we'll hold $3. It's quite a long way down below us still. I think we'll hold 350, and I think we'll probably hold 375, but I'm not convinced just yet. I've gone long. I've got a 10% position at the first green arrow and a 10% position here, and we're currently more or less at break even if you combine the two. That's natural gas. Please ask more about that, James, and others who are trading this instrument if you're interested in further analysis on that. So that's a good play for today as well. That's one of the things I wanted to mention. Anyway, James, so you brought it up just in time. And then WTI, well, not much to add here really. Over the last period, the last couple of days, these are all 4-hour candles. Try to find support here at the 100-period moving average on the 4-hour chart. I'm very bearish on WTI overall, but I'm not ruling out a bit of messing around, particularly today and for the rest of this week after the FOMC, as that will affect the dollar, and the dollar affects WTI oil as well. We are holding the 20-period moving average here on the day chart, which is not great. We want to get down below there and start moving lower. Going back to the 4-hour chart, we've got multiple reversal candles here at the 100 and the 50-period confluence, which is pretty supportive. Looking at that and considering the news that's coming up today, I reckon that we're going to move higher, probably all the way back up to 62.30, and possibly just a little higher as we mess about. And we've probably got to clear out a few people who are a little bit too enthusiastic to the downside, to the bear side. Maybe just back up to the trend line. There's a gray trend line running down from this very top part, touching that high there. And then we haven't quite got to it. So yeah, maybe we could get up a little bit further, up to about 62.80, and even the 200-period moving average and this order block, and so on. But that would take us above WTI Moab, which is the breakout level, mother of all breaks. And look how we've been trading above that level for multiple years. We've then broke down suddenly and dramatically. OPEC was involved, Russia was involved, the US was involved. Donald Trump wants this price much, much lower. The Russians want it higher. OPEC, I think they'll just go with whatever's going on. And so I think Donald Trump's probably going to win this battle and oil will move down. It's going to be messy, though, and take time. So I'm remaining short there. And then, so we've covered almost everything I've got to talk about today. We can cycle back to them. And then Bitcoin. I want to cover Bitcoin. How are we doing? Well, not great, actually. Although I remain slightly optimistic here still. Yesterday's day candle was a massive, almost, but not quite, a tweezer top bearish engulfing candle. That's not good. And it actually took place at that trend line that I was talking about yesterday as well, that I thought we would reject from, and we have. So we're still below the trend line and still below my picture on which I put up on X about a year ago saying we wouldn't break the trend line. I was hoping we'd be above it by now so that I could regain face, but we're not. We're still below it. So yeah, can we hold here? I think we could. We're above some of these moving averages. There's the 200 coming up underneath us, and we're just trying to hold here. We've got to get above that trend line and the 100 and that double top that we've just formed over the last couple of days. Let's have a look at that on the 4-hour chart. There it is there, one high to the left at 116, and we tried it twice over the last couple of days. Once there and once there, failed on both occasions, and failed more dramatically on this last occasion just a few candles ago on the 4-hour chart. So, and taking us below the 200 period and the 100 period on the 4-hour. So not great, but probably not unexpected considering the news, gargantuan, momentous news that's coming out later on today, and of course the presser that follows. So I'm generally still long on Bitcoin, Ethereum, XRP, Solana, and I'm also long on some of these names. These other altcoins, Cardano, ADA, Uni, Litecoin, and Link. I can't remember, have we talked about stocks already? We did talk briefly about them, but I haven't talked about these names. I think these are going to be some great plays here too. MSTR, Tesla, Coinbase, Nvidia, and a couple of other names which I don't have on here, like Google, and one or two of the other names. Not for discussion right here. And then finally, let's have a look at this last chart, which is some of the softs and grains. We've had a really good move down on coffee, for those of you short on coffee. I think this is going to keep moving. We've got an excellent entry here, and I'm just holding on to that. I think we'll move down to the bottom of this range fairly quickly, and we'll see what happens once we get down there. But we're moving down rapidly. We have a good short position on there. We might even add some more size to this if we get a bit of a pullback, retracement, and reversal back down again. Soybeans, a lovely play building up here, breaking out of a long flat bottom range. We got long at the bottom there. I got out at the top of the range, but I'd like to get back in again now on soybeans, and I'm hoping for a dip down, maybe to fill that little gap down below us at about, starting at about 1070, and the gap ends at the bottom at 1060. So we've got a 10 point gap here, and I think we could get at least to the top of the gap. I'll certainly be looking to buy soya at the top and at the bottom. So that's 1070, 1060, and I think the target for this is pretty darn good. And I think we could get right up into some of these levels where soya often likes to trade in the 13 to 1400 region. So yeah, okay. And also I'm long on corn now. I also leapt into this trade with a very small position. I think we're heading for a breakout. I like corn very much, and I think this has got a good chance too. We did get long some time ago, but we got out of that trade near the top. I've got back into it now, and I will add at the purple arrow too if we get a drop back down to the breakout, the mini breakout level just below us. So if we get something like that, I'll add my next tranche on and look for a breakout through the top. I may even add some more on actually if we get a pullback down to the trend line and get another chance to buy over there on corn. So that's corn. And then wheat, I'm long on wheat too. So, many of these softs and grains, the sort of staples, I think have got a good chance. Wheat made a triple bottom, bouncing up through the trend line, and we're long from near the bottom. So all pretty good on that. And I think that's it. So those are the plays, folks, that I've got lined up for today. I've tried to give you a brief overview. All the action will begin in about how many hours' time? I don't know, 4 hours time, something like that. Is it 4 or 5 or 6 hours time?
About
anyway,
6 hours,
a number of hours. 6 hours, yeah.
Yeah.
So I'm setting up my plays for this announcement. I'll be trying to day trade the Nasdaq, as I said, at the top here, just with the hedge positions, keeping the longs on. I'm hoping that Bitcoin, etc., will move up. We haven't even got to gold and silver. Let me just finish off with this. I won't talk about the other metals, but I will talk about gold. You'll remember that we were short from the 2 red arrows. I got out at the 200 period moving average here on the 4-hour chart and went long. That's it. Very, very simple. Nothing complicated about that at all. Sold at the trend line break, sold at the next trend line break, got out at the 200 and bought. And now we're out of this trade completely. I have no positions on gold. When we got back to the 20 period moving average, the short-term momentum moving average, I took profit on the long position that we got into at the bottom. So 2 shorts, out at the bottom, long, out at the top. And that's gold. I'm done with gold for today until we hear from the Fed and what Jerome Powell's got to say. I do suspect still, though, however, and quite a nice bounce, a little bit surprising for me. I didn't think we'd bounce so vigorously, particularly in the last 4-hour candle. But this does make me think that I maybe could have held on to these longs for a move all the way back up to the 618 and then the 786 fib here at 4,220-ish and 4,300-ish to give some exit liquidity for those who are trapped at the top here. And I think there are probably some very serious and large positions waiting to get out there, which might force this market back up there. Right. So no positions on gold right now. So we'll see what happens as this day goes along into the FOMC. And that's it, Paulie. I know that was a big mouthful. It took half an hour and used up all the bandwidth. We've got none left. So that's it for today, folks. Hope you have a lovely day for the rest of the day. Joking. No.
Oh, gosh.
So, well, I do like to. I'm sorry about just ramming all that down your throats, but I sort of panic that I'm going to forget something or miss something out or whatever. So
James got a lot in that noggin to tell you guys. So no, I get it. No, I can just sit here and listen to you, go through the charts all day, man. It's no worries. I'll get my turn eventually. I know we got plenty of time. We got 30 minutes here, so we're good.
We have.
But yeah, what I'll do.
And people love to hear your analysis, by the way, Paulie. Someone was telling me this morning that they absolutely think you're great, brilliant, very clever, very erudite in your presentation, and very thoughtful. Awesome. Those were their words, not mine. So,
I love it.
Good on you.
That's exactly what I'm going for. So I appreciate that compliment very much. That's very nice. Yeah. Well, on gold here, since you just took off with gold here and went on that analysis for a little bit, I will actually continue with that really quickly with some smaller time frame levels here. And I am kind of interested in the current area that we're trading in. So we're trading very far above at this point my previous day levels, which would be previous day's high and value area high, point of control, etc. Those levels are between 39.71 on the futures and 39.84. Right now we're trading at 40,042. So pretty far above. So, but what I will say is, putting that aside, on the 4-hour chart, or on the 5-minute chart, apologies here, you can see, we're coming up to an area where we had previously consolidated a bit after a larger drop. Generally speaking, we had a couple of peaks here before continuing the drop. But when I go to the 4-hour chart, when I transition to the 4-hour chart here, perfect. You can also see that not only did we consolidate there about literally 2 days ago or so, and to then make the move lower, but we had also had an area of support that I had mentioned. I had this box highlighted for a long while last week, and I was looking for it as a possible break or retest of support, and then we did break it, and now we're coming back up to it as support. So this 40-20 to 40-40 area where we wicked into it quite a few times here. So now what I'm really interested to see is if we have enough gusto of sorts to really break through 40-40 and then come back to retest it to then get long. So when you were talking about being a little bit more long biased, James, I'm kind of thinking the same exact thing with gold here. I'm thinking to be a little bit more long biased. The fact that we're trading relatively far above yesterday's high and value area high levels is also generally a bullish thing. So I'm kind of looking, that's the play that I'm looking for at the moment going into this morning. See if we can't break out above, retest 40-40 as like a support area to then continue upwards. Maybe we could get to 40.86 or so, which would be the 50-period moving average, or exponential moving average, apologies, which you can see we've had a little bit of resistance at over the past week or so, a couple times. So that's kind of the thought, a little bit long to the upside here. But I will say for the pathing scenario to the downside, this is, in case we do not break above to then retest as support and continue upwards, my thought to the downside is, let me pull up the 5-minute chart really quickly, if we can't seem to find some bidders to take this further, what I would look for at the moment is a quick breakdown back to the 39.85 level. I'd look for a breakdown throughout the morning to 39.85 to then try and find some bidders and see if some support is had to then make that move upwards to get back into the 40.20 to 40.40 range to then break through that range. So that's kind of my thought. It's more long biased thoughts. I'm just looking for support levels essentially to be able to catch, to find it, to catch a bid, to then be able to get in long and ride the wave upwards. So that's kind of the thoughts for me on gold. And to be quite honest, it's the same for silver. Silver's looking very similar in terms of where it's trading at versus the previous day. I probably won't be trading silver today, but something similar in terms of the pathing goes for silver as it does gold. If we were to go to the downside here, we were to find some resistance, I'd be looking for consolidation above 47.35 to 47.30-ish, somewhere right around there. I'd be looking for some support to then go long. If you look at the 4-hour chart here, let me reset the chart view. Perfect. You can see that we are at the 50-period EMA that we are not at in gold right now. So that's an interesting note to have at there. But yeah, what I will say is on silver, we are also back essentially to right where we were before we had that major drop from 48.35 down to almost 45.50 essentially. So there could be some resistance here as well. So that this is kind of the point, is I could see gold and silver having a little bit of a drop for a consolidation move to then be able to come back upwards here. It kind of, I mean, some people, I'm not trying to predict this or anything, but sometimes when I see like a little shelf here, for example, like this is the 4-hour chart, and between the 21st of October and the 27th of October, we have like a little bit of a shelf kind of come like that developed, almost like a mini head and shoulders of sorts, that then dropped us down. But now what's funny is this shelf that occurred in that week and then this subsequent drop kind of reminds me of like a possible reverse head and shoulders that could form if we were to consolidate here above previous day's high and value area high. I could see kind of like a reverse head and shoulders forming to then to burst us higher here. So that's more so just me trying to creatively think of how the pathings could work out and just to keep an eye out for it. Not saying it's going to happen or anything, but I just kind of keep it in my head a little bit. I look at it and I just say, okay, well, what are the possible scenarios here? So yeah, that's really it for the metals for me though. Currently we're trading at 48.30 on silver. So if we did have the drop that I was, talking about, a little bit more of a consolidation drop here, that would be about $1 in silver, which is a lot. So, but the metals are the metals and they are super volatile. So it's not out of the realm of possibility here. I do want to go to natural gas because I know you got to talk about it a decent bit here. And I'm actually, you know what, actually...
Paulie,
yeah.
Sorry, I had my mic muted. Sorry.
Sure.
Before we do that, can we just switch across to my chart on silver?
Sure.
I just want to finish off what you were saying there.
Sure.
And have a quick look at that because, so I've still got an open position here, unlike gold, which I'm out of gold completely. So I've got 2 shorts on silver, and we broke down through the trend line, reached that low, and I hedged my silver position, and that still remains hedged. Now, I think you're quite right, Paulie. We're below the 20-period move. This is the day chart. We're below there's the ledge as well. We're below the 20-period moving average. We broke trend line number 1. We broke trend line number 2. I think we now have to get to trend line number 3, but not before getting back to trend line number 1. Now that sounds weird, but I think that's, the trend line number 1 is still in play. We're now underneath it. That's all. I think we could do something like this on silver, I'm not sure where along this line, and then move down and break this level down to line number 3. I think we're going to line number 3. In fact, I'm pretty convinced of it. Maybe even further, but maybe even line number 4, which doesn't exist, which is much further down here, something like that. There's the 200-day moving average. So let's leave it at the 200-day. So assuming we could get down to about $40, let's call it 40. Actually, 40 round is perfect. There's a nice flat top there too. So assuming we can get down to $40, but before we do that, we've got to get higher or at least bounce a little bit, gives us a really good play to get long if we want to, and then get short later on if we see evidence of a short play developing, and riding that all the way down to here. And I think we'll probably get long again there. So allow for a bit of range trading, in this period. And it may even be that this is a topping period, which creates a range like this. And often, at the tops of big trends, you do see this sort of thing happening and then eventually breaking down. I don't think silver's bearish, but I think we may trade within a big range and consolidate in a massive range before moving higher. That's all I wanted to say, Paulie. Yeah.
No, yeah, that's great. No, that's good stuff. Yeah, and that's really it for the metals for me then too. So, you know what? I will go to crude real quick before nat gas, because I think there might be more discussion for us to have with the nat gas chart again.
Sure.
Because I'm genuinely I want to possibly pick your brain about it a little bit. So, so on crude oil, you know what's funny is I almost jumped in to interrupt you earlier because I was so annoyed with myself because I just missed a crude oil short early this morning here, about 5 minutes into our show, and I was really mad at myself because I saw it and I was just like, okay, just wait for it to pop up a little bit here. So like what I was looking for was a short off of the value area high level that I have of 60.42, where we've been ping-ponging between essentially for the entire overnight session. And it was essentially that 60.42 area is where we were holding above for a decent bit of the regular trading hour session yesterday, and then we we decisively broke through it and then created a lower distribution on the day between like 59.80 and 60 quarter or so. But so I was looking at 60.42 as a nice level to possibly get short with the resistance that we were seeing in the overnight as well. And at 8:00, I was looking at it at like 7:55 this morning. I was like, okay, if we can get a little bit of a pop back upwards, maybe to 60.35, 60.40, that would be a perfect, risk reward short, risk, 12 ticks to then look for a rotation into point of control to make, 30 ticks or so. Well, that already happened now. So by the time I looked back at it and I was super aggravated with myself, we were already at like 60.17 or something, and very aggravating. But it does kind of go into what my thoughts are right now for just generally speaking for the shorter term here in crude. Is like we've got this consolidation period between yesterday and the overnight. Currently we have the crude oil inventories coming out at 10:30 a.m. Eastern today, so that's going to be a part of the reason why I'm keeping an eye on crude today to possibly trade. But what I'm also looking for is possibly a rotation further down here at some point this morning to the value area low / previous day's low, where we have also been ping-ponging off of, as you can see, between the regular trading session and the overnight session so far. So that would be 59.75 or so. But furthermore, I mean, not to just continue to add layers to this, I have this 59.50 to 59.65 level marked off because of, you can see this like little kind of like hump top here that we had, and maybe on the 30-minute chart it'd be a little bit, yeah, there we go, cool. So yeah, I was looking for us to actually reach that and then possibly show support, but the thing is we got so close, we got within like literally 15 cents of it, and we've been supported so far. So what I'm looking for is to see if we can't find a lot more support at that level today and make more of a decisive, if I zoom in a little bit more here, if we can find some more support basically at 59.75 and really get back through to the upside of this value range, back up to 60.42, break through that and get above 60.77, then I'd feel more bullish. But if we can't find support at 59.75 or so, and we start breaking through the 50.50 level, I will be looking more bearish for a move down to the 58.40 to $58 level. So I'm essentially, what I'm saying is I'm kind of neutral on nat gas, and I'm looking for the break above or the break below, and I've got essentially zones
Oil,
for
on
either
oil.
one of those on WTI
Yeah.
crude oil, right?
Yeah.
So
Yeah, it's
so
a
yeah,
tricky one.
yeah, it is a tricky one for sure,
Mm.
and exactly, I completely agree. And the $58 to 58.50 level, I'm just have marked off because we consolidated a decent bit over a week or so span at different points in time there. So, so
Yeah.
yeah, and it was a nice support area as well that we found back to start off back on October 10th. So, yeah, that's
Yeah.
really that. But that's the thoughts for crude oil, and then if you have nothing else to add, James, we
Yeah,
can maybe. Yeah.
very quickly on crude. Just go to my charts.
Sure.
Just super quick. Yeah, so exactly. I think Paul. A couple of things here. See the skinny red line in the center of the chart. That's a market structure break. In other words, a support level. We broke down through it, and we're still below it, right? So that's bearish, but we're above the 100 and the 50 period moving average here on this 4-hour chart. And below the 20 and the 200. So we're sandwiched between two moving averages at the top, two at the bottom. It actually happens quite a lot on most markets. You'll see this very often, getting stuck between the two MAs. I don't like the spiky candles at the bottom here, holding support confluence. I think it's kind of bullish, but at the same time, it's bearish because my overall view is bearish and we're below the market structure break. So I would give it a rating of 50-50, as you have done as well, Paul. So
Right,
in other words,
right.
we have no clue what this is going to do next.
But it's fair.
Yeah.
It's fair though. It's a fair, neutral kind of opinion to have because it's just an odd one where we're sitting right now. I think it's a very good idea to be nimble and flexible with this product at the moment. So
Yeah, absolutely.
yeah.
All right, that's all I wanted to do. I just sort of confirming that your
Yeah.
slight
Perfect.
confusion isn't unwarranted, of course.
Of course. No. And then yeah, so aside from that, like we'll now let's go to natural gas because I'm very
Yeah.
interested to talk about it with you
Let's do
here.
that.
It was very
We can
interesting.
get your charts up.
Yeah.
Get Paul's charts up.
Let's get my charts up. And we'll be good to go.
Yeah. And back end, switch charts. There we go.
There we are. Perfect. Okay. So I know you got long at 377. I think that could be a really good long. And this might be me trying to be greedy here. But I want to know what your take is on this. And I know you haven't gotten in a full long position. You get in with like tranches of sorts. So you usually go in
Yeah.
at like a 10%, 20%, whatever, which I think is smart. But so what I'm interested in is the 350 to 360 level is what I have marked off here. If maybe we go to the 4-hour chart, this is actually a lot easier to look at.
Yeah, and that's also the high of the previous contract.
Exactly. So
Yeah.
exactly what I was going to say. You hit the nail on the head there. Is what I'm really, the level that I'm really interested in terms of possibly getting long is that level. That's kind of where I want to see natural gas test to then look and make the move upwards. But what I want isn't necessarily going to happen. But when you kind of zoom in a little bit more here, I do see, like we are essentially testing that swing low of sorts that we had on October 24th. And we're holding up decently well right now on the 4-hour candle. So I could see a reversal here, but also the only problem that I'm having with being more long bias is like we're trading below yesterday's like value area range and regular trading session hours low mark. So I naturally am feeling more bearish on the intraday, which is why I'm looking for more of a move downwards to maybe the $3.72 level, which is where we had gapped up on this December contract. We had the weekend gap that you were talking about for the December contract was about the low of that was 372. So I could see us also visiting that level and then maybe trying to bounce. But
Okay.
but
Yeah,
I'm
that's interesting.
yeah,
I
but
can't see that gap on my charts, Paulie.
yeah,
But
yeah.
obviously, I can see the gap on the previous contract, November contract, but I don't have it on the December contract.
Yeah,
So
yeah,
that's good. A good
exactly.
point is what I'm trying to say.
Yeah, yeah,
Something
no,
I
for
missed. Yeah.
sure. No, no, yeah. And I don't, but the thing is like these gaps don't necessarily need to be filled or anything either. So, I'm always very cautious of looking at any kind of gap plays or anything. I do mark them off, of course, as possible areas where we could come down to. And obviously, like I said, I'd feel more comfortable if we got down to like not even 350, like 360, just to get down to
Yeah.
360. I'd feel very comfortable with then looking for longs there. But yeah,
Yeah.
naturally, right now, intraday, I'm a little bit more short biased. I will say, if the way that would change is if we started catching a bid in this little consolidation area that you were talking about right here. If we can catch a bid and get back above 390, which would be roughly value area low of the previous regular trading hour session. If we can get above 390 and hold above there, I think that's very bullish. So
Yeah.
I know that's about 12 cents away or so. So that's a decent bit away. But for nat gas, sometimes that's not too far away.
Yeah. Yeah.
So
Yeah.
So
Yeah.
yeah, that's what
Um,
I wanted to say.
Yeah, just if we can go back to my chart, I've got a little interesting tool that you can do on natural gas. So I've got this little thing. It's called a bar replay tool. It's on TradingView on the left-hand side of your chart. You can see it over bars pattern. There it is, that little indicator. Let me just do it again for you while I'm here. This is really useful if you want to compare fractals, a previous move, a pattern that occurred sometime in the past. You can make the copy of it and sort of fit it to where we're currently trading. What I want to do is make a copy of this fractal, the current contract, and I'm going to stick it onto the end of the previous contract as if nothing happened, as if there was no rollover. All right, that takes us down. So in other words, instead of rolling over higher, we just move into the next contract. It's theoretical, it's not real. Look where we've come down to now. So basically, this is what's happening, right? It's just that we are slightly higher. We've come down to the 200 period moving average here on the 4-hour chart on the futures and back into the center of the original contract blob, more or less, but certainly at the 200 period moving average here on the 4-hour chart. If we go to the day chart, you might not be able to see these now. I suppose you can. There we are there. So this is the day chart. There's that little fractal. Notice that we're at the 100 and the 50 period moving average just below us here on the day chart. And once again, back into the center of this break. Now, just below us is that weekend gap over here that Paulie was talking about. And it starts at the 50 period moving average here, the top of the gap. And that's at 318. Is that correct? Yeah, 318. But obviously, that's in theory. So that's just a few cents below where we're trading at 322. 318 is 4 cents below where we're currently trading. So we can then go back to where we are actually trading and take us 4 cents down from the low here at 376. That would take us to 372, the bottom of my blob, and that would be the area that Paulie was talking about earlier. So there's another way to get to this number by using fractals and stuff like that. Slightly theoretical, but interesting nevertheless. And we end up at the same number. So 372 is the gap top on the previous contract, which you can't see on my charts. And it could be support too. If we don't hold where we're currently trading at the very key and interesting and super reliable 375 support level, we got in at 377.
Yeah. That's also, like the 375 level you're talking about is more of like an experience kind of thing. Like that's one of those things where you can't just get somebody like me who has been watching nat gas for not the longest amount of time. I wouldn't have been able to have told anybody that. So the fact that you've been watching nat gas for so long and you know about that level and can, tell me and everybody else, like that's Yeah, it's an interesting one. I have to keep that in my brain for sure.
Yeah, and markets have long memories, you know. I've been trading for 3 decades, and I still remember, like as if it was yesterday, trading, for example, the dollar Japanese yen at 115 yen to the US dollar. I remember trading particular trades that I took. So that number is etched into my mind, 115 on that particular currency pair. 375 is etched into my mind on natural gas. And it's not just me, it's everyone else who's been trading this nonsense for 30 years. They've got the same mental sort of lag and, you know, hang-ups that I've got. So these are not real numbers. These are just memories of, you know, vague, distant memories, but they seem to work. Here's 375 going back on the weekly chart, going, for example, back to 2022. It acted as support over there. I don't think this chart goes back long enough to have a look much more than that. But we could look at the Henry Hub, natural gas at the Henry Hub, to get a slightly longer view on this. And there we go. This is where natural gas has been trading over the last couple of few decades, really, 30, 40 years. And the 375 level is somewhere in there. Is it? Oh, no, it won't be here. Let's put it on because it's a different chart. I'm just going to draw the 375 level in. And over here, where is it? Right there. Okay, that black line, let's make it red and thick and have a look at this from an expanded point of view. So this is a weekly chart going back decades and decades. And just from a sort of very brief eyeball perspective, look how many times the price has reacted to 375, almost to the penny, there, all through this level, you know, all these events at 375 there, over there, and over here where we're currently trading. So super key level, and I think there's no reason for it. It's just there. It's just one of those things. And every time we get there, we do see a reaction. So, yeah. I don't know how we got into obsessing about 375, but that's what it is.
That was my fault. That was my fault. No, for sure. I was going to say, can I quickly, I just wanted to quickly look at the ES real quick, and then I was going to be done here.
Sure.
With my charts here. So the ES, you mentioned the ES and the Nasdaq to start the show, and all I wanted to say was, wow, what moves have we've seen? I mean, it is crazy. Nvidia right now is trading at 20. Right now, it's trading at 208. So we're almost up 10% from yesterday's low to right now. So crazy, big moves in names like Nvidia. And right now in the S&P 500. It's just super bullish. I mean, we're holding in the overnight, we're holding above VWAP at the moment. VWAP is showing as some support. Value area high from yesterday, which was 69.40, which is close to the top end of the day of 69.44 3/4. We are actually holding around that area of 69.40 right now in the overnight here. So all-time high in the overnight was made in the overnight at 69.49 quarter. So really what I'm looking for is I'm looking for this 69.40 level to either be supported for a long or to essentially break and show as resistance for a short back into possibly yesterday's point of control, which was 69.24, or even a full rotation down to value area low of 69.14 from yesterday before considering then a possible long play as well there. So, so those are my levels on the ES there. I just wanted to quickly go over that.
Yeah, no, good. Let's go back to my charts. The ES on my chart still got loads of space to go to my next blob. I do worry that we may have to pull back down to the breakout trend line. That's the first concern. Second concern, I do agree with you, Paul. I'm, bullish. I'm still long. I'm not changing my positions. My concern, though, however, is that we've reached first target on the Nasdaq, and that might have to come back. We also haven't retraced back to the breakout area, and the 20-period moving average, this green line, is all the way down at 25,000, and we're at 26 and some. So how far have we been away from the 20-period moving average in the past? Not often this far. So this is a really big move, a massive move, really. We are at, this is the Nasdaq. We're at resistance on the day chart, as you can see in my blob. I've hedged it, locked in the profit. That concerns me, as I said, that S&P, even though we might move higher, that's the Nasdaq. S&P hasn't reached its blob, even though we might move higher. we may have to retrace first, as the
Right.
Nasdaq has got overextended, and it might pull the S&P down. And that brings us into the last minute. Thank you for being here, everyone. Sean, hello, nice to see you, and everyone else that's been around. Thanks for your questions. I appreciate them. Have you got anything else, Paulie, before we finish off?
I think we're good. I think that was a really good, nice little wrap up that you had there. Good point about the moving average there. Really good point. We really could come back down to earth a little bit to revisit that.
Yeah.
So I do like that.
Yeah. Alrighty. Well,
Awesome.
have a great trading day. FOMC later. It's going to be a big one, folks. It's going to be super exciting. Stay tuned. We'll be covering it live throughout the day. Make sure you're still here with us. It's going to be good. Take care.
Take care.
Ciao. Au revoir.
All right. That was good. Good session. I'll talk. All right. I think I'm back. All right.
Another crazy overnight.
Yeah, and we are live. Awesome. Hello, everybody.
Do this.
We are
How is
back.
everyone out there today? Wednesday, October 29th, also known as FOMC Day, Part 2.
Yeah.
I just looked at the FOMC watch tool for just a curiosity, Paul, and I'm looking at it. It's like 99.9% today. So like, yeah,
Casually.
it's pretty much baked in.
Yeah, for sure. For sure. I think it's going to be an interesting day. I'm interested to see if, some of these FOMC days we'll see a little bit lighter trading, the couple 2 or 3 hours before, and
Yeah.
then, because everybody's just waiting essentially, and nobody wants
They're
to make,
waiting.
but yeah, so I'm curious to see if we have that kind of situation where it's a little bit calmer throughout the day until the FOMC, or maybe we can get a little bit of a retracement here today, to
Right.
then have the FOMC either dump us or make us go
Yep.
back to new all-time highs. So
Yeah, exactly.
yeah.
I mean, and it wouldn't be surprising. We've had this huge run up all week. Every regular trading session, every overnight, we just seem to be just squeezing higher. These markets are ripping. It's just, and it's pretty much good news for the most part. I mean, we have this potential meeting with Xi and Trump tomorrow. We had, Trump's been doing a lot. He was in Malaysia, then he went to Japan, then he went to South Korea, and then he now says, I saw this last night, and I wouldn't put it against him because he did it before. He may try to swing a little kind of meet and greet with Kim Jong-un here while he's in the region and switch, kind of fly over to the DMZ or meet him again and just to say hello, I guess, and shake his hand, what have you. So there's a lot of stuff going on in the region, obviously. We're still waiting on U.S. government shutdown to be abated or rectified here. It's just kind of a standoff of sorts.
So much going on. There's just so many
There
things.
is a lot.
There's just so many things
There is a
happening.
lot. There's a lot for sure.
It's to be able to for everyone to wrap their head around all this stuff, I feel like is almost next to impossible in terms of the amount of variables you got to consider and how it can affect the markets, which is why I think you just got to take things one day at a time at this point, or you should have probably been doing it for a long while at this point, just taking it one day at a time to not make yourself go crazy.
Exactly.
But yeah, so I'm wondering why we're not getting like any real headlines coming out about the government shutdown stuff. I'm not seeing much about it, and I'm curious as to why. I remember yesterday there was one headline about it, but I haven't seen anything since, so I gotta look into that.
Yeah, I think they're kind of both sides are getting to a point here, but I mean, it's really this. I saw something on the news last night. I was listening to some people talk about it. They're right. I mean, this is not a policy shutdown. This is more of a political shutdown. So again, I think I mentioned it yesterday. This is more of the Democrats kind of just holding their ground to Trump. The Republicans have attempted 13 times now to pass the stopgap bill. They keep amending it, keep giving into more concessions. So all of these Republican senators keep voting for it to open the government, and the Democrats keep voting no. No, not at all. Not going to do it. We don't want it. And so it's a total, it is very political at this point. They just are, it's bad because they're holding the federal worker hostage to their ideology, really, is what it is. So, but something's going to have to happen. Something's going to have to happen. We're on day 29. Something will happen because at some point the Americans are going to get tired of it and they'll have to cave in. But
I was gonna say I see that we're technically, you mentioned this yesterday, October 1st was the start of this, so we are technically on day 29 of the shutdown, entering the 5th week. Wow, that's crazy that we're literally in the 5th week of all this. Tuesday. I mentioned this headline yesterday. The 25 states of the District of, and the District of Columbia filed a suit against Trump for the SNAP benefits situation.
Right, exactly.
And then aside from that, they're finding a way, or they found a way to pay members of the military Friday, but
correct.
And then that was really it in terms of the pay situation and whatnot. But yeah, we're gonna have to just keep an eye on that every day or so, see if there's any new updates or anything regarding that. And then I don't think there's any headlines really this morning in terms of earnings. We do have is it Google that has earnings today? Yeah, I think Google has earnings.
Google's got earnings after the close. It could be big, should be big. We've had some crazy earnings already going into the session here. Boeing came out, smashed earnings, and Boeing has been, not known to be doing that in recent years here. They've been fairly troubled, but Boeing's looking great. Verizon came out with amazing earnings. Caterpillar came out with amazing earnings. So the Dow, everything should be moving along here. Happy, just happy days are here again. Crazy. There's so much going on. And the amount of earnings that are being released before the open here and after the close today is mind-boggling.
It is. It's a lot.
It's like 150 stocks, maybe 200 stocks. It's crazy.
Yeah, we got, Meta, Google, and Microsoft alone. That's
like the major players. Exactly.
Just insane.
Yeah,
so,
it is.
If assuming those bigger players are going to have a large effect, if we see, all of them to one, maybe to the upside or all of them to the downside, you could see a relatively larger move in one of those directions in these indices today. Meta's casually coming up on being a $2 billion market cap. Google's at 3.325 billion market cap, and Microsoft is hovering right around the 4 billion market cap. So these companies are massive. And yeah, what else here? I said billion, I meant trillion. Apologies. Trillion,
Yeah, I know what you meant.
4 trillion, 3.325 trillion, 1.9 trillion, like the trillion numbers. Like we're talking some massive numbers here. So so yeah, I'm very, very excited for this afternoon for sure. I didn't realize Caterpillar was had their earnings this morning. So that's interesting that they were able to crush it today. So that's good. It's a good thing to see.
What was it? It was, I mean, dude, their number was ridiculous.
I think that's a good thing.
It's a very good thing, actually. It's a, U.S. machinery company. It bodes well for things. It's a Dow component. It's just, yeah. All things good. I like to see that.
Give me one.
And yeah, I mean, I don't know how you feel. I know you and James kind of went over a lot of the stuff the previous session here. And I know, Paul, you kind of touched on, despite, at least the indices rocking and rolling, ES making continued new time highs again in the overnight here, what your sentiment is on the day. And I think we just have to kind of wait. Like you said, we could have an open like we did yesterday. We could have, kind of a consolidation of sorts for a while, wait till we get closer to the 2 o'clock Eastern for the interest rate decision. And then, of course, Jerome Powell speaking after that. But we kind of made a double top on the overnight on the ES. And, I don't know what a double top means at all-time highs because I haven't really tracked it. And I'm not necessarily known to just always say, oh, double tops, double bottoms, this means this or that. Especially when we came back down to VWAP essentially on the overnight session, and we bounced off of it, and we're kind of hanging out at the top end. We're basically hanging out at yesterday's range high of day on the session. So 69.43. I mean, boy.
Yeah. And I did mention it right before we got off the pre-market session here at right before 9 a.m. Eastern. But my value area high, my level for value area high is 69.40 from yesterday, and we are hovering right above that. I mean, we've kind of been traversing above and below it in the overnight since 3 a.m. or so Eastern. But the fact that we're kind of finding in the overnight a little bit of comfort around this higher level makes me a little bit curious as to when we open, in 17 minutes or so here, is the immediate push going to be to the upside to try and retest the all-time high? Are we going to try and stick around this 5 to 7 point range that we're currently around right now? Or are we going to try to break below 69.40, show some resistance to then maybe revert back to point of control from yesterday of around 69.24? I honestly, my what I want to see, which is not necessarily going to happen. What I would like to see is the break of 69.40 to the downside, show some resistance there, and then be able to get back to point of control from yesterday to then see if we could go long. So I'd be looking for shorts to be able to rotate back downwards into yesterday's point of control. But it might not happen, and that's fine. And I'll look for longs if that's the case. If that's not the case, I should say, we'll look for longs up here for a momentum move to the upside. But that's kind of what I'm really dialed in on this morning, I think, with the ES for myself. Really want to look for that opportunity.
Yeah, we are the point of control for the ES for the most, well, not all day, because points of controls do move around as as volume moves around, a price discovery occurs during a session. But near the end of the day, by and large, it was kind of hanging out here like around 69.13, 69.14 in the ES. And I know, Paul, that I track volume and closing on the RTH session through settlement. So I go all the way to 5 p.m. Eastern. In doing that yesterday, when we got off the air at 4 p.m., I continued to track it for another hour, and point of control did shift up, kind of like to the 69.27. So that's where I have yesterday's RTH point of control. Getting down there won't be a stretch. And we traded, when we opened up in the Asian session yesterday afternoon, we did come down and bounce off of that point of control for a bit. We were there for, my God, we were there for like the first three and a half hours, and we finally broke out of it to the north side, to the upside. So coming back down and maybe retesting that point of control, like you said, is probably something I'm very interested to see. And then will it hold up, right? Will that resistance or support, if you will, kind of just hold up there? And if it doesn't, we could certainly come back down. I mean, there's lots of fuel everywhere here. This thing could do anything. So,
yeah.
I think, again, when we open, I'll be a little patient and just wait. We say that almost daily, but you never know.
Well, yeah, it's especially important. I think, there are certain, to be clear, like when we're getting into the cash open, and I'm talking to chat here. To be clear, when I'm usually looking at the cash open, and wherever we are at is right before cash open, wherever we're essentially going to be having that opening tick at, depending on where that is in relation to the value range area from the previous day, is telling me personally whether to be a little bit more patient or aggressive early on in the first like 30 minutes to an hour. If we are opening within the value range, I'm likely, it depends on where within the value range. If you're closer to the value area high, or if you're closer to the value area low, there might be, you might need to be a little bit patient, but see how you react around those levels to then make a decision on whether you need to get in long or short or what have you, determine your bias. But if you're like, opening within value range and right around point of control, I'd probably be more, I'm going to be more patient than normal. I'm going to be waiting for a longer period of time to see where price can get to, what level it can get to that I'm interested in, to then be looking to make a decision on the day as far as what my bias is. So, and then the other situation is when you're opening outside of value range. So when you're opening outside of value range, usually it provides a little bit more of an environment for possible aggression to be had sooner in the session for me. So like right now we're opening above value area high, or we would currently be opening above value area high if we were to open right now.
Correct.
So this could spell a little bit more bullishness at the open.
Correct. Right.
And look for possible support at 69.40 here. We're at 69.45 essentially, but you could see an opportunity earlier is my point. Not necessarily that's going to happen, but you just have to be like more ready to go a little bit quicker in the beginning of the session. So that's just kind of the way that I approach the days, the regular trading hour session, essentially going into it.
Yeah, I do the same thing you do. Basically, I read it the same way. And I agree. If it's opening near the high of the range, or we're real close to breaking out to the upside or downside, then that obviously leans my bias one way or the other. But we also we have to be mindful of the overall context of what we're doing here. We're at all-time highs again. We're also at an FOMC decision rate day. We've got all this stuff that we just talked about for the last 20 minutes, right? With China and tariffs potentially tomorrow, maybe more easing or maybe even a potential deal. We have, we have pending home sales in the U.S. coming out in a half hour. Well, about 40 minutes here. That's also going to be something to take a look at. Those numbers, the home builders seem to be improving. Seems to be more building going on in certain parts of the country, more permits being issued, etc. So that'll be interesting to take a look at and see what that prints out at. But by and large, yes, today's all about the Fed coming out with not real hard data. What are they going to do? Are they just going to go ahead and just move the needle, move the goalpost, despite waiting on Fed numbers that they haven't had in almost a month?
Right.
I think they will. I think they will, but it's not so much whether we get a 25 basis rate cut versus what is Jerome going to say at the conference. What he's going to say is going to be even more vital, because people are going to be on every damn, not even word, man, every freaking syllable. They're going to be on him and his tone and how he, you know what I mean? Is he dovish? Is he hawkish? What can we glean out of this? Because at some point, the data will come back in to the fray. We'll have adjusted numbers. We'll have all of that. And that's another story, because things may look, right now, let's just assume that he says, and that the Fed's been looking at all their, all the governors and all of the different 6 regions around the country. They're looking at all of their data. They're talking to all of their constituents, their major corporations, their small businesses, everything, trying to get an idea of what's going on with imports, manufacturing, exports, labor, etc. So they'll have an idea, they think. And then can you imagine if we get the government shutdown finally done, a few weeks later, Paul, all this stuff comes out, they start sending out, just slowly dripping out adjustments here and there without warning, and it's like a mic drop, oh my God, that could roil the markets a lot if it's not a good thing, or it's not in line with what the Fed was expecting. There's so much stuff down the pipe here that towards the end of the year and even next year with tariffs continuing into 2026. There's
always so much,
man.
There really is. Feels like it's just never ending with the amounts.
Agreed.
That there is to take in here. Well, we have 8 minutes here. We have 8 minutes until open. Coach Sam will be joining us shortly. He's just running a little late. He's got some other stuff he's taking care of. So Sam will be here to grace us with his presence.
Good morning, Eric Lake, by the way. Good to see you guys in the chat. We got all our favorites here.
Yeah.
Robert's here. Mark Turing's here. Oh yeah. I don't know why YouTube's still doing the old names. Interesting. Robbie Malandruco. Well, that's a new name.
Yeah.
Nice to see you, man.
He joins the pre-market.
I see that
actually.
Yeah. Oh, he does. Okay. I see him up there earlier. Cool.
Yeah.
Cool.
Yeah, definitely.
Nice. Yeah. So again, we will see what we do here. But you look back at this overnight and yesterday's overnight. It's just,
yeah. Oh yeah.
Just hanging, coming up heavy. All these little lines here, all-time highs, all week long in the ES. All new all-time highs. Everything to the upside here has never been traded. What we call various things. We call it outer space. We call it the wild, wild west. We call it no man's land. Put whatever little phrase you want in there. But It just means that we don't have anything to go against. We have no data, no previous history, no volume, etc. But like I was saying, and I know we had Paul's chart up here for a bit, but we had this double top of sorts. Came back down here. This little thin line is volume weighted average price on the overnight, and this is going to continue here through the U.S. session. It anchors to the full session here on Project X. No, it doesn't. Does it? Oh yeah, it does. It does. I'm looking at it yesterday. It does, and the point of control does too. So, but anyway, we'll wait and see how this what happens here, what our reaction is when we open up. But boy, gosh, I mean,
yeah.
Everything points to the north here, guys. But just be careful if you're going to front run. Try not to just jump in and say, "Oh, I think we're going long. I'm just going to enter at any, any price," because we do have rotational movement in these, and we do have, there's all sorts of stuff that's going to go on. There's going to be a lot of algos in the market, as there always is. There's always sweeps and stop picks. So you've got to be careful. And if you're trading a prop account, you've got to be more careful with consistency and not blowing accounts. So just don't get in and just let it do what it wants to do. Just got to trade like every other day. Trade your rules, trade your risk.
Yeah, definitely. Just need to have a couple levels in mind and wait for those levels to come into fruition. And when they do, just really keep that keen eye on the charts and make sure that if there is a trade to be made, a sound trade to be made around those levels, then put the trade on. And I was going to say we can share my screen real quick here. I was mentioning it in the pre-markets. I'm very interested in gold today too. So
yeah.
I think there's going to be some volatility in gold, especially after 2 p.m. Eastern. So right around the end of the regular trading hours for gold. It'll be actually right after the regular trading hours for gold. I'm expecting more than usual volume after the open outcry hours there.
Yep.
So right now, though, we are hanging around this 40-20 to 40-40 area of possible resistance. And, going into the next, let's say, 30 minutes to an hour or so, I'm very interested to see if we are able to break out above or break out below or break down below here. Breaking down below, I think, would be better for the sake of my own trading levels and whatnot that I have in mind. But if we do break out above 40-44 or so, would look for a breakout retest of that area as support to then get long around 40-44 to continue to the upside. But
yes,
very interesting.
Yes, continue to get back after that little well, it wasn't a little dump. It was quite a bit of a dump.
Oh yeah,
in gold.
Yeah, you look at the daily chart.
Mm-hmm.
Lots of. Let me get rid of some of these here. Look at that. Look at that sucker. Just a casual $400. Actually, even more than that, $500 dump. And now we're back above 4,000. So markets do like these large round numbers for sure. I do enjoy trading around them for a little bit at least, but yeah, okay. So we have 1
2 minutes,
40 seconds left.
Yeah, less than that. Yeah.
I am going to also actually, I will be paying attention to cattle as well. A lot of interesting cattle news that's come out over the last few days. And James kind of tipped me off to it yesterday regarding Argentina, and there's a couple other articles that I read last night, but a lot of stuff going on with beef imports and whatnot. And you've mentioned it a long while ago, like Coach Chris was talking about, like the screwworm situation that's in Mexico, and which is why they were blocking imports from Mexico for cattle and whatnot to try and mitigate that issue. And so there's supply is constrained relatively speaking, but then Trump was looking to quadruple imports from Argentina, which then had a massive down move effect on cattle recently over the last week. funny thing is, though, the article that I was reading about it is even though they would, if we quadrupled imports from Argentina, I think it's like 20,000 or however many metric tons that would be, it would account for like only 1%. It would take care of like 1% of the deficit that we actually need to replenish in terms of like restoring beef back to normal. like it doesn't have too much of a fundamental effect on the supply. But regardless, the headlines are creating a lot of stir to the downside. So okay, that's the open. That is the open here.
Little responsive selling. No biggie. No biggie. I say that, but we'll see where we get down to. All right, so we'll see. Do we want to come down and retest the point of control from yesterday? Nice little 5-point pullback. A lot of energy in the market.
Decent bit.
Mm-hmm.
All right.
I like what Tom was saying earlier. He says, I say we just front run, revenge trade, and roll the dice, baby. Do not do that, he says. Of course not.
Oh, gosh.
I know, man. I'm with you. We just got to be cool today, everyone. Just got to relax.
Yeah.
Be patient. There's a lot going on.
Definitely.
There's a lot going on. All right.
Yeah, I've got a little bit of latency here from the data, or the data's a little bit. I got a little bit of latency on the data. I think there's
probably a lot of volume.
Oh yeah, for sure.
Point of control moving down because we're coming down a little bit. 69.38. Okay.
Come on. Show me.
Didn't really get any kind of open swing high at all. We just kind of opened and had responsive selling right off the bat. We're coming up right now. Maybe we'll retest this open. We're going to get up there in the ES, 69.41, 69.42. Yeah, there we go. Retested the open. One ticked it.
NVIDIA's up to 210 a share, essentially. I mean, this name won't stop. It's just not going to stop. Wow, man.
Dude.
Wow. Okay. All right,
so we're holding here. Right below, we got a bunch of volume up at the 69.48, 69.49 in the ES, which is natural because that's the all-time high, just shy of 69.50. That's where we kind of attempted to come to twice in the overnight. So, third time's a charm here, I think, and it may retest again.
Yeah,
we're only like 6-7 points away from it.
Yeah, I'm at this point we immediately broke back into yesterday's value and then broke right back out of it. So I'm just like I'm feeling like the longs are going to be coming in shortly for me. The only problem is being between the previous day's high of 69.45 and value area high of 69.40. I hate being between that rock and a hard place kind of situation, but yeah, and there was some decent resistance there at 69.45 in the 30 minutes prior. Yes. So it's kind of again,
now the sellers are coming in. See how the sellers just holding the lid down.
This is the patient situation.
You got to be patient. Yeah. And we talk about this all the time too, right, Paul? Even if we think and we have conviction that something's going to happen, you just got to wait for the right timing, because we could be right, but you get in at the wrong time, or you get in too early and you get beat up, and then eventually it goes in your favor and you're like, the market it did this on purpose. I'm a victim. It knew this. No, it doesn't know this. It's just the way it goes. You just have to be patient, and discipline is really the secret of trading in all of this. It really is. The experience, discipline comes with the experience. Comes with seeing a lot of markets, trading a long time, just repetition.
Yeah.
So we'll see if we break high out of here, go up to the 50-ish area. We do have some sellers sitting in at 69.55 again, area outside of where we've ever traded. But yeah, we'll see. So we have, where do we open up? We open up 6:30. We have not traded since we opened. We haven't gotten to the high of yesterday's regular session yet. We're close. We're like 2 ticks away. We've been ever so close. So obviously we got to get through that point to get up to 69.50, but we're holding here. Sellers are going to just keeping things tight.
All right. I didn't heed my own words. I needed to. I literally saw a little bit of a shelf forming, and I felt like I needed to get long for a possible quick little breakout because I saw Nvidia is like screaming to the upside. We're at 211 right now in Nvidia.
Yeah.
And I was thinking, okay, the confluence with Nvidia just screaming to the upside, and the indices.
What, Nasdaq?
I'm just saying, generally speaking, like, the tech sectors or the tech sector going up because of Nvidia doing so well, there could be some confluence there. So I got long the S&P.
Oh, you did? Okay.
Yeah, so we'll see.
Man, look at this. So I hear you. Hear you. You wanted to break. I know. It's holding 1 tick from getting past yesterday's high of session. Come on. Can it do it now? Like it just
1 tick.
It's inevitable. There we go. Now we're through it. Okay. And we're off to the races, are we? Let's get up to 69.50. Let's watch Paul here get a nice little trade on. That's good. It's good. I mean, we did this yesterday a bunch, you and I. And I don't like doing it typically because I'm not really a breakdown trader.
Yeah.
But in this kind of, in these markets, this is where it's going. And when you see it, and like you said, you've got further conviction with a stock like Nvidia,
Yeah, and who knows?
Take the trade.
We could
just go.
This was just something where like I saw a possible opportunity here, like with some confluence with a couple other names, and I was like, you know what? I do want to play this. It's small risk. I mean, I'm risking literally like 2 points on the ES here to make 4 or 5.
Yep.
So
or more, maybe it can go higher.
Yeah, of course.
You can end up trailing it, and it could be a big winner. But like you said, keep your wrist tight. If it comes back down, it's not a bad trade, honestly.
Yeah. So we'll keep the risk small here, and like I might get stopped out. Actually, I could get stopped out right here. We basically got to a 1-to-1 there on that high of the wick of the day. Got to a 1-to-1. And then it's now consolidating again. So there's a lot of consolidation, and the session view up that I have from 9 a.m. Eastern specifically is currently at 69.42, which is right around where my stop is, like 2 ticks below that. So we are holding up nicely above 69.42 though. Tested it a few times. But yeah,
and I track. I know you track it from a half hour prior to the open, but just from the open, VWAP's right there with you. It's 69.41.40 essentially. I mean, it's working its way. You're right there.
That's not as good.
Yeah, Tom, I vote for Tom Rogers to come in and take Sam's spot. He can fill in nicely with all the British. The British slang and faffing around and all this stuff that Sam loves to do. I think Tom would be a perfect substitute. All right, your trade's still. Oh yeah, your trade's still alive. Let's see if we can get up there.
Yeah,
back. We're back to the outer edge.
All right, come on, let's go. I need to the
CVD's building high though. The delta's strong here in the ES. I'm sure it's really strong in the Nasdaq. Let me check the Nasdaq real quick. Nasdaq from the open. Yeah, it's 1100 to the upside. Wow. Right.
Okay, some decent sellers came in there. The position
Nasdaq's really coming off. Yeah,
the position board is showing me as short. It's not short, everybody. Just letting you know quickly. It's long. So I am long. Just a little hiccup there, but we'll get that fixed. But all right, this is where I would expect support if there was going to be support right here. So if not, yep, just got ticked out. Okay, cool. I was actually very happy to take that.
If I get VWAP though.
Wow. Yeah, I know. That's the problem is your VWAP. I was starting to get a little bit interested in whether I should move my stop down a couple ticks because of the VWAP you were speaking of.
It's okay. I know. It's okay. It's okay.
But
you know what, though? I mean, because that's what I would have done because because I usually give a bigger spread on the stop. But honestly, if I moved it down, it probably would have came back and stopped me further, and I would have had more damage. So sometimes if it's not going, because you were really playing the breakout.
Oh, yeah.
So you were like, if it's not going to get to 69.50 or close to it or break through that liquidity there, then essentially your trade's invalidated, and it was struggling. So, it could do this. It could just sit here in this consolidation and be like this for a long time, for the next half hour, an hour, who knows? So if it doesn't go and break out, you may just say, okay, I'm going to flatten myself out because I gave it enough time to do what it was going to do. It didn't do it. So it's not bad that you got taken out. You know what I'm saying?
Yeah. Of course. So. But if it does go in the position, in the favor of the longs, I will be annoyed.
Yeah, but you can always jump back in.
Yeah,
you can jump on the horse.
Of course.
We're going to have Sam come in here shortly. So Tom Rogers, sorry, I know you wanted to take over for Sam's spot today. Both Paul and I voted for it.
I can't
And Sam got kicked out, but he had the British lingo down. He was ready to go, Sam. He was rocking. He was faffing about.
Faffing. Wow.
Uh-oh.
Look at this range. That's just this 7-minute range that's occurring right now is
I know.
annoying. Buyers cannot get above. I feel like it's just a matter of time. It feels like a matter of time, but who knows?
Well, and don't forget, we have in about 15 minutes, we do have pending sales U.S. Print. So that's something to just kind of maybe wait around for. And he's back.
I'm back.
Sam is officially here.
I am here.
What is happening?
How's the
How was
open?
the pizza delivery?
That chance. It was great.
So
yeah,
Open,
really, really good.
It's been a little bit.
Open's kind of meh. I mean, we're hanging up here to the upside.
Get my charts up.
Yeah, but we haven't had a lot of range extension. It looks bullish as hell. I mean, what else can I say?
Yeah. I mean, it's been like that for ages now, hasn't it?
I know exactly.
All these dip buyers.
That's what Paul and I just spent the last 45 minutes talking about. It's just another day, same story, man. It's like
another
crazy.
day, another dollar.
Another day, more bulls.
Yeah. Yeah.
Robert. Good morning, Robert. It's good to see you as always.
Robert's here. Yes, of course.
Good morning, Robert. Roberto.
All right, so I can move that off. Let's see here. So, the question is, will we get up there? And I think we will. Oh yeah.
Wow.
Now we're making our move up. I think here
Now
in the ES.
it's happening. Yep.
Yeah, that's okay.
Yeah. Yep. No big deal there. I'm gonna look at
I still as much as I know where it's going, I don't want to jump in. I don't know if that sounds weird. I just don't. I think I want to wait. I want to wait for pending home sales.
Yeah.
Ooh. Looking at the footprint now, I see shorts. If we get a bit higher, I can see a very nice short. There's so many trap buyers here.
There's a lot, and exactly
Huge volume.
And there's a lot sitting up there.
You know what?
I mean, the
I'm going in
Nasdaq,
short.
the Nasdaq's moving around this morning pretty good.
It's a little test. I'm gonna dip my toe in.
Like you've got all those sellers
be
up
bad.
there at 26,290, right? 289, 290. So that you can fill that, Sam, and that could be trap sellers.
Yeah.
Or buyers.
I want to see if these buyers. I've yet to even draw out my levels on the chart, which is probably a silly thing. I've just entered a trade for no real conviction. I was like, might as well just do it. Why not?
Paul and I brought Sam in to do all the things that we said not to do, guys, about 45 minutes ago.
Oh yeah, no, this was actually probably not the smartest move of jumping in for a sell right there. There's a gap right there. All right, so this is why you should do your charts before you jump in. But I think we might actually retest this gap if we can get down. See those sellers come in a bit.
That 48.50 was my take profit. Son of a gun. that tick.
Oh, was it? Oh, wow.
That was my take profit if I had still been in the trade.
Man.
Dang, man.
Yeah.
Just wrong timing. Just got in a few minutes too early.
Which
so
we
right
also
here,
talked about.
Loads of trap buyers. So, all right, we'll see what happens. I'll let it play
more
out.
volume
There's a lot of
coming in.
buyers coming in.
More
Huge
liquidity,
amount of buyers
yes.
just came in here. Let's see if they
Yes.
push up the market. There are some trap sellers though here. Oh, this is actually not looking great. This is a bit of a range bound type play here. By the looks of it.
I gotta get rid of this.
But I would want to see. Oh, I've entered on the T to point of control. My entry is literally point of control. It's just one red line. That's point of control.
Yeah.
Yeah.
Couldn't have timed that better. But let's see what happens here, because this is where all those buyers are trapped. Are they going to get out? Oh, it looks like they might be releasing some of those buyers. 160, got some absorption. 120, 150, 170, 140, 120, 110. There's definitely absorption happening in that wick there, which is pretty good. Let's see how that plays out.
ES is holding pretty strong. It's a lot of resistance here from the sellers.
Those buyers are refilling.
I think
all big sellers came in right now. I'm jumping in another contract. All right, then I can put my stop just above here.
ES is high.
Stop,
Paul is 48.50 to the tick.
I know, dude.
Still, it has
fuming is putting it lightly.
But it hasn't gotten past it still.
I know.
It's just
all right now.
Oh my lord!
See these sellers come in again. Had a lot of sellers absorb all that buy pressure at the top here very quickly. Flip the market round. I want to see now a strong push down. Got huge sellers coming in, 230 contracts. Let's see if they're successful. Otherwise, I've got to flatten because this is
point of control's moved up in the ES. Point of control's moving up here now.
400. Oh my god, this is huge volume coming in from sellers. Let's see if they get absorbed. We've got 400 contracts, 600. Oh, bejeebers. What's going on? Huge sellers coming in. Here we go. Come on, break through. Why are the sellers struggling to break through? There we go. There we go. Come on. You can break through this area. This is where all those sellers were trapped. Let's see what happens. Big buyers absorbing those sellers a bit. Oh, it's getting a bit choppy. I don't like it. Nah, I'm going to get out. There's too many buyers absorbing. It was an all right trade, but a bit of a silly entry at first. Second position was much better when those sellers came in. I really should have waited. But yeah, we're in a range-bound market. That's what I'm seeing. Now those sellers are trapped at the bottom. We're very range-bound until something else
sellers
happens.
to the upside. A lot of sellers at this, 69.47 to 69.49.50 in the ES.
Have we got the exact same P&L, Paul? 164.40. We do. What's going on?
No, we don't. What are you talking about?
The back end. My screen thing on your one. I was like, look.
I'm in the red 115 right now. I wish. I mean, if things.
If you want that P&L, we can make it happen, Sam.
Yeah, we can switch that around. I have no problem doing that. I literally. The worst part is like this is so funny. I got ticked out. Like I got stopped at the tick out of my position, and then my target profit was to the tick. How many times does that happen where you get ticked out and then like your target profit would have been literally the tick? Man. Like that's just
that's
what a weird one. Goodness gracious, man.
You can't make it up. That's the market.
I got one ticked yesterday at the end. Remember, it almost came to my take profit, and then it just dumped on me at the end. Like what a what a freaking cliff dive. I was like, really? I was like, you couldn't just
what
do
a
it.
Cliff Richard.
That's
right.
Taking the Michael.
Why does it seem slow
So much
today?
for my diet. I'm eating like these. These are addictive, man. There's like these German chocolate biscuit things called Lebkuchen. Oh, I'm like eating a whole bag of them.
No,
so I do apologize.
Hey. Halloween comes early.
Yeah, exactly.
It's Christmas. It's fine.
Did you dress up for Halloween at your party last weekend, Paul? Did you?
Yeah.
Here you go.
Oh my!
You and your wife dress up? Like you guys dress up as like a couple or whatever?
No, we actually did separate things. Funny enough, but it was good. I was the Squid Games. Like I dressed in like the pink jumpsuit thing and stuff. For Squid Games. So
that's cool. That's
easy costume.
Did you wear the mask the whole night, or did you just?
No, not the whole night. I just put it on my head.
Yeah.
They're coming out with a spin-off show of the Squid Games.
Yeah.
It's called the Calamari Games.
Yeah, I knew this was coming. I knew it. I knew it. Trump was in Seoul yesterday, so I think he signed over some rights with his former NBC producers of what was it called? God dang, now I can't even think of the show that it was on. Oh God, why am I blanking? And I love that show. What was it called that he did?
Well, what show? Jesus. Sorry.
Oh, The Apprentice.
That Trump. Apprentice. Thank you, The Apprentice.
Yeah.
Yes. Yeah. So he did one called. He just got the rights to the Calamari Games. Like. So we have Squid Games. We have the Hunger Games. So if you're hungry, you want squid, or you want calamari.
Of course. Calamari Games.
Yeah, funny. Actually, if he's in Korea, they call it the Ojingo Games. Ojingo means octopus and squid. Well, actually, they're two different words. But,
nice. Yeah. The fact that you even know that, I would never know that.
I only know that
he's got
I have
Korean wife.
Korean food in my house.
Exactly.
Yeah, I got food everywhere.
Exactly.
All right, let's see here. Can we get above the 50? I think we can.
I think buyers might be trapped right now. I think buyers have just trapped themselves. I'm going in short.
All those sellers went bye-bye.
At least take out the bottom of this candle. I have a stop. Just my stop is bigger than my take profit, which is not good. So I'm gonna have.
What is up, Tiger Berry? Good morning.
See those buyers trapped.
Tiger.
I see you, baby. Trapping those buyers.
I
think we're going down, actually.
Baby.
Yeah.
Trapping those buyers.
Probably move this. Come on, sellers. Let's see. Let's squeeze those buyers who just entered their position. Squeeze them out the market. Are you going to do it, or are you going to disappoint me?
Will we get a sweep? Will we get a stop pick?
Are you going to disappoint me? They are trying to disappoint me.
We are almost to the retest of the all-time high made hours ago in the ES. Not quite.
All right, finger on
One
flat
tick
line.
away. One tick away.
Yeah, they're not allowing those buyers out, which is a good sign. That wick there was very nice because that's where all the buyers are, right here. Let's see if the buyers are trying to fight
I expect a little rip here to 55, honestly. At least close to 55 if we get above here. Just do a little.
Come on.
Do a little sweep to the upside, and maybe we'll come back down at a point of control.
Come on. Where are these sellers? Take control. Oh, those buyers keep coming in. They keep trying to push that market up. Oh, okay, we're in the buy territory. Let's see. The buyers still haven't been squeezed out. That's the problem. We need to squeeze them out the market. Come on, they're potentially trapped. Take advantage of them. That's what we should be doing. Taking advantage of buyers. Oh, you're going to stop me out, aren't you? Oh, one tick. Oh, and I'm out.
Yeah. It's yeah, dude.
450 contracts. I think this could be the real move, actually. Wait a second. What is going on here? Why was there 470 buyers coming in? 600 buyers. Oh, okay, there's huge buyers at the top here. 700. If they don't push this market down, up, I'm going in short again. Those buyers have got to be trapped by now. Surely. Or am I just running in front of a train here? Surely those buyers are trapped. 800. We're at 800, approaching 900. Surely.
What's our share
That's a
price in
lot of
NVIDIA,
volume.
Paul?
210.30 right now. 210.30.
And with that, folks, NVIDIA became the first
1,000
company to hit a $5 trillion market cap.
Wow.
Jeez.
Wow.
Just
$5
set this open.
trillion.
Yep.
Oh, stopped out. Oh no, these buyers are.
Isn't that
no,
crazy?
They're serious.
I mean, it
never
wasn't
got
very
trapped.
long ago when he hit 4 trillion. It was only like what 3 months ago, something like that.
Wasn't long.
Like.
Yeah.
No. Crazy.
Oh man.
Crazy how much.
I know, it's just ridiculous. All right, so we've got
I am long cattle, by the way.
9, 10.
Oh, good.
1,100 buy contracts are here in this area. I think those buyers mean business. I don't think they're trapped. Yeah. They're probably celebrating.
Oh yeah, come on.
It was worth a punt. It was worth a stab at it.
All right, we got above the 50 in the ES here. We're at 51.5 and climbing. Where do we get to? We got to 50. 51.
Nah, the volume coming in is filth, man. We've had over 2,000.
Well, yeah, I figured it was going to be like this on an FOMC day. It'll be like this for a few hours, I think, until we get further into the session. Usually it's like this, right? It's usually pretty slow going until we get the actual print or decision. Are you doing news, Sam?
Oh shit!
All right.
Yeah.
Here we are. All right, made back that loss on the day and a little bit more.
On the cattle.
Little,
there you go.
Close to $300 trade on the challenge account. I'll take it. Sweet.
All right.
Out.
Let's see. Okay, so we have now stretched the all-time high to 51.75 and probably further up. It just looks like it's a slow melt up. Doesn't look like it wants to even. I mean, if it does pull back, we may just continue to come back to point of control or VWAP and just kind of do it. We've had so many days like this. Just, market on open numbers were pretty weak. They weren't great. But I mean, compared to yesterday, we had so much in the market.
Oh, those sellers are potentially trapping those buyers. Let's see, all of those buyers going to defend They look like they might be defending. I'm going in for a long quickly.
Okay.
I just don't know where to target. All those buyers in that area there defended.
Geez, Nvidia's now at 211.75 right now. It just went up $1.50 essentially since I talked to you.
Yeah. It'll be a $6 trillion market cap before the day's over.
That would be insane, dude.
Could you?
I remember people were talking about
Jensen will be the richest man in the world for sure.
People like literally 5 months ago, 6 months ago, were like, Nvidia, what's the chances of it becoming the first $10 trillion market cap? Who knows? Like five years from now or whatever, dude. It's like at this rate, the way that they're going, oh my gosh, who knows? It could be a lot sooner than that. Jeez.
All right, U.S. pending home sales are out. U.S. pending home sales.
That's what I'm trading.
We have
buyers. Come on. Why have you all sudden stopped?
0? That can't be right.
Just be a pullback. This could...
All right.
Come on.
I'll give it a look too.
300, 330, 400. Oh,
U.S. pending home sales month over month is 0% flat. That is crazy.
Wow.
And but the index has creeped up just a little more by 0.1%. My goodness. Or 1/10.
Oh my God, this looks like trap buyers now. I'm getting out.
Yeah.
Wait for a better. There's so much volume coming in.
Technically made an all-time high here on the ES in the regular session, so that's good.
Yeah, they predicted at least a 1.21% increase, and it didn't even do that. So that's, I mean, on one hand, you could say, oh, it's flat. That's good. It's it's just kind of hasn't changed, but it didn't go up like they were expecting it to continue the trend. That's crazy. So much for making more homes, man. Yeah. Maybe this has something to do with the government shutdown, though, and not having permit numbers. Maybe. I don't know.
Yeah, using that.
Just a thought.
Using that big brain could be. I know there are a lot of delays, generally speaking, in that, like there's a lot of delays for permits in general, for construction related stuff. So like,
and they're all done at the municipal level, county level, city level. So that's all.
Yeah.
But that's not shut down. Like,
no, exactly.
City government, yeah. So.
Right.
I might go short here again. I'm just seeing so many buyers coming in, but the market is struggling to break through here. Although no sellers are actively coming in, it's making me start to believe that this could be, why not? Let's go in short real quick. Back down to where these sellers are. Actually, no, I can probably target sellers, buyers.
69.52.
We'll put a stop there. Going for the point of control.
The
Got a bad
pending
entry.
home sales index, National Association of Realtors. NER. Yeah. Oh God.
All right, let's see a bit of sell pressure come in and squeeze some of those buyers out. I'm very weary of 301, that area. Where's 301? So
if the ES is coming back down to point of control and VWAP, I may enter long if it gives a retest here and holds up.
Let's see what happens here. 301. Are these buyers defending? Oh, big push from the sellers. Are they going to break through those buyers? If not, I have to flatten. Oh, come on. Well, they're getting absorbed. 150. Yeah, I'm getting out. Don't like it. Those buyers are defending too much, and I feel like it could just pop up.
Okay.
All right, I got in long, ES long.
All right.
69.48. Wow. Let me just put my stop down here.
Wow, gold really caught a bid at the 40-20 level that I had marked off. It caught a bid very nicely over the last 20 minutes or so, and is now back to the upside, back at 40.34.
This is a seller's. This is a seller's market. I'm jumping in again. This is a bad entry because I'm front running it, but this is a seller's market. We're now below all those big buyers that came in. If they get squeezed out, we have one hell of a move coming. Any sign though of buyers coming in, I'm getting out. Buyers absorbing. Come on, sellers. I'm getting out. I'm just scalping this now. If we can get a little push up, so I can get a bit of a better entry, because my stop would have been so big for that trade.
Come on, buyers.
But yeah, we're trading below all the buy pressure right now.
Oh yeah.
That was a false breakout from the high.
Let me check the Nasdaq. Oh yeah. You're right on VWAP. You're bouncing right off of VWAP on the session. Probably going to go back up to that 26,330, Sam. Just let you know.
Yeah, I have no doubt it will go up again, but I'm trying to catch little scalps here. Build up that balance a bit. Build up that P&L.
Hold up here. Hold up point of control. Come on. All right, so we're holding up here nicely at the ES point of control and VWAP. They're a tick away from each other. And let's see if we can get back up to high in the session, which is also new all-time highs on the ES at 69.52. I've got to take profit outside of that and just see if we can extend. Come on. Don't be hanging out here. I don't like it. If you're hanging out here, that's not good. I need a rejection. I need to move. You got to move up.
All right, what are you going on?
Robert's interviewing for another company. Not Hooters this time, Robert. What company is it this time?
You're so...
Yeah, he went to Vegas last night, so he's interviewing some more places now. A new new higher quality dance places, I suppose. Awesome interview.
He's got
good luck, Robert. Good luck. Good luck.
Yeah, good luck, Robert. Good luck with the interview.
You'll smash it. Remember, turn up the AC.
Okay. I'm out of that trade. Stop me out. Maybe wants to explore the downside. If you just did this, if you just ticked me just to turn around, I'd be mad. You're gonna do what you did to Paul. Come on.
For real. 69.42. 69.42 is going to be an interesting area.
Yeah, it is. I mean, it's outside edge. Yeah.
Come on.
I could have held that shot, to be honest, but I'm glad I got out when I got out because I'm not taking chances on this market. Okay, sellers could be trapped here. Bit of trapperoo from the sellers, potential 200, 300 contracts. Let's see what happens. Do they? Yeah, okay, I'm going in for a really quick long, just a really short scalp. Give me like $100 or something. Don't let those sellers out. Come on. Buy pressure's not there. Sellers absorbing it quite well. Yeah, they're absorbing that decently. They are quite good. A bit of bias coming in now. Let's see what happens. Just seeing potential trappage for the sellers, but
Come on. Yeah, I don't know. I think we're holding here. I don't know if we're gonna go lower in the ES.
here comes a few buyers. Let's see. All right, they're pushing up. Let's see how far we can push up. Oh, big absorption very quickly.
They just wanted to pick me off. I'm back in long. They just wanted to do that to me.
Break it.
Little
Break
tricky
it.
guys.
They're constantly getting absorbed. I'm out already. I'm doing a super quick scalping method again on a market like this. I don't like holding.
Sure. Yeah, I'm kind of after that early trade for me, and then the cattle trade. I'm kind of just sitting on my hands here. I'm looking at
there's
gold.
not much.
Yeah, I'm looking at like the indices. I just don't see too much at the moment, unfortunately.
Yeah, I have no conviction at the moment in terms of buying or selling, like whether we're going up or down or what.
Right.
I'm seeing too many conflicting things happening. So
Let's go, yes.
I don't want to hold any trades. I just want to scalp it. $100 here, $100 there, and hope for the best. This isn't a market I want to hold.
Being in and out quickly is good on a day like today. Going into FOMC, right?
There's a lot of volume though in the market. A lot of volume today.
This is
but it's all conflicting.
Right. Exactly. Yeah. Like I think point of control on the session right now in the ES is right where we're trading at the moment.
It is
69.43 quarter.
And VWAP. 69.44 3/4, I think. Yeah. Really? Are you gonna now come down?
Sellers
really?
coming
You're
in
now
again.
coming down? Really? Ah,
Yeah, they're releasing
total
them.
sweep. Total
This
sweep.
is what I mean.
Just swept. Stop pick.
Okay.
Algo, you sucker.
Just immediately tested
This is
the value
exactly
area
what I
high
mean. Ooh.
from yesterday.
Sellers are trapped. Surely they're trapped here. I'm going back in long real quick. Give me another $100 or so. Let's see if buyers get absorbed here. There's a lot of sell pressure at the bottom of that wick. I want to see what happens. Are we going to release them?
I don't know, man. I think we may still come down.
It could very easily. But I just want to see a little reaction to those trapped sellers. See a little reaction. Take out the liquidity at the top a bit. Come on. Take it out. Take it out. Take it out. 60, 90 buyers. Here we go. 100 buyers. Oop, drop down to 60, back up to 90, back to 100, 114, drop to 85. There's a lot of pressure, a lot of absorption. I'm getting out. Grab it again. That's what I mean. Just $100 here, there. I don't trust it. I don't trust. I have no conviction here. Don't trust it. It's going to be a slow grind to get myself up to a decent P&L today.
No, I don't blame you. Point of control shifted down.
Eric Lake. Great day to you too, Eric. Hope you're doing well.
The long's looking good for NQ, man. Jeez. Goodness.
The FAF master is upon us. Sam, Had to walk the liquidity Labrador. Thank you, Tom. How are you, my friend? That would have been a nice long if I held that one. The buyers did come in. I want to hit my TP in a second. That's a bit annoying.
Yeah, that was.
That's a little bit annoying.
That was I mean, good trade nonetheless to recognize the long there at least.
Eric Lake is up 270 so far. Very good. Very, very good. Yeah, see, look at that. Instant reversal again. We had a push up, boom, back down. This is a dangerous market, man. This is a chop me up market.
Yeah.
It's like a machete.
Chop, chop.
Did you see a lot of buyers trapped at the 26,295 area, Sam, by chance, or 298?
No, I don't.
Nah,
I'm looking at it right now.
They
were,
no.
they're gone. It's pulled. No, there's nothing.
Good, awesome, cool. I just wanted to double check. I just want to trying to compare and contrast here between the Dow and the Nasdaq and stuff. So
yeah, I'm with you.
Oh dear, what happened to the long
I
and
know.
short?
We're up top now. We're hanging up top.
Back.
Now we're back down. I don't know. All right. Damn. It may be like this for the next 3.5 hours.
let's check.
Yeah, I can't imagine much before FOMC.
Wow.
I mean, there'll be a little
Full
price
funk.
discovery, but people try to jockey for position, right? But aside from that, I don't know.
Oh, Funk, you always do this to us.
All right, guys. Chat, I'm
Funk.
looking at crude oil right now. We were able to basically double bottom at yesterday's point of control, and now we're back above value area high from yesterday, but we're right at the top of this area where we've shown some resistance in the overnight, and I'm just curious. I mean, it looks like it wants to be a long to test previous day's high, but it is dangerous to be taken along here right at the top of this resistance from the overnight. I might have to get into smaller position if I'm going to look to get long here. Dude, it's breaking out without me, of course.
This is a nasty market, footprint wise. This is not nice at all. He's a maniac.
Sitting right on point of control. My God, are we doing anything here? There we go. All right. I am short. I'm short, gunning for the 69.34. Let me get down there. Get down on it. I'm keeping it fairly tight in case someone wants to go to the other side, but I don't know. I think we need to explore the downside a bit and maybe get down below the open swing low, which is kind of at that 69.36 quarter, I think, in the ES. Yeah.
Quarter. You sounded like you're from Boston there.
I did. Quarter. A quarter. Or New York. We could do either, I guess. Let's go. Come on down.
Let's switch to Daryl's screen since he's in a position. I'm doing a little bit of research on the Russell right here, actually seeing if I can't put a position on to...
Yeah, he's filing a police report, Sam.
Exactly. Exactly.
You mean the Frank?
The Frank.
No, the Russell. We got to get Russell back.
Don't know
We
what
found out
Russell
where you're
is.
hiding. We found out where you're hiding them, so we got to send the detectives.
I know what the Frank 2000 is. Don't know what the Russell is.
641. Get down on it.
Oh, it's a nasty range market. There's literally nothing.
Yeah, we had a good. It was a nice little melt up. Like when Paul got in, and he got in early on the ES. That was a good move. Of course.
Yeah.
It came within one tick of them, and then it said, or it actually you got out, and it came right to where your take profit would have been.
I mean,
That's the
we
worst.
almost have the King Kong cling pattern forming, but it never truly formed. It never came back, King Kong, and then fell off.
Put him up there.
We're missing the
Put him
last
up. Put him up there with some airplanes. Let's do it.
Yeah. It's ridiculous.
Yeah. Let's get the King Kong cling pattern back up. What is King Kong? He's a gorilla, right?
Dude, come on, really? Do
What are we talking about here?
I don't know. It could be.
Do you think he's a dinosaur or something? What do we?
I don't know. Like, what is Godzilla? Yeah, what is Godzilla?
A reptile dinosaur-like thing. I don't know. I mean, it's not a T-Rex, but
Exactly.
it's like
That's ridiculous to even make that comparison.
Come on, King Kong's a gorilla. It's a silverback or whatever.
King Kong, it's a Chihuahua.
Yeah,
it's a
yeah,
Well,
exactly.
how many gorillas do you see that are big as King Kong? That's my point. You know,
But
is it really a gorilla, or
It's
is
just
it
a massive
new
big one.
species of monkey?
No, it's not
I think it's a new species.
I think
Sam always.
Sam's a new species of humanoid.
Yeah, 100%.
We have degraded our DNA to a lower level.
Sam lives in a different dimension than all of us. He's asking questions that none of us are asking, and I don't know whether that's a good thing or a bad thing.
Come on, freaking! Why would he do this?
I'm in a parallel universe.
Oh, there you go. There you go. I like that.
Yeah, we got the King Kong cling pattern forming. We got the Empire State here, and now we just need the King Kong to cling to the Empire State, only to be shot down, and it shoots down. The last bit.
This is nasty. I'm out. I got stopped. I kept it very tight. Came right up to VWAP. I don't know if it wants to go up anymore.
The Russell's kind of
gonna draw Darryl.
bullish.
What's that?
I'm gonna draw Darryl.
You gonna draw me? Draw me.
So he's got glasses.
Come on.
I don't have glasses. What are you talking about? Oh, come on, ES. Really? It just wants to rotate. This sucks.
Yeah.
Come on. I don't know, man. I don't know if there's enough energy to go up yet. I think. Oh, there's a lot of buyers coming in, though. Question is, can it push it?
Push it real good.
There's the C, and just like that, the seller's coming in. I'm short, just like that. That's crazy. Why would they do this?
There's Darryl. It's Darryl holding some water weight. by the
Sweet.
looks of it.
What am I doing?
Holding some
Am I
water
holding-
weight at the bottom of your. I made you a bit chubby for some reason.
Yeah, it's okay. Not bad. Could be
There's
worse, I
Darryl.
suppose. If you see that in a cave, you'll know that Sam was there, drawing me
Look at that.
in
That's artist.
hieroglyphics. It's very
I'm going to
good.
be starting the auction for anyone who wants this original masterpiece.
It's an NFT. It's expensive.
Exactly.
All proceeds go to me. called the
Bidding
cling.
starts
The cling.
at
The cling
490,000.
490.
It's a Daryl in the wild. That's what I call it. This art piece. Time to delete Daryl.
It's gonna block your chart. It's gonna make sure
you
the
look
market
weird
doesn't
with no
trade for you.
glasses. You look strange with no glasses, Daryl. Woof.
Yeah.
Yeah.
Yeah. I know. Now I look like the guy. Yeah, just put the eyes there, and I'll look like the guy that's in your attic. Just coming to haunt you.
Dun, 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 dun. Oh, lots of buyers look trapped. I didn't even notice that. I was too busy drawing Daryl.
Yeah.
Weird as that sounds.
See, I was I was a distraction for the market.
295. There's a ton of buyers trapped at 295.
I don't like where I got in short here. I do not like it.
If we can get up to there and see a rejection, I will absolutely. Oh, damn! I entered way too bad. That's a bad entry.
Not a bad short.
Come on.
It almost looks like we're kind of doing a little bit of a mini head and shoulders of sorts.
Oh, buyers coming in.
So.
All right. Well, if it could just come down here and retest the low of the day, maybe get to 34. I mean, there's a bunch at 35, bunch of liquidity. If it could eat through that and it'll take me out, I'll be happy with the trade. And I'll get back.
Come on now.
Get back most of what I lost.
It's a very range-bound market. I entered at a really bad price.
Let's see the break.
Agreed, but I mean, I still want it to like. I mean, if it's gonna do this, if it's gonna do this kind of range, then come on down.
I
the
entered
other
at
side
such a poor price, man.
Calm down.
I got some serious slippage in that trade.
Sounds like a personal issue.
But I do think those buyers are well and truly trapped at the top there. I just hate the fact that I have such a big stop. Then again, I can add another contract if we get a bit higher. So it's not the end of the world. Yeah, it's not the end of the world. I can average it out to a bit of a better price.
What is up in the chat? Anyone excited about FOMC later on today? Anyone just sitting on their hands, or is anyone doing something like me?
So excited.
Trying to
most exciting thing ever.
Trying to make back some money here while I wait for Jerome. Oh, Jerome.
Love a bit of Jerome. Love me a bit of Jerome.
You're pumped, Tiger says. Yes. I could tell. I could tell. Let's come on. Stop hanging out here. Freaking balance. Hanging out at the balance.
Oh, are you going to do the news at all, Sam, by the way?
We're skipping it today. I'll do it later on.
Yeah.
Gotcha.
Yeah. You're in a small trade on gold. Wait until later. May go out and put up the wall you built. Eric's building a fortress up. He's got like a moat. Been digging a moat. It's got some alligators shipped in from Paul's neighborhood. Paul's going to take some alligators up to the Rocky Mountains, throw some in there. They may freeze. They're cold-blooded after all, but, you know, if you want some alligators, Eric, kind of keep the riffraff out. Paul can get you some.
Yeah.
Oh, yeah, I know it's a master. That's right, dude. It was a master bedroom. That's cool. Very cool.
Come on. You were doing all right there, sellers, and then you just gave up. Don't release those buys. Oh, this might be a bad trade. We're getting too close to those buyers.
Nasty. Just looks bad.
Too close to those buyers, aren't you?
I don't like being in this balanced area, but it's not giving me any opportunity to get out. It just keeps freaking taking me out to either side. Just crap. I mean, I got in on this. I got on long right here. Then it just swept me. I got short. It picked me off. I'm just getting freaking yo-yoed here. Like, come on.
Yeah.
Do something. Terrible.
If we get back up to 69,
always it slowed down.
44, maybe I would look for a small short, like a short with like small risk, essentially, like a couple points of risk to then.
I'm okay with that. It's within my stop. If it gets there, I'll still be in the trade if it gets up. But I mean, I like it to make a breakdown, right? Just come on, breakdown.
Come on, sellers. Here's where you have to
IBs
enter.
are locked in. So much for IB land today.
All right, this is where all the trap buyers are. Let's see you push down now, sellers.
We've got a 16-point range. That's all we got in the ES.
Yeah.
Oh, don't do that. Don't do that. Come on. I'm seeing sellers come in now, 140 contracts. Let's see if we can actually push it down. This is where all the buyers are trapped. Keep them trapped. 600 contracts.
Took me out, Paul. Look at that. Did me dirty again.
Just wicked it.
Took me out. Just what a freaking
600 contracts. Surely that's enough to trap some buyers and get a bit of a move down. Done.
Sucks.
Where's it end? 26,300. 26,300. All right. Okay, so it's that whole area, basically. Okay, well, we're pretty much there now. Oh, you terrible. That's terrible. That's so bad. All right, more buyers potentially trapped. It's still looking okay. It's still looking okay. I just got such a bad price. That's the only thing. I entered so badly. I should have entered like now.
I'm looking at all the sectors in the S&P. The green sectors: utilities, industrials, energy. Okay, and then tech.
Yeah.
So it's like tech, and then the other three are like safe haven, like not safe havens, but
yeah,
know.
It's like Nvidia, and then it's like everything else.
Yeah.
Like ridiculous.
AMD is also up, 2.6% right now, up almost $7.
Yeah, that's good that you mentioned AMD.
AMD
this is looking right. This is looking okay. Come on, got all this buy pressure coming in, another 300 contract, and they're not pushing it up. My only worry is this would usually be a great short, but where the hell are the sellers? We're seeing no absorption. Just lots of buyers coming in, but it's got to be an iceberg or something. I don't know what's going on. So many buyers, but the sellers have yet to, a little bit. But do they actually follow through? That's the question.
S&P just like kind of got jolted down there a couple points. But yeah, Nasdaq's
but it's still
much.
in that. It's just still, God, it's so ugly right in that range.
Yeah, this is gross.
Part of me wants to short again another contract, but I'm already 2 contracts in. I don't want to put on too much size, just to get a bit of a better price, because I think this is a good area. Again, now the 300 contracts are trapped at the top there. This area is filled with buyers, like buyers to the brim, and they're just not able to push it up. If they do push it up, then obviously I have to get out. Like, that's buyers one. But right now, it's the likelihood is if sellers were to come in, we'd do some damage. We would do some damage.
Jean-Claude Van Damage.
Exactly. The buyers are coming in again. They're trying to push it up. Another 100 contracts. This is brutal. This really is brutal. Brutality.
brutality.
Oh, the brutality.
Oh, the brutality. Exactly.
These buyers. Give up already. Gee Louise, what is going on? They're starting to piss me off now, these buyers. I was quite calm earlier. I'm starting to take... Oh, you buyers are the worst. Who's buying? Why are you buying? Stop buying. If you're out there, please stop buying. I will pay you to stop buying. How about that?
No.
If you're out there, stop buying.
They're still trying to buy. They're just getting... There's like a wall, an invisible wall right here, i.e. an iceberg. I just don't want this iceberg to break. It looks like it's breaking. We are breaking the iceberg. Buyers are coming in with another 100 contracts. Surely, sellers, come in, defend your... Nah, it's not going to happen, is it?
Oh,
nah. Here we go. Here we go. Bill sellers coming in. Okay, they absorbed 100 contracts there. That's got to be it. You've absorbed 100. That's some big absorption there. Good. Good. Now come in with aggression. Oh, why? Why? That's it. 110 contracts. Come in with aggression. Don't make me have to flatten you. Oh, I'm going to have to flatten. I might have to flatten here. This may be the last stand. The last tick. 200 contracts coming in. Come on. There we go.
Here we go.
Come on now.
Wow.
Come on now.
Plunge. Plunge. I think it will plunge. The thing is, it's going to be instant.
I know.
It'll be one big ass candle, and it will happen.
That's what I'm worried
any
about.
minute.
That's what I'm worried
happen
about
at any point. I can see it happening. I just need to hold on for it to happen. But there is only so much I can really handle. If it keeps drifting up a little bit more, I'm going to have to get out and try and catch it with a fresh position. Oh, come on. Come on, protect that. 95 on the buyers, 100 buyers, 108, 104, 97, 100. This is starting to get painful. I'm gonna have to flatten. Don't make me flatten. Don't make me flatten yet. Why? Come on, sellers. Build your position. Plunge that market. This is the King Kong Cling come into play. Considering how much buy volume is coming in, and we're barely drifting up, like this is going to be one hell of a reaction once it.
This is so typical FOMC. This is so typical. We're just God grinding ever so slightly, just not doing anything.
I got such a bad position there. Such a bad entry.
Now that I say that, are we going to come down and retest the low day? Not yet.
Maybe. I'm seeing some sellers come in.
Oh,
just need like 300 contracts. That's literally it. We need like 300 contracts, and this will plummet.
I'll be right back, guys.
150 buyers. No worries.
Quick water refill. Quick water refill.
Sure. Okay, 161 buyers entered at the top of that wick. 200 buyers. Again, they're just coming in with so much volume, and they're just not breaking past here. 160. Come on, any second now we should see that plunge. Where is the plunge? Give me the plunger.
El plunge.
Come on now. Give me the plunge. Boom, 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 boom. Plunge, plunge, down. I hate holding trade. I'm only holding it because I'm adamant that plunge is about to happen. Otherwise, I'd be out ages ago.
I don't know, man. It's just the ES is really nasty. It just has been rotating right on point of control, view up, 2 points up, 2 points down, just doing this little freaking thing. God, this is Chop City. I can't get in here anymore. Just gotta wait.
All right, the volume is kind of dying off. It's almost like the calm before the storm, which is good, I guess.
Damn, bunch of sellers coming in.
On NQ, not really.
No, on the ES.
Filled.
I'm just.
I like it.
Are you out?
Come on now. No, I'm still in. Still in. I've got some terrible news. I've only got one little cake thing left. I ate a whole bag.
Oh my gosh. Keto right down the drain.
He's gonna go get his watch band adjusted. He's gonna have to ask for another link even added. Like I just need.
Yeah.
Should he added 2 now?
Oh man.
Yep.
That's all right.
The
Just
watch
means
guy's
you
gonna
gotta
be like, "You're back again."
Just means you gotta go back. You gotta go to the gym.
Here we go. Here's the plunge
For twice as long.
Here it is.
Yeah, it's coming down the ES. Will it hold?
I get.
Will it stay down here?
This is what I'm saying. I'm hoping just follow through to it. Oh, maybe that's not the real plunge, is it? That wasn't really any volume that plunged that down. We had 84 contracts made that happen. This is what I'm saying. We just need like
that came. The other sweep that came down the ES
contracts.
back at what time was this? 10:12 Eastern. That one sweep down, that was like an exhaust move, and that maybe see this didn't even get down there. It just kind of retested a little bit. The buyers came in at 69.40. Said, "Hold up, that's enough." Going back up to point of control.
Oh, this is such a.
That's what I'm saying. 2.5 points in the ES is all it's doing. It's just rotational, man. It sucks. This is chop.
That's
death by 1,000 chops.
There's too many buyers in the market, but they're not pushing it up. We should have a hard reaction. Come on.
Yeah, but we don't have the range right now. They're waiting on FOMC, man. Waiting on Jerome, then things will just break freaking loose. I
still think it's gonna at some point. FOMC. I think it's gonna cause a hell of a.
Oh yeah.
Hell of a reaction. But let's just see. We're talking.
What if they don't cut?
Movement for the NQ.
What if they don't cut?
Well, that would be mayhem, but I don't think that's gonna. Yeah, that's not gonna happen probably. But
I know.
Yeah.
Here come the sellers. Here come the sellers. Finally. All right, let's plummet it down. That whole push up, this whole area here, this push up we had. Do you know how many buy contracts were traded in that area? It was disgusting. And that's all they did. We just need like a smidge of sellers, and this market is gonna fold on itself. We don't even need a lot of sell pressure, just a little bit. Just like the sellers just need to kind of like blow at the buyers, and they'll collapse this market. Very unstable at this moment. There it is. All right, let's keep it going now. Let's keep it going. That's the only reason I'm held that trade for so long, because I was adamant there's too much buy pressure in this market, and we're not moving up enough. There's got to have to be that reaction down to balance it all out again. And then buyers come in again around this point of control, which is expected.
See, this in the
But
ES is where.
There we
I'm
go.
looking
Here's
for
the
a
move.
short.
Come on. Let's get down to my TP. There we go. 400, 600 sellers have just come in. But look, let's see what happens. If they get trapped, the same play, but then up, it's going to go up. Yeah, look, the sellers can't even. What is going on? I'm getting out. 600 freaking sellers.
Here we go.
At the bottom here. What is happening?
Here we go.
Oh no, those are the buyers being liquidated. No, I shouldn't have got out. I read it wrong. Those. Oh my god! Well, right below all the. That's people's stops getting hit. That's not sellers entering. That is all these buyers getting out the market because all their stops at the bottom. I read that.
All getting squeezed out. It's all covered.
That's exactly what I want to see. Buyers getting squeezed. Never mind. It's fine.
Came within a tick of on the ES to retest the low of day, and lots of buyers on the bid came in to hold that up. See if we get through that.
Now, this is interesting. I think. Well, like here's the so when I'm looking at the Nasdaq and the ES right now, the ES was able to breaking below that 6940 area. Great. But we tested low a day, but now I want to see if we can just 6940 can be some sort of resistance and just sellers come in and whop us down. But
if we don't get above,
the problem is that the Nasdaq is like loving VWAP, like the continuous VWAP, including the overnight session and everything. It has tested VWAP now. That was the third time it tested VWAP in this regular trading hour session, and has bounced off. So this is where I'm a little bit more. I'm super cautious because I don't want to fade. I don't want to sell the S&P when the XLK is the best sector right now and the most strong sector, and the Nasdaq is loving to bounce off of VWAP as support to then go back to the upside. So like I'm not.
Yeah.
I have to kind of sit tight. But look at this. We just tagged 6940 again, and then we sold off here. So
see if we can get through here on the ES. See if we get down through this. We're retesting again.
Yeah, I should have held
off
that.
The 40.
That was just all those buyers getting absolute annihilated, squeezed out the market. I read it so wrong.
Okay, maybe this is the breakdown here. Maybe this is a.
It could be. It could be, Paul. I'm looking here. Oh man. I want to get short in ES, but I'm not ready to go yet.
I'm in the same camp. I'm doing it. Okay, I'm short.
Short-tastic. We can switch to Paulie G's screen. I'm going to do a quick liquidity dump. Genuinely drank so much water. You don't have to take me off screen. I'll literally be back in a couple of minutes.
He'll do it on screen.
Decent buyers just came in.
I know.
Some decent buyers. So if they get absorbed right here, might be good for the shorts. Might be good. 69.35. I really want to see a jump down below there. That's what I'm looking. Oh wow, buyers just came in massively. Wow. Okay. Okay, so let's see. All right, can we hold here? Can we hold? I mean, really bad execution in terms of like the area. I got short closer to the low of those candles, which the market execution didn't do me well there. Damn, but yeah, okay, we're holding up a slight bit, but buyers are doing some damage.
I know. I wonder if that 36.35 is going to really be supported here and we go to the upside now, but I don't know.
Come on. Let's go. Let's go. To the downside.
Where's your take profit?
I've got it right now at 69.29 quarter, but
Okay,
I
yeah,
have to
that
adjust.
30. That's where I would. I mean, that's good. That's good. All right, come on.
I'll probably look to actually take profit somewhere around the 69.31 area, 69.32.
So it was interesting. This liquidity down here at this 36.35 in the ES, it wasn't here in the overnight. It only formed, 10 minutes after we opened and we came down and formed that initial swing low, and then we were pulling back up, and then all of a sudden these buyers came in as if they wanted to get. Here we go. We're gonna go through it right now. I think they wanted to get eaten out, taken. Let's go. Come on, get eaten up. Let's go. Eat through this. Come on. Just take these guys out and get down. Jesus.
Yeah, this it would be
food talk.
much better if we now eat through this 69.35 area. We got to do this now.
I'm short.
Okay,
I'm short now. Yeah, I'm short. I'm short with you now. All right, let's get down there. Oh, yes. Come on, baby. Let's go.
Look at that.
Can we get to the overnight low? Can we get further? Can we get at 24?
All right. Nice. Out. I got out right at the low.
Got a hold, though. Got
that
hold.
wick.
Good stuff.
Got a hold. Can we continue? See, that may be all it right. I may have to fly. I don't know if it's going to continue.
No, it could for sure. But when I get 4 points that quick,
I would. Yeah, I would be in the same boat as you. I'm taking my money to.
I didn't get out what I should have, so I'm still. I don't like my entry. Damn it! Come on.
All right.
That King Kong Cling really did play out.
Yeah,
I think this is a true pattern. From the building. King Kong Cling pattern.
He fell, but he didn't fall hard enough. Come on.
He fell pretty hard.
Oh, come on. Let's see. I'm going to get above 40. See if it rotates back down. It probably won't. Now that it did this, it probably just go right back up to point of control.
If it's going to retest the 69.40 area to then break above, man.
Well, if it does that, I'm out. But if it retests and it just kind of rolls over again, that's okay. Then I'll get another opportunity to get out.
Coming in.
You little sucker.
Yeah, trap sellers at the bottom. 3, 4, 5, 6, 7, 800.
Yeah, but I want them to roll over.
1,000 sell contracts trapped at the bottom.
I'm out.
Market's on fire.
Yeah, that was good, Paul. You got it, man. That was sweet.
Thank you. Yeah, that was a tough one though. That was so tough. That was to get out that quick. I mean, if I had gotten out a second later, I would have lost another $75 of P&L. Like it was.
But it took your. It tagged your TP, didn't it? Or no, it didn't.
No, it didn't. It got 1 point away because I had my TP at 31.50. I moved it to, and then it only got to 32.50 there at the bottom. So we were 1 point away. And then when I saw the little bit of the struggle there, I was like, okay. I just immediately was like, don't be a you know what for a tick there. So
yeah. Come on, now it's holding here. Now it's gonna hold at 40. It just gets above 40, really.
Hussein Abtidon says trade with the trend. Yes, the trend is your friend. The trend is your enemy. I'm joking.
The famous last words of Samithus. Salathis.
Samithus. The Samithus. What he said to Russell before he introduced Russell to Frank. That said, your new name will be Frank.
I like to say that the trend is my acquaintance.
There you go.
It takes a lot for me to become friends with someone. So.
Oh man. All right, maybe we can find some resistance here again. Maybe, but I I would definitely want to, if we find some resistance here on the ES, we need to then decisively close below, I think, 39.36.
We do.
And
we do.
then
And we got to get through that. We got to get through the liquidity at 36 that's just been forming now. So if we can get through that, then maybe we'll go and retest the overnight low, which we've yet to do. We've now filled the IB. So my IB low stat is filled, but we got a rejection move. So we're back in range.
Oh man, dude.
I'm
starting to
feel
like,
to me, we're not as soft right yet. We got to get down here.
Yeah, I'm seeing a buy here. I'm seeing sellers
starting to see
getting
the same
trapped.
thing.
I'm jumping in for
Get
a
up the
quick
point
buy.
of control. Get up the point of control, and then we'll hold and maybe rotate back down again for the mean reversion play to the outside. 69.43 to the outside. Yes.
Can have a stop right below that candle, so where those sellers are potentially trapped. Let's see if we can get that extension back up. Come on. Sellers are still trying to sell it. Sellers are still strong. All right, we're getting into that area where the sellers are. Does it hold? Let's find out. Let's find out. Buyers coming in. Sellers are still coming in. 70 contracts on the sell side. Getting very close to where I need to exit if we don't. No, sellers are coming in. Up. 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 Trap more sellers.
That noise.
What's the noise I make?
Can I get a whoop whoop?
I think it's just a bit of bounce on the point of control. That's all it is. Bit of a battle near the point of control. 100 buyers came in. Here we go. Let's see if those buyers can. 111. Let's see if they can actually make damage now. 150.
So that 36 level's pulling, Paul. It's not. I think it'll hold.
We can switch to my screen since.
Sure. Yeah.
I think I'm the only one in the trade at the moment. Yeah.
You are. You're the only one in a King Kong clink. Clink.
This is not a King Kong cling trade. This is a.
Yeah. It's a.
I don't know. I need to make up.
It's a King.
It's a Godzilla. It's a Godzilla versus Mothra.
King Kong climb, dude. Could climb into the upside.
Exactly. Yeah, he's climbing up the building.
Buyers could be trapped here. This is critical. We're in critical territory. Buyers could be trapped.
Really is.
Let those buyers out.
The volume died in the ES here. The volume is dead now over the last 3 minutes.
Set a stop. Yeah. I think the buyers have got this.
You know what I need to do? I need to put my sloth in here. This is such a sloth move trade. I forgot to put my sloth. That's what I need to do. What the hell am I thinking?
Oof.
Where's my slothy sloth?
Oof, this is such a battle. This is nasty. Those buyers are trapped, aren't they? We had buyers all trapped up here. Sellers coming in strong. Yeah, nah, didn't work out. I still think it will go up. I just think.
I do too. I just think
130.
it's going to be
All right, sellers
grind.
look potentially trapped here. Let me see what happens. 100.
Book got thin. What happened there?
Sellers are still good. Sellers are still good. Where are all these big sellers? So they're all starting at 256.
This looks like such a good long, I feel like, on the ES here.
I know it does. I know. The NASDAQ's totally different than the ES right now.
It is.
ES looks like a good long.
Oh, here we go. 300. All right, this is
Pull
just
back
to
to get me long. Pull back to get me long. Come on, get down here. Yes.
Buyers coming in. Massive sellers came in at 300 contracts. Buyers absorbed them. We're at 150 for the buyers. This could be the move, but if sellers break through those buyers, then I have to get out. So this is a really, really, really tight stop. It all depends now what happens here, because we're not above those heavy sellers. Those sellers are actually in control right now. They're absorbing buyers.
You're right. We might. Oh man, it was looking like it really looked
This
good.
is the critical.
I know.
No, it could still be fine. This is critical. All right, we're at those heavy sellers. 300 sellers came in at this area right here where I entered. If we break above them and squeeze them out, we have to play. The play will be happening. It will happen. Come on now. All right, we're squeezing above them, but the sellers are still very much in the market. They're still defending it.
Yeah.
Those sellers all came in like here. Come on. Buyers break through those sellers. Don't allow them out of their position.
Oh, never mind. Just kidding. Coming up on 11 a.m. here, Eastern time.
Yeah, I see that. No London close yet.
Yeah,
Normally would
exactly.
be. I knew you were gonna.
Yep.
Make it.
You got it. You knew.
Next Monday we could do it. We'll be
You
caught
knew.
up.
Read my brain. It's kind of scary how you do that, Daryl. Sometimes I don't know if I like it.
Break above.
We trade enough now to we kind of know our tendencies. It's just it's like being on a trade desk, you know. You just kind of know.
Here we go. 170 buyers came in. Let's see. Although some of those sellers might be dropping off now. I think, yep, they're giving up. The sellers are getting squeezed now. Another 100 contracts from the buy side. Let's keep that pressure going. Let's keep squeezing through. Keep squeezing through. Keep going. Keep rolling. Rolling, rolling, rolling. Rolling, rolling, rolling. Squeeze them. Rolling, rolling, rolling. All right. Lots of buyers came in. Oops, what am I doing? They are all here, the buyers.
You a big
So they need to defend.
I guess Sam's
This
a
is
big
where
Limp
buyers
Bizkit
need to
fan.
defend.
Is this where we go?
I love a bit of Limp Bizkit. I want a biscuit. I want to eat a biscuit right now.
You like the first?
I ate a whole bag of biscuits. They weren't limp
Like
though.
you like
They were nice and
limp.
soft.
You like limp biscuit. You like
They were
Microsoft.
soft biscuits.
You like crumpets. You notice the trend in all of those. Just soft and smooshy.
Exactly. That's it. The buyers defended that area nicely. Let's squeeze up. Let's make the move. I am going to keep my eye on these highs here, where the point of control is, because there's a good chance we could enter a ranging market if the sellers decide to defend around here. But it's looking okay at this second. It's not really any volume. Volume has just dropped off out of nowhere. There's hardly any volume all of a sudden. What's going on? There we go. 70 contracts. All right, good. That's one. Oh, they got eaten up quickly. Oh, they got eaten up quickly. I don't like that.
Yeah, we
I
do
don't
have
like
to.
it.
We do have to be aware, Daryl. You know, I will say a lot of consolidation right now below 69.40 could spell the short trade as well. So if we kind of fail to break up right here, and sellers really come in hard at 69.40 or so, right, or a few ticks above it, this might be a short.
Pansy.
I'm
Frickin'
watching.
donkey.
I'm watching this consolidation area to see if point of control builds up enough to where it shifts down here, but it's not. We're still 5,000 contracts away from that happening.
Oh, you donkey. Where are these sellers coming in near that point of control?
But you're right.
Come on, hold them off.
We are definitely far to the south, relatively speaking, on the range of point of control and VWAP, which are a tick away in the ES.
These frickin' sellers.
Yeah,
I would love to see the overnight low
Frickin' pansies.
retested, which is down here at
I'm
24
gonna get out
half.
here.
Ooh,
And that would put us below the point of control of yesterday's session.
yeah,
All right.
Nvidia's down to 208.50
Come on, buyers,
right now.
defend that area.
Gave up a
Where are
few
they down to?
bucks.
Where are they down to?
208.50.
208.50?
Yeah, down a few
Jensen
bucks.
just lost $500 million.
Oh, you joker. Nah, I gotta get out.
Oh,
I gotta get
look
out.
at this. Look at this, Paul.
Yeah.
Those sellers came in with vengeance. broke through the heavy buyers.
Holding 36. Oh, I'm short. I'm short.
Nice.
Book got thin. I'm short, and I don't know where I'm going. I have to target 30 initially. Let's see. I got in at, what did I get in at? 36 quarter. Stop it. We'll do a 6-point. We'll do a 5-point stop.
Ooh.
Just underneath
I'm back in.
mid. All right.
Come on. Hold here. Oh, those sellers came in quick again.
All right.
Oh, are you kidding me? As soon as I entered, they came in. They got eaten up, the buyers.
Come on.
Nice.
69,
Nah,
36
this is a
quarter.
bad move. That was a bad move. That was a silly trade. I'm getting out. Let's wait for buyers to come in properly. That was a bad move.
We'll show Daryl's short's doing good right now. I think it's not a bad trade.
I mean, I'm only in the money a point, but we're now at breaky. We're just hanging out. I'm hanging out like the sloth, my little sloth friend. Oh, come on!
Let's not do this.
Really?
Whoa.
Really, you gonna do this? You're gonna do this? Look at those buyers coming, man. Jeez.
But it's, what I'm interested to see is like we had a lot.
No,
of
they're gonna
buyers
fall
right there, but
they're gonna fall. It's gonna, because see the book. Look over.
Can they do anything?
Yeah, I think they're gonna. Oof, man.
Ah, shit. I missed it.
Look at this.
Ah, you stupid.
38. 40. Wow.
That's pissed me off. I proper missed that. How did I miss that?
Come on.
Ah. No, it's fine. It's fine. It's going to come back. That's not a real move.
69.24 previous day settlement on ES. Yep, exactly. That's one of the levels that I was covering.
That's what I have.
In the 69.24 was also point of control of yesterday that I had from the regular session. Yeah.
No, me too.
Yeah.
That's why. Well, it was a little bit higher maybe, but it doesn't matter if it gets down there to the area. That's fine. I'll move my TP. But come on, really, you got to do this here? Why?
So yeah, learn then earn. 69.24 definitely a very very important level. We agree 100%. Let's see if we hold below 69.40 here. Come on, hold below. And Judzer, always great to see you in the chat. Too twitchy to trade.
Judzer,
don't blame you. Gold sell.
Yeah, it's a very twitchy market.
Let's see here. It's gold.
Come on, buyers, hold here.
I say if we break below in gold, if we break below like 40.17, I would say there's a possible short opportunity there. 40.20 to 40.40 is a consolidation area that I've had marked off for a long while now. That we have spent most of our day today in the morning trading. So if we can break below that decisively, I think you would be looking for a short.
Got to get out of the area. I got to get out of the fray.
What the hell is going on?
I got to get out of the high volume node. Just let it play out. If it comes up here, it'll rotate. Because I don't want to get just stop picked again and roll over.
Kidding me?
Yeah.
You actually kidding me?
Could see it doing. Here we go. Come on down. Let's go.
Volume is all over the place.
Let's go, buyers. Come on, buyers. Exhaust.
Contract here, contract there.
There you go. Exhaust a little. Man. Come on.
This is absolute bollocks. Nothing is sticking.
I'm short, Tony. What the hell? We get short. I am short.
Yeah, exactly.
Don't you see my sloth?
He wants you to get more short, probably.
Oh, maybe. Maybe.
Classic.
Yeah, there you go. We're gonna full port
Come
this,
on.
buddy.
Come on now.
Come. Stop faffing.
It's proper faffing about this. None of the volume is sticking. This is what I'm starting to notice here.
Mm-hmm.
You would get heavy volume come in and it just doesn't stick. It just doesn't commit to it. Again, same thing. Volume came in, didn't stick. This ain't good.
What a little level we have. 69.40 is a bugger.
It's getting
It's a bugger.
squeezed badly. Getting badly squeezed. What is the... Okay, that's interesting. 140, 139. Okay, I'm going to keep my eye on the cumulative here. If we get to 0, that'd be interesting. Let's see it's... We're proper flat on the day for cumulative wise.
Yeah.
Which makes sense. It's such a range bound
we are
market
in the
right
ES too. We're totally flat.
now. Where are these sellers coming
Same
in?
thing
All
in
right.
the
Previous day's
Yes,
high.
and
I almost
Yes.
have to get out to get back in because I can't hold this swing.
We're 20 points
Yeah,
from
all
previous
right.
day's
I'm
high.
gonna have to get
Sam,
out.
I know.
on the
I know
Nasdaq.
we are.
On the Nasdaq. So on the
I'm
Nasdaq,
checking
we're
both.
26, 230. Maybe
230. Yep.
maybe we come down there, and that's also where we found some support in the overnight. So maybe NQ wants to give it a
Come on,
little
Nas.
test.
Come on, Nas. There you go. Take the ES
I
with
think
you.
it will.
Let's go.
That's
Oh, wow.
pissed me off, man.
Nasdaq is really.
I was in 2 half decent longs there, and I did not get out
Tony.
where I should have.
Oh, that's hilarious. We'd have to squeeze you into the upper right corner. Maybe make you inverted.
Okay, 1 minute. This is interesting. Okay. But there's no area. This is interesting. I see. I want to go in long again, but it's just not enough. It's not enough.
Come on, let's get down. Let's explore the downside. We got to get to
It's
that
not
overnight
ready.
low.
It's not ready. It's not ready yet. Not yet.
You can do that, Tony. I agree. I'll be quiet. Go in his attic. Make some noise in the attic. Scare him. All right. Do we get the extension
In
down?
the back of his office.
do we get the extension now? Come on.
Oh, here we go. 123. All right, they're reloading. 130. 116.
The fact that we came back down here is an encouraging sign on the ES. We came down to 36 after all that liquidity got eaten up. Oh, come on.
I'm not seeing any buyers, but I'm going to front run it. They should be coming in soon. I'm going to front run
Worst
it
words
ever
were
so
said.
slightly.
They should, and I'll front
I know
run.
it's a stupid.
They're the perfect words of an awesome
stupid
trader.
decision,
They should, and I'll
potentially.
front run. What the hell?
It's fine. It's fine.
Dang.
No.
I always somehow come out on top. The market never defeats me. Only a couple of days a month does it defeat me. You persevere. That's what you have to do, Daryl. It's by taking risk.
I would.
By the time the volume comes in, the move's already over in this market. This market is so quick to kind of switch. Still buyers haven't come in. Now they've come in. Seems now I would have to enter already. You see what I mean?
Yeah.
200 buyers came in. Here we go. I'm only looking for how efficient the market's moving. That's all I'm looking for at this moment in time. And then technically I should be getting out because I can already see the heavy buying coming in and failing to push up. I'm going to try and hold it a little bit longer because I believe we are pushing up higher. I believe we've got a better... Come on. Sellers, stop it. Stop it. They're coming in. All right, I'm out. I'm out. I keep doing it. Again. Stop it. Stop it.
Leave Russell alone. We got to release him. Learn the Nern X. Yeah. We've been talking about this all morning. Judester, same thing. Yep. You guys are thinking the same way that we are.
Holy crap, guys. 4, 5, 6, 7, 800 sell contracts have just come in the market. Holy sugar cubes.
Right. That's cool. As long as it moves it down for me, which it's starting to do.
That's what I'm looking. That is a lot of volume. Right there.
Nah. Let's break the 36. Come on now. For the love of God. Let's do this. We've been down here 3 or 4 times. I mean, golly. Let's just go.
For the love of all things good.
Yeah. Come on.
Yep.
If we can get through that to the other side, then I think there is a real possibility of getting down to the 30 and then, of course, overnight low.
I want to bet against those heavy sellers. I want to bet against them because they're vulnerable now. Potentially vulnerable. I mean, right now they're still controlling the market, which is fine. But I also know if those sellers get nervous, which they might be, they're defending a little bit now, but we could have a rip up.
So
shall I bet
the distribution.
Again, this trading session has gone by like that. We're already 14 minutes away from being done.
You know, it's interesting. I had this purple channel, drawn where we had the high volume node, obviously point of control, 43.5 and VWAP right below it. But if we also have this low volume that we've got a double distribution now forming. So obviously this is the resistance to the upside here on this channel since we've been down here for the last 45 minutes or so, trading sideways. But yeah, we just don't want to get up into that, past 38, 39. We've gotten into the 40 once or twice, but immediately get sucked back down into the range. Into here, this lower developing high volume node, which could turn into point of control. We in another 3,000 contracts, we could have point of control migrate down to here, which would be good on the auction.
Holy crap.
What's
I decided to go short. No, the buyers have got this. Oh my God. I should have bet against the sellers, as I said. But I thought, nah, let's go with the sellers. Defending it. The sellers are the buyers are squeezing these sellers out. They're all trapped now. Do I go in? I made a bad decision there. Always bet against the damn heavy volume people. Someone is dropping that amount of size. Wait a second.
The question is, will Jerome...
They're not out yet.
Will Jerome be hawkish or dovish? All right. That is the question.
Yeah.
That is the question. What is he going to be?
do I don't want to. I don't want to buy yet. I think this is a good area. No, I have to. This is going up. This market. I'm gonna have to have a big freaking stop.
No way. We're going to actually break back out of the 69.40 area in the ES. Wow.
We could, or we could just hold. I'm hoping it'll hold.
Just ate through that larger offer. I'm sure you saw that, Daryl. We just literally just ate through it.
Yeah, I did, but I'm busy doing artwork right now.
That was a poor decision.
This is our distribution pattern right now. We've got a big bird, not to be confused with Sesame Street. We got big bird here. If you look, if I pull the bird face away, and we go back and let the profile build up in the screen here, what's showing? Yeah, look, it matches up. It matches up with Jerome. I don't know what he's going to be. What's he going to be? A dove or a hawk? We don't know.
You don't know? Yeah, exactly.
This is the greatest analysis. You will not get this anywhere but HPTV, folks. You'll never, ever get this anywhere else on YouTube. And the expertise of our fantastic, almost century of trading collectively.
Yeah.
This is what you get. This is what you get.
Century. That's a bit.
Sure, why not? Round it up.
Round it up massively.
50 years.
Well, I've been trading.
50 years.
I've been trading for about 2 months.
It shows.
Oh gosh.
Rah, caca, caca. Look at this sucker. This is my crow outside my window that I want to shoot.
Yeah. All right, we're still holding up here. Nasdaq just got.
We're
back
holding.
to
I know. I
the
see
VWAP.
it.
The VWAP I got here showing a little bit of resistance, but what a grind! This last what was it been 30 minutes now? Essentially, 25 minutes. What a grind!
I don't know.
I think we're still going to go down.
Let me get rid of my.
Starting to get trapped.
Awesome Banksy artwork here.
Yeah, buyers are starting to struggle in this area, but there's the point of control there, so that makes perfect sense. However, the amount of volume on the sell side was insane.
So it's got to hold here. This 41's got to hold. But, it's interesting. I took a very liberal stop. Really, really, really freaking liberal, like a 10-point stop. So I normally do 5. So I've doubled it out. Not because the volatility has increased, because usually when the volatility increases, I'm going to reduce my size and widen my stop. But I just got to get above where all the stop pick action's been, which has been above this point of control until we shift, if we do shift down here. I just want to get out of the danger zone, man.
All right, this is looking like a good long, Tom. Tom, it's looking good. I know Tom's long the NQ right now.
Tom's got a folder called Hola. Dude, that's awesome. I don't know I think he's being serious too. That's good. That's pretty cool.
Hey, there's plenty of artwork that's been
on
this.
There is. Oh, come on. What are you doing here? Come on. Bump, bump, bump. Bump, bump, bump.
Okay.
What do we got? 6 minutes left here in the session.
That's about right.
Okay. You are serious. I know you're serious, Tom. I would never, ever, take your word against you.
Yeah.
Former soldier, I respect that.
Tom is basically Rambo.
I mean, essentially.
Oh yeah, he's Rambo. He's yeah. Oh yeah. Rambo, Predator, Commando. He's a Terminator. He's everything. He's Chuck Norris, Delta Force.
Chuck Norris, I think, is the most accurate one for sure.
I know it is. I saved the best for last. He could be Dirty Harry Callahan. I could see him as a cop. He could be Dirty Harry. I could just see him roaming the streets, the dangerous streets of Wichita, cleaning up the bad vermin, getting them off, vigilante style. Right, Tom? That's what you do. I know it. Oh, we came up to frickin' VWAP, man. This is not cool. It's not cool.
All I can think about are Chuck Norris jokes now because of Tom. Oh, God. Chuck Norris's roundhouse kick is so powerful, it can be seen from outer space by the naked eye.
Look, Tom, just go to Wichita State. Go down frat row or something. Just smack those boys up. Keep them well behaved.
Chuck Norris doesn't strike gold. Gold is the byproduct of Chuck Norris roundhouse kicking rocks.
When Chuck Norris cries, if he does, he cries diamonds.
Yeah.
Those are tears of diamonds.
No. Wait. This one's the best. This one's the best one. Chuck Norris has a diary. It's called the Guinness Book of World Records.
Oh, yes, that's right. Are you reading this from something?
Yeah, I had to pull up my Chuck Norris joke list that I...
This one, Tom's got the best one because he knows how much I absolutely love ICT. Greatest three letters in the world ever. ICT calls Chuck Norris for confirmation.
That's so good. That's so good. Oh, God.
You guys Tiger's in on it, too. This is freaking great. Oh, jeez. Come on, let's go.
Sellers are trapped again.
They're filling in this low volume, though, right here.
Oh, yeah, I think I'm in a bad spot here. I got trapped. I'm trapped with other sellers, I think.
Oh, I'm trapped too, but I'm hanging on. I mean,
this is right around my 9 a.m. We're actually just tagged that 9 a.m. anchored view up that I have on the ES for the session. So
yeah, we came right up to it and pulled back.
Yeah, I'm trapped here. The market trapped me. Well done,
Let's
market.
see if we get a nice down leg. Here we go. We're going down. Let's break down. Here we go.
Maybe not. Maybe the sellers are
Let's go.
serious.
Is this the move right before we get off the segment? Come on, break through. Come on. There we go, ES. Down to 40, down to 39. Keep going. Get up on this. Come on. Let's go. There we go. 38. Push.
Let's get some volume. I'm not seeing much volume.
No, but it's okay. What up, Mr. T? TV in the house.
looking at other names here, Meta, Tesla, Microsoft, Apple, they're all down right now. Not massively or anything, like between 0.25% and 0.75% on the day.
Come on, here's the move. Let's go. Let's get the move. Let's get the move. Sam, are you still short?
Yeah.
All right.
Finger on flatten just in case.
Nah,
Every time heavy volume comes in, it gets trapped. It is getting ridiculous.
We're good. ES is good anyway. I can't speak for the Nasdaq, but the ES is good.
See, every time heavy volume comes in, it looks like they get trapped. I hate this market. This is like I said, it's opposite day. Of everything upside down.
Tom, you got long on that move up. That was awesome. Good for you. Good job, buddy. Took a small profit. Perfect. Perfect.
Oh, come on. What is this?
Any kind of green today, I think, is good. You know, if you did decide to, if anybody decided to trade this morning, to trade at all today during FOMC day, exiting the day with green is, I think, a good thing.
At this point, it's certainly
Yeah.
this far in front of FOMC. My God.
Yeah.
Let's go. Drop down. Who wants to take us out? Who wants to do the outro?
I think.
Yeah.
I think I'll do it here. So we got 1 minute left here. We're coming up to Tiger's news segment that everybody looks forward to. Always bringing the energy and the passion. Right after Tiger, we'll have the metals segment where Chris will break down gold, silver, etc. Great stuff there. Good 10-minute segment there. And then right after that, we'll have the Forex Fire trading session with both Tiger and Richard. Always a good time. So stay tuned. Hang out with them, and then me and Daryl will be back for the Mag 7 Madness session, and then FOMC time, baby. Everybody in the house is going to be back.
We're going
to
stream.
FOMC.
We're going to stream it live too. Just so you know, we're going to have a little section of the screen. We can watch good old Jay Powell and see what's going on. So don't want to miss that. Come back in and watch it with us.
Definitely, it'll be a fun time. So make sure to stay tuned, everybody. We'll see you later.
Take care,
guys.
everyone.
Take
Trade
care.
safely.
All right. Peace.
Guys.
Well, good morning, traders. Welcome back to Forex Fire, where the coffee's hot, the charts are hotter, and central bankers are still pretending they know what's going on. Let's get right into it because today's calendar looks like a buffet of rate cuts, oil shocks, and data that's more mixed than a bag of Halloween candy, or Halloween candy in our case. First up, the Bank of Canada just officially trimmed rates by 25 basis points, dropping the policy rate to 2.25%. That's 2 cuts in a row. And Governor Tim McAuliffe basically said, yeah, inflation's cooling, growth's slowing, time to ease off the gas. The Bank of Canada's monetary policy report confirmed it. Demand's soft, inflation's calming down, and the Canadian economy is jogging instead of sprinting. The Canadian dollar wobbled at first, then boom, oil came to the rescue. Oil traders woke up happier than Texans after a power outage. Crude inventories fell by a jaw-dropping 6.9 million barrels, way more than expected. That's not a draw, that's a magic trick. WTI prices popped higher, giving the loonie a caffeine boost and making energy traders smile like they just found an old Bitcoin wallet. Macklem's press conference kicks off at 9:30 a.m., and traders will be listening for whether he hints at another rate cut or just drops the mic and walks off stage. Now to the U.S., where housing is doing its best impression of a flat line. Powell's probably rehearsing his speech right now. We're not panicking, you're panicking. Pending home sales came in at a 0%, missing the forecast at 1.6%. In other words, nobody's moving, not even the housing market. With the Fed meeting today, that weak data gives Powell and company even more reason to ease up. The street's fully expecting a 25 basis point cut, bringing the Fed funds rate down to around the 3.75 to 4% range. Powell's tone will be key. Will he sound calm and confident, or more like a guy trying to explain inflation at Thanksgiving dinner? Either way, traders are ready to dissect every single syllable. And across the pond, the UK dropped a few surprises as well. Mortgage approvals ticked up to 66,000. Net lending rose to $7 billion, and money supply expanded by 0.6%. Translation: the UK consumer might be down, but they're not out. Still borrowing, still spending, still buying those 7-pound coffees. And meanwhile, over in Europe, Spanish GDP held steady at 0.6%. Switzerland's UBS economic expectations improved to minus 7.7, which sounds bad, but hey, it used to be minus 46. And Germany's 10-year bond auctions went off without a hitch. Over in Japan, consumer confidence ticked up to 35.8, proving that even in a world of slow wage growth and a weak yen, optimism is still alive, or at least caffeinated. So the mood across the markets, let's call it cautiously bullish with a side of espresso. Central bankers are cutting, oil's ripping, gold's holding above the $4,000 mark, and traders everywhere are squinting at their screens waiting for Powell's next move. That's your midweek rundown, traders, the kind of day where anything can happen and probably will. Coming up next, Chris dives into gold, silver, and beyond, followed by the main event, Forex Fire, live at 10:45 a.m. Central Standard Time. Keep those charts loaded, your stops tight, and your sense of humor tighter. It's Wednesday, and the markets are just getting warmed up. Last thing to jump into the Chuck Norris bit, the Fear and Greed Index is just a measure of how much Chuck Norris is smiling that day. So that's all I got. Back to you guys.
This is Chris from Hola Prime taking a look at gold, silver, and beyond. The gold market, of course, is where we start like we do every day. And the first thing that I will say about gold, or really all of these markets, is be careful. In fact, you have no business trading them today. I understand that there is a Federal Reserve interest rate decision, and I understand that it is going to move the market. The question is how is it going to move the market? If you do feel so inclined, make sure your position size is small. I am speaking with 20 years of experience here, telling you that you will do something dumb and cause some damage to your account if you are trying to trade the announcement. All things being equal, let's look at the possibilities here. Jerome Powell, a notorious fumble artist when it comes to the press conference, will release they will release the interest rate decision. I don't think they'll surprise the market. Eventually, the Federal Reserve does what Wall Street tells it to, and it's telling them to do a quarter basis point or a quarter percent interest rate cut, and that's pretty much unexpected. So there will be a knee-jerk reaction. That's not people trading. Those are orders being pulled out of the market and all the algorithmic games that go along with it. What you all have to do is try to figure out what the statement is, if they added or removed something, and then your job is to beat the algorithms that read that information and make huge decisions in milliseconds. Not an easy job for a retail trader, who generally speaking is a few seconds behind the market anyways. You don't get instant communications no matter what anybody tells you. You don't pay for it. So, with that being said, the next hurdle is the press conference. The press conference is where things will be determined this month. Unless, of course, there's no cut. If there's no cut, then the dollar's going to go screaming to the upside and it's going to wreck everybody's portfolio, sans mine. So with this, pay attention to the reaction to the portfolio, but your real signal is probably going to be about an hour after the decision, maybe two, and then maybe the market moves in one direction. It is worth noting that we are sitting right around the $4,000 level in gold, and that makes sense. It's a nice place to just kind of hang out. I imagine there's a million options traders here playing around. So everybody's happy. By the end of the day, quite a few people are going to be miserable. The 50-day EMA sits down here at 3868. We break that, 3800. We break 3800, it's going to collapse. This is a market that got way ahead of itself. The volume started to spike. Notice that when all the euphoria reached its peak, we're actually down quite a bit, about 7% from there. So let's take a look at the short-term chart. And you can see the 1 hour chart is still fairly bearish, despite the fact that we have bounced. And I think that might be the real tip-off here. Nobody is expecting the Federal Reserve to keep rates where they are, so that would destroy this market if they did. However, the cut is already baked in. You can't react to that. Everybody knows this. The question is going to be, how does the market respond to that? So a little coaching tip here. Less analysis, more coaching at the moment. In order to read the statement and make the correct prediction, you have to know what it means. You have to know what has been taken out of it. You have to know what's been added to it. And then you have to know what millions of people around the world are thinking about it. In other words, it's an impossibility. So what you need to do is let the market tell you where it's going. A fresh new low, that's a bad sign. We're probably going lower. If we break higher, I really don't think gold's clear until we get to about 41.50 minimum. I don't see that unless Powell explicitly says, I'm going to kill the dollar. Unless he says something that outrageous, you're probably looking at best a move back into this consolidation. And to be honest with you, for those who are bullish gold longer term, that's not the worst thing that could happen. We could hang out here for a while, just get the market used to being up here, and that could cause some bullish behavior. You can work off this excess froth either with a vicious pullback or some time. Time is the more reliable one from what I found, quite frankly. So remember, volatile market, everybody in the world's paying attention to it. You have to be careful. As a general rule, in a situation like this, I tell people cut your position size in a third. Half minimum, third ideally, maybe even a quarter. Because the money you think you're going to make won't change your life, but it could change your account status if you're wrong. So over here in silver, it's been very bullish during the day. But again, bouncing from the 50-day EMA, that's kind of an obvious trade. We still find ourselves below $50, and I think we're in a state of flux, and that's what makes this so difficult. Because it's really not until we break above 50 that we get to some kind of historical bullish behavior. If you look at a long-term silver chart, and I'm talking the last, I don't know, 50, 60 years, every time we get in this area, all hell breaks loose. That's happened again, although we don't have the meltdown. Watch $50. If we can't get above there, there's your cue to start joining me with my puts in SIL. Granted, I have limited risk. I'm perfectly willing to take that if you're trading futures. Good luck. If you can break down below the 50-day EMA, then I think silver falls apart. Again, let's look at the short-term hourly chart. This is a market that is trying to make a higher high, but you can see it is struggling. I think by the end of the day, you are more likely than not to see this in gold and silver. A lot of this type of action, and then you'll be left wondering what it is to do next. And that's why you have to watch these higher time frames that I have brought into focus. Now let's take a look at some of the peripheral markets here. There you go. Look at copper go. I told you there's a chance we are going to break out to the upside, and right there, by the end of the day, you should have a clear signal, would be my estimation and my experience. It's not financial advice, but I'll tell you this, I will be long either copper via a CFD product, or I might even go into a base metals ETF. That way I can get exposure to zinc and aluminum and a bunch of other ones as well. Because if Uncle Jerome sounds really dovish today, that leads to more investment. Another thing that has not been reported, and I might even pull this up. Let's see if we can make sense of this. Soybeans. Look at this. So we continue to skyrocket. Why is that? It was announced that the Chinese bought 180,000 tons of soybeans from the United States today. Let's pretend that nobody knew anything ahead of time, but that is a sign that perhaps the situation between the United States and China is starting to get even better, and copper will be a beneficiary of this. Copper might be your sleeper market. I've been telling you for a couple weeks now, it's a nice range-bound market to buy on dips. We could break out, move to the upside, measures to basically 560. So watch this one. This is a great way to make money because it won't give you indigestion watching it most of the time. Let's take a look at palladium. Palladium trying to fight back. I think palladium is an interesting market. I think we're going to be somewhat range bound. This will be influenced by U.S. automakers who are presenting blockbuster numbers. For an economy that's falling apart, we certainly are selling a lot of cars in this country. So palladium, of course, very sensitive to this, and I think it may stay somewhat elevated in relation to some of the other markets. If it breaks 1,500, it might be an interesting place to be as well, although I fully respect the fact that most of you don't trade palladium. I can't say I blame you at times, but it certainly is a nice trend right now. Platinum kind of hanging around 1600. This is going to move with silver. If silver takes off to the upside and breaks 50, then this thing takes off. If silver collapses, 1500 gets violated and platinum drops pretty significantly. And finally, let's see what the bond markets say or think that Uncle Jerome's going to say. Pulling back a little bit. That's interesting. So rates are rising ever so slightly. I would not read too much into this, but it is worth watching. Could lean to a little bit of dollar positivity, but don't worry. Jerome Powell will say something stupid during the press conference. A lot of this action, he'll flub the questions, and it'll cause chaos. That's been the pattern for about 3 years now. So just be aware of that. That's why you have to be very careful. We don't have a guy like, even Bernanke was a little bit better. But back in the day, we had a Federal Reserve chairman that would come out and say exactly what's going to happen. Powell seems a lot less sure, and that causes a lot of chaos. As usual, keep your position size reasonable and trade carefully. Today and the next few hours is going to be difficult. Plus, we have the Canadians, we have the Americans today, we have the ECB tomorrow, and the Japanese on Friday. So a lot of room for danger here. Trade well.
Tiger, can you hear me? I think you need to unmute your mic there.
My goodness.
There we go.
There. I know you can hear me now.
You're getting old now. Can you hear me all right?
Oh, that was the first time I failed to turn myself off mute, I think. So
All
there,
right.
I'm writing it on the calendar.
No worries. No worries.
Yeah, you
getting
sound great.
old, getting forgetful. Just kidding. Looking as good as always.
That's all I'm going for. How's your
Good
day
stuff.
going?
Not too shabby. Looking forward to the FOMC rate decision, as well as obviously everyone else in the world that do trade. Follow the financial stuff imagings for Fed Chair Powell's speech thereafter, right? I think that's where the real gist of things are going to lie. How the market's going to react. So to those that are new to these releases, the market can react quite volatile when the rate decision comes out. Obviously, everyone thinks that he's going to cut by 25 basis points. Sort of maybe baked into the market already. But what happens if he doesn't reduce the rate? I think that's going to cause chaos. Anything can happen. So do be careful when you trade around that time. We're also going to be streaming the show live during one of the future sessions later on. I think during the Power Hour session. Will that fall under the Power Hour session? Yeah. So the futures coaches will have the actual stream live with them as they tackle the markets and see how the markets react. So that's going to be very interesting. So to all our viewers, please do make sure you attend that session. So interesting stuff. As I mentioned, the speech, whether it's going to be a bit more hawkish or dovish, whatever the case might be, that's where the real movements are going to happen, and see how the markets react, digest the news, whatever. So things can go either way, as experience has told me. So I will not be trading during the afternoon. I'll retake things tomorrow and see where the markets are at. give it a bit more time to digest, if that makes sense.
We'll be sitting on our hands, right?
Yeah, definitely. With popcorn.
Yeah. With popcorn, that's right. Yeah,
we'll watch the futures coaches trade it and see what they can get up with there.
Yeah, the CME, I mean, it doesn't say 99.9%. It does say, I think, 97.3 or 97.7% chance of dropping. So you're telling me there's a chance they might not. Well, tiny chance, but
weirder things have happened before, right? So we'll see.
Weirder things have happened.
Yeah.
I think it was about the same percentage chance back in September when they cut. So yeah, we're pretty well bracing for the drop, but yeah, like you said, I mean, even whether it's baked in or not, I mean, we'll definitely still see some swings. So that's one thing I can take a look at whenever we get the mice charts here in a few minutes. We'll take a look back in time. We'll go into the Wayback Machine for September 17th on some of these majors.
Maybe let's switch to your charts and then show us what you got there, Tiger. Very interesting. Take us
we are on my
back on a tour on history.
Back on a tour. Yeah. Well, what happened the last time we dropped rates 25 basis points? Well, here's euro dollar. So it would have been 1:00 p.m. my time here in the Kansas City. So what happened? Well, we jumped 64 pips in that first 15 minutes, but over the next couple hours, we dropped, a ton. Let's take a look at here. Top to bottom here, we dropped about 107 pips. So this is very similar to yesterday. Yesterday we were talking about the CPI report and how it affected the Aussie dollar pairs.
Yeah.
So pretty similar thing. We had that big spike up. So this is where it sucked in all the buyers for the euro US dollar pair. And then what happened? The big banks rug pulled them and just totally sucked up all their stop losses and took price the other way. So this is a common occurrence. Here's the pound dollar. You're going to see a similar story, right? Had a big spike up, big drop after. What happened to the dollar yen, which is the highest ATR pair when it comes to the majors? Okay, this is the opposite case, since the dollar is the base currency. But only this time we dropped about 80 pips, and then the banks took price the other way throughout the intraday session into the Asia session and jumped up 204 pips from the bottom.
Gracious, yeah.
So this is another case of sucking in the shorts and smoking them fools, right? That's not my statement. That's just a generic statement in the trading world. Sucking in the shorts, smoking them, right? I'm not that cruel. I just regurgitate what I hear in my learnings.
And Canadians, did they drop their interest rate?
Yeah. So yeah, exactly. So today they dropped theirs, and that was at what time of day was that again? That was 8:45 my time. So yeah, that would have been over here. So we're still dropping on Canada. There's 8:45 my time. So right here, they dropped theirs 25 points, and out came the bottom on the dollar CAD. But doesn't matter. I mean, dollar CAD is going to be a very tricky one. So if I had to say stay away from any one currency pair today, it would be the dollar CAD, at least until it kind of rebounds. Because not only are we getting Canada's 25-point cut, but we're going to get the dollar's 25-point cut here in about T-minus 2 hours or so. And same thing. But yeah, what happened on the September 17th for the Canada dollar CAD pair? Okay, same thing. Okay, big, gigantic, ugly drop, sucked in the shorts and smoked them. Only this one happened even quicker. So we had the
big time.
It's a smaller ATR pair, so just keep in mind, everybody, it doesn't move as fast as like the dollar yen. It's basically about half of it. So, but even so, still dropped 35 pips, and then the banks took it the other way and moved it another 60 pips upwards. So that's a big move on a pair like the dollar CAD. That's a big move, big spike. So this is the exact same price action I was showing you guys yesterday. Only yesterday was the CPI for the Australia dollar. So we're getting the exact same thing. This is going to be an account killer. There will still, unfortunately, be a lot of people trying to call this. Okay, they're going to see that drop, and they're all going to be shorting all the way down, and then they're going to get rug pulled. So that is of number one importance today. Be careful in and around that decision. And as always, when you see these volume spikes, that's when you know that there's still a ton of manipulation happening.
Yeah. Better to
whenever
be
you
on the
start,
sidelines, right? Protect your
exactly.
accounts.
When can I get into the markets? Well, whenever you start to see the volume kind of die down a little bit, whenever this thing starts to trend, it might take a couple, 3, maybe 4 hours, right? But however long it takes is however long it takes. So just be careful about it. We want everybody here, not only today, not only tomorrow, but a month from now, a year from now, 5 years from now. So please be careful.
It's a long haul, right? It's better to grab your popcorn, see the action across the board and all the markets you like to follow, and sit on your hands.
Sit on your hands.
That is
take your
what
mouse.
I will be doing. So, not that I
Put
can
your mouse
recommend
behind
you
your
should do the
computer if you
same,
have
but
to.
it's probably the better
right.
sort of thing to do.
Or you can unhook your mouse, right, so that you don't have any chance of grabbing
itchy trigger fingers.
Trigger finger. That's right.
Yeah.
So what happened with Australia last night? Well, they basically that's big. They basically increased their inflation actually went higher than expected. So let me
1.3 or something.
Yeah, let me bring this down a little bit. Okay, there we go. So the numbers I told you guys was, and this here is the projections. Okay, this was the previous number. Sorry, I cut off my diagram up top, but previous report, this was the expectations, and this was the actual numbers. So yeah, the quarter over quarter number from 0.7, they forecasted 1.1, but it was 1.3. Okay, the year over year was 3 to 3.1 was the expectation, but it was actually 3.5, so that's pretty high.
Yep.
And then obviously the other one, the trimmed mean CPI quarter over quarter, 0.6 to 0.8, actual of 1. So Aussie dollar had a great report for the currency, not so much for Australia's shoppers and people buying gas and pocketbooks and all that kind of thing. The stock market, right? So here's that report.
I've got a lot of Australian friends, and they always moan about how expensive it is there. It's not just in the States; it's across the whole world, right? So, but they particularly, people are struggling quite a bit.
Wow, that's too bad. But yeah, this is showing why right here. I mean, there's the CPI release. Now this one maps the year over year just to keep things a little bit higher time frame. But yeah, like I said, that number 3.2, obviously bad for the stock market, bad for their pocketbooks, but good for the currency. It's unfortunately a double-edged sword, right?
Yeah.
Regardless of what this report comes out doing, it's going to be good or bad for one or the other, right? So just keep that in mind when it comes to all the inflation reports, the PPI reports, the PMI, well, not the PMI, but yeah, basically the CPI, the PPI, the PCE to a point. But that's just kind of the relationship it has. So with that bullish inflation report, Australia's percentage is actually up to 62.5. So it's now one of the higher currencies as far as beating expectations. So if we go back to my gold chart where I have my speed gauge, get an updated look on this, and the only thing that's changed is that Australia number. Yesterday, I believe it was right at 50-50, or maybe it was, I think it was 50% yesterday. So just in one report, we jumped 63%. Yeah. So it's now the second strongest currency as far as beating expectations. In other words, outperformance, economic outperformance. So that's the way to think about this little speed gauge. Okay. Are the reports outperforming or are they underperforming? Well, 63% are overperforming or outperforming. Canada's still up there with the 75%. And then dollar there still at the 50%. Swissy still the caboose at 20%. But the cool thing about this gauge is, Richard, we've actually finally went back over 50% on a global basis.
Okay.
Because we were down at like 38% at one point, slowly got up into the 40s the last week or so. And now we're over 50. So this is starting to look a little better when you aggregate all these percentages, the 8 major currencies, right? So so yeah, just think of this as its own index of the major currencies in currency trading, right? That's kind of the way I look at it. So starting to look a little bit better. Starting to look a little better.
Let's hope that continues, right?
Yeah, for sure. For sure.
Excuse me, guys.
Richard, you'll be happy to know, just looking at our top setups updated from yesterday. Look what's there. Look what's in the middle. There's your Aussie New Zealand.
Ah.
It's now a +6.
I'll definitely have a look at that a bit later.
Yeah,
+6.
+6, yeah.
Mm-hmm.
Yeah, that strong CPI reading for the Australia dollar, actually, it brought 3 Aussie currency pairs on the buy list. And the rest of them are like, there's some 4s and 3s. And I think on the short side for like the Euro Aussie, Pound Aussie, they're neutral, but they're getting lower. So they're about a -3, -4 to buy the Aussie on the other end of that. So short those currency pairs. But but yeah, nothing's changed at the top. Still got the main U.S. indices up here as far as that goes. But oil did jump to 9, to a very bullish score of 9. So we'll have to definitely take a look at that as well. Bitcoin's pretty well the same. I did close out my Bitcoin trade yesterday for a small profit. I think it was like $87 on my bigger account. It just didn't have the wheels to break a swing high. So yeah, I just took what the market gave me, just a few bucks. That'll be enough to go buy my Halloween costume for this weekend's Halloween parties I go to.
So what do you normally dress up? Let me know. What do you dress up as?
Oh, they joke. Well, I don't know. They joked
Count
at one time.
Tiger.
Somebody told me at one time I should get the Borat mankini. I thought, no, I'm a little too high for that.
No. Spare me that image in the back of my mind.
Yeah, I would need a better tan than I got. I'm 100% pure white boy. Better not do that.
Jeepers, yeah.
But yeah, we got the Aussie pairs, Aussie New Zealand, Aussie Swiss. The FTSE is up to a +6, so that's new on the list, I believe. And then the CAD Swiss. So keep in mind the Canada dollar on my speed gauge, not mine necessarily, but that's the most bullish pair. And then the Swissy, again, is the most bearish pair. So just looking at the speed gauge we just went over, that's going to be one of the main ones I keep my eye on as well. It's not the highest score compared to a couple of these Aussie pairs, but it's the strongest overperforming currency versus the strongest underperforming currency when it comes to the fundamental report releases. So I would suspect that would probably go up a little bit, but nevertheless, it's a +5. It's just barely on the list, so is what it is. So we'll definitely keep an eye on that.
Hi, James. I see James in the chat there. Sorry, Tiger. He's long
Hey,
Aussie,
James.
So he's been joining.
What's going on? Long the Aussie here. Yes, sir.
The Aussie.
Yeah, we're going to see if I can find me a spot too.
Yeah.
I know Richard's interested in Aussie New Zealand, so that's good. Yeah, Aussie dollar, Euro dollar is still on the list, and then Euro CAD, the only bearish item that I'm tracking, and still it's just too far away from any major supply zones. So really, I'm just not interested in Euro CAD at this time. So
yeah, the Euro dollar has sort of been hanging in there, right? While the pound US dollar has been rather weak, huh?
Yeah, I was keeping an eye on this 1 hour demand, but as you can see, it just went
different directions at the moment.
Yeah. So I was looking at this 1 hour zone yesterday, but we never did get this close above the double top here. So yeah, whenever it did drop into the zone, obviously you can see it just wicked through it. So just keep in mind, everybody, this is an if-then situation, but it did not work. So it did not climb, it did not close. Therefore, this is a wash. All right, this is a wash. So I'm gonna go ahead and delete that as far as a day, or as far as a 1 hour zone. Yeah, got a hair in my mouth. Sorry. Yeah, there we go.
All good, all good.
But yeah, as far as Euro dollar goes, I mean, obviously we got a nice demand zone much further down, but we'd like to figure out a way to get in this thing where it's at. So, we had that drop. It dropped through that 1 hour zone. Now, can we possibly get a push and close above here? So if I could just move this over here, right? If we can get a push above here, then maybe we could take a look in this areas on a smaller time frame, see about a zone. 30-minute, 15-minute. Okay, so here's a 15-minute. So there's a couple 15-minute demands here I'll be keeping an eye on. There's one. There's one here. that I'd like to keep an eye on. There's one right here I'd like to keep an eye on. So this is the exact same thing I mentioned yesterday, the if-then situation. If it pushes and closes, then when it returns to one of these demand zones, I may look to get into an entry. But it has
if
to
it
show
goes
strength.
that low, I've also got did a bit of analysis on AUD USD. I didn't mark it up nicely previously, but yeah, once you're done there, I'll just continue with the AUD USD, the Aussie.
Right on.
When you're done.
Right on.
From
and
my
then yeah,
viewpoint.
preferably all this would happen obviously a couple hours, 3 hours after the rate decision. I don't want this happening anytime within that hour before or hour after, because I'm just not going to be interested. So so perhaps like I said, 2-3 hours after the decision, if it drops into this zone after it shows strength, perhaps we'll look for an entry on euro dollar.
Gotcha.
Let's see, what else did I have? Oh yeah, Bitcoin. So yeah, just a refresher. I got into this 1 hour demand zone. It broke through this daily 4 hour supply. It closed on a very tiny time frame, so it didn't really prove itself as strongly as I wanted. Nevertheless, I did jump into that position when we returned. Price did push up to that top. I ended up raising my stop loss under some of these lows, these swing lows. And then you can see price finally came down and tapped me out. It's about $87. I think like $15 on GUI trades or something like that. But yeah, we'll just reevaluate. Bitcoin is still giving me a bullish score. Not too sure I'm excited about any of this. Maybe it wants to drop all the way down to my demand zone down here. That would be nice. Okay, the 100,000 level we were talking about, or basically 101.6, and I'd be interested in getting in a position. So not really anything at the moment for Bitcoin. What else did I have? Yeah, Aussie, New Zealand. I know you're going to look on that, but I'm just going to real quick show. Obviously, I've been talking about this 4 hour daily demand zone for a couple weeks now. We got this double bottom, liquidity, stop losses underneath, unfilled orders, really good place. But now that it is up to a bullish 6, it pushed quite a few numbers. I did kind of identify a 30-minute demand right here. So this is another one I'm going to keep an eye on. We had an awesome, with the release of the CPI report last night, Aussie strengthened really hard against all its peers. Aussie, New Zealand, tiny ATR, doesn't really move a ton, so it didn't really move up a lot when you're talking pips. But when it comes to, comparison to the ATR itself, what is the ATR? Yeah, so it's only a 40 pip ATR. So that basically means it moves 40 pips on average a day, ladies and gentlemen. That's not a huge mover. Nevertheless, it moved 53 pips in that 30-minute candle. Okay, so that's a huge move for the Aussie New Zealand. Really is. So I'm just looking for a simple retracement back to that CPI release price point. And you can see that white line. That is, I think, a 10-minute demand confluence. Okay, so if I can drop down into here, then that might likely be where I look for a reversal, a break of structure to the upside on a smaller time frame for a possible entry, and just take it up to this double top. Because here's the cool thing with Aussie New Zealand, it's created this double top on a smaller time frame. Okay, double top. So what does that mean? It means liquidity up here for the traders shorting in this area, shorting in this area. Stop losses up here, stop losses up here. If I'm a bank, right, if we drop into the demand zone, I want to make my next move up and collect all this liquidity to fuel an even bigger move if needed. So we'll see how that goes. Aussie, New Zealand. And then lastly for me at the moment anyway, CAD Swiss. Again, Canada's the strongest currency. The Swiss is the weakest. So I did identify a small, 5-10 minute demand zone pretty close to the top up here. So just basically going to make this a strong versus weak potential trade. So we're just going to hopefully we can get a nice little drop into there for a push back up to the top. Got to be aware of this overhead supply though. We do have a higher time frame supply zone confluence up here, 4 hour, and I think that's a 1 hour up here. So got to be aware of that. Okay, there's a 1 hour inside of a 4 hour. There's a white line, so that means there's a 15-minute confluence as well. A lot of different eyeballs. right? Keeping an eye on that. Obviously, the higher probability one would be way down here on this 4 hour or even this 4 hour. But again, CAD Swiss, I don't think moves a whole lot. So I'm just looking to take a simple little retracement back to one of these smaller time frame zones and just get a few pips, not get greedy, but just take a few pips out of it. So
I hear ya.
That's my main alerts, I think, at the moment, Sir Richard.
Gracias, senor.
Yeah.
Right, I think I'll just stay with the Aussie theme here, so we can switch to my screen back end. Just want to look at the Aussie dollar. Show you a little bit of the geometry I've done on there. So are we on my chart? Looks like we are. Cool. So very simply put, let me first get rid of this pitchfork that I've got in here. And you'll see me do this quite often. AUD, USD, clearly very zigzaggy in an upward type of trend, right? Although very messy. Trying to make sense of that from an Elliott wave perspective, good luck. But what is interesting, this is why I use market geometry quite often, is I love my zigzags because they're the most common correction that you would get, right? Or ABCs, as they also known. So if I were to slope a pitchfork into the direction of this move lower, and because corrections are a bit more less steeper in nature than trending markets or very strong impulsive moves, they tend to find support at your median lines. In this case, with a downwards move at a lower median line, and the opposite, there will be an upper median line very, very often if you're dealing with an ABC. So I think this is potentially what we're seeing here, just a corrective structure. ABC, yes, it underthrew this lower median line on one occasion, 2 occasions, but you know, it sort of halted it in its track, right? Then we start getting this build up to the upside starting on the 14th of October. So if I have to get rid of that, and this is how I normally would, you know, approach the analysis. This gives me an idea that maybe that was it now. Next move higher to potentially follow. Yes, we're getting a very nice, strong movement back to the upside. So what I'll do next is use the 3 most prominent anchor points prior to this bounce. And generally you want to start using your market geometry tools. In this case, if you want to use a pitchfork, sometimes I use channels. You want to do it when price actually confirmed that, in this case, a higher low is in. Now it's not confirmed because price hasn't broken above this previous high that was set on the 17th of September, right? But what is interesting is that you can start seeing whether price is respecting the angles that was generated by selecting these 3 anchor points. Now the one there's actually 2 settings I'm really interested in here. Not the shift per se so much, but the modified shift for maybe interim or near-term targets. A reason being is that price, as you can see in the past, and this is like last week or so, a few weeks back, sort of like bounce between this 50% dash median line and this lower median line, right? And then we had what we call a zoom through this center median line, and we had a beautiful retest of it, what I like to call a kiss goodbye. All right, so this angle is already telling me that into the future things might start getting a bit more impulsive. Maybe we start moving a bit more sideways, but that this angle will probably be very useful to find areas of support resistance, maybe set targets if you do get into the AUD USD. For me, bullish, right? You know, unless something happens now with the Fed rate decision, the talks afterwards and all that sort of stuff, the lip flapping, and something changes. So this is the setting I've got on my chart for the time being, and I'll keep on doing that. If we get a nice pump to the upside, for me at the very least, I think we got a target at the 50% dash median line, because price likes ping-ponging between these median lines or these angular support and resistance lines. And even to the upside, higher than that, maybe all the way up to the upper median line. Now, as time goes by and price does its thing, obviously the angle slopes a bit more upwards, so you will have to adjust these potential targets dynamically. All right, so I'm just thinking this is a very useful angle to use at the moment. That being said, if price continuously starts moving or impulse to the upside, showing that behavior that we've seen in gold, that we've seen in the indices. Obviously a different market, but just looking at the behavior, then it could be useful to then swing to a original pitchfork setting, right? Which could give us even higher targets upwards to the upside, at least before this previous high is taken out, if price takes out that high, right? I'm just bullish at the moment. Price can start moving sideways, then we'll deal with that if that happens. But even here you can see, and this is quite often, if you want to start deciding if you want to use a specific setting, again, looking at what price action done, support at the low median line. Even here, it sort of like vibrated above and below this 50% dash median line. So if price really continues to stay impulsive to the upside, then we could, if price goes upwards, maybe even get a much higher high out of the price action here. What's also interesting here is this movement that we've seen prior to this, what I still think was a zigzag. It counts beautifully as a 1, 2, perhaps 3, 4, and a 5. So a 5-wave sequence. Then what you get afterwards, generally a zigzag, because it's the most common. It could be any other corrective pattern. It could be a triangle. It could be a double zigzag to make things more complicated, whatever the case might be. But then one would then expect to price then at least reach this previous high, or then if it's going to continuously trend upwards and set, start really trending more than all of this previous behavior that we've seen, then even price could go even higher. That's what I'm trying to say there. So I'm pretty bullish on the AUD USD. Price has started showing impulsive behavior, but I would like to see some more before I start using that setting. So for the time being, I'm going to stay here with, and it was actually the modified shift pitchfork that actually works a bit better. So if we go downwards, maybe we find support again at the center median line. That's around 0.6587. But continuously higher, if we would get into trade, I would then personally like to rather get into a trade tomorrow. Then these could be upside targets for me. Right. Might as well look at the AUD NZD very quickly. Myself and Tiger, I believe we were looking for a much deeper decline prior to discontinuation back upwards again. Price hasn't reached the previous high here on the 7th of October, earlier this month. So, it could still head lower until that is broken. We could still correct sideways, but it does look like what we've seen here was maybe a double zigzag correction to the downside, which has then ended and the next move higher started, right? I'm still thinking, if you have to zoom out here, just looking at this sequence from this low back in April, before this bounce has started, that we still in a third impulsive wave here. Wave 1 being the high here on 15th of May, wave 2 being the low on the 3rd of June, and then a very strong impulsive move. Typical of third impulsive waves. I still think that is underway. So I think we're heading towards the, what is that level? 1.1490. Maybe to the upper end of this upper median line, that also, that's actually a center median line that I've got there. But that high being that high that was set in September 2022. All right, so multiple years back in the past. So it looks like price is gunning for that. This correction that we've seen here is for me a little bit too shallow and too short-lived to indicate that we've seen this, for example. But either way, even if it was and I'm wrong, I still think we're heading higher. Could be then a fifth before a larger decline. We could still be mucking around a little bit longer. If we do without breaking this previous high, maybe that 4 is then going to actually get into the area I was interested. And then we get a breakout of that 2022 high to complete the fifth wave. But I'll give it the benefit of the doubt here and think that we're still busy with that impulsive third. We'll see. If price breaks that previous high, we're going to, get a lot of, you can't really say breakout traders, because I don't think these guys has been waiting since 2022, unless they're thinking we're going to get a very strong breakout and, want to take maybe like a break of that high. But from past experience, price tends to break very important levels and maybe fall back into the range, or not really give you that sort of impulsive behavior out of the breakout as many people would expect. But anything could happen. I'm still thinking that third wave is underway. Just wish I could get it in a little bit earlier, or a bit lower down, should I say. So yeah, that's my view on AUD NZD. Dollar index, really not much has changed, right? It's sort of been running sideways, clearly waiting for the reaction out of today's FOMC rate decision and the statement afterwards. So I won't spend too much time on that. Bitcoin moved into that balancing area that I spoke about yesterday. This, after what I was saying, could still have been the end of a megaphone pattern that occurred here on the 17th of October. It's a 5-wave pattern that expands. Previous waves make, slightly higher highs, lower lows, sort of sweeping above and below these previous swing points until it comes end after a 5th wave. We label them A, B, C, D, E's. People call them megaphone patterns, expanding triangles, or whatever the case might be. But price hasn't gone through that balancing area. I was really hoping that it would. And I was saying that if we do get a nice break above that, that would, in my mind at least, confirm for real, at least in my mind, right? There's no such thing as for real in the markets. Anything can happen. That there's a high opportunity, or probability is probably the right word to use here, that E-wave has ended. What concerned me yesterday is, as I mentioned, what is your most common corrective structure? ABCs. So if we to slope a pitchfork into the direction of that move higher, and use the shift pitchfork setting, which is my favorite setting to use when I think we're dealing with a shift pitchfork. Where's my little gear? Then you can see price struggled getting through the upper median line. So there is a chance that this was just a counter corrective structure, maybe just a single zigzag. All right, because price failed to get through that upper median line. It's typically where in a bouncing market that moves opposite a downwards decline, i.e. a corrective bounce, is typically where they find resistance, and that's been the case so far. I'm hoping that to keep this trade alive, or the bullish bias alive, at least for me, where's my bar tool, that Bitcoin will hopefully start doing this overlapping 5-wave structure. So for this to take effect, price should not break below this low from the 22nd of October. I don't have that price exactly now, around about 105.873. If it finds support above there and we pinch another high back into this balancing area, then we got a 5-wave format, and a 5-wave format typically kicks off a new trending direction, right? In this case, bullish. And we'll call that a leading diagonal. I can't remember where was that leading diagonal that we've had. I think it was in the Nasdaq. So that is what I'm seeing on the Bitcoin US dollar. It needs to find support really soon and make another high. That will raise my confidence that that E-wave was indeed the end of a megaphone pattern. Talking about those leading diagonals, just quickly going back to the Nasdaq. This is exactly what I mean by a leading diagonal. It's a very overlapping price structure. Let's go to a 4-hour. And I know there's a lot of colors on here, but try to bear with me. You got this high highs, slightly higher highs, and higher lows, moving in a 5-wave format. 1, 2, 3, 4, 5. Sharp decline, which is typically what happens after a leading diagonal for a wave 2, and then as price start moving up, we got the third impulsive wave, which I still think is underway here. It might actually be very close to the end of the third minor wave of this impulsive third. Then get a fourth, then get a fifth to then complete the third wave in a larger degree, then a decline, and then another move up. But I won't bore you guys with that too much. We are still sort of, testing this upper median line of this pitchfork. It has worked really well previously as support and resistance, these angular lines, especially this instant here where we had that second wave decline. So this third wave could come to an end at any stage, but it could also act as gold did, right? Gold just moved up, and we had a very super impulsive third wave that extended into, I don't know, into the heavens for a very long time until it doesn't, right? And then we can get a fourth and then a fifth at a later stage. So we'll see how the indices react after the rate decision. I just wanted to show you guys what I'm seeing on Bitcoin with regards to how the pattern should evolve for a leading diagonal, because that's for me now the only thing. Yeah, it looks like Christmas. For sure. I get told that quite a lot, but I'm trying to get the colors as best I can so it doesn't hurt your eyes too much. So just quickly, before I switch back to you here on Bitcoin, this is what I will need to see. Failure to break below again. Find support here, higher or wherever, but fail to break these lows around 106.16 and another punch higher. This would really, really be good for Bitcoin. I think over the near term at the very least. So again, let's see, guys. Let's see. I'm not trading anything at the moment. I bought Bitcoin on a Saturday from an exchange around about, when was it? 106, slightly above 106. So I'm not in danger as yet. I had a bit of a drawdown here, slightly towards my price, not even much. Then got, overconfident again, and now we're sitting, sweating a little bit again. I'm sure a lot of Bitcoin traders would be, especially the holders. So that's what I'm seeing on Bitcoin. Yeah. What else you got there, Tiger?
Yeah. I mean, I'm actually keeping a little eye on Ethereum, just kind of piggybacking off the Bitcoin thoughts.
ETH.
Yeah. I mean, it's already hit an alert that I had, a 4-hour daily confluence.
Mm-hmm.
We did get the push up. It's a mile away from trying to break a confluence or to break a structure. I mean, unless you were to look at some of the smaller time frames, like, even something like this very first one here. So we still haven't gotten it. It's just been going straight sideways since the middle of the Asia session. Excuse me. So, at this point, it's just been given 16, 18 hours of sideways price action on these smaller time frames, whatever that is. But I don't know about this. Perhaps maybe if it breaks this new low or this new swing right here, we get rid of some of these old lines. But this is one I like just because the Bitcoin is looking so good. I just think that the picture, for now anyway, I just think the technical picture looks a little better on Ethereum. So just looking for it to confirm itself, because we did hit that higher time frame supply.
Gotcha.
From back here. Man, throat's crazy today. So yeah, we hit that supply. Now this should be deep, a far enough away move to where the 4-hour and the daily can kind of get its bearings together and push it back the other way. So we did get a nice wick underneath the 4-hour candle that formed yesterday. We just didn't push very high up. So at this point, I'm just going to be a little picky with it, get a little bit of a break of structure, and at least break this structure for a return down to try to find another demand zone in here to take it up.
Gotcha.
I just think that might be a little bit better of a more safer of a play, rather, especially in light of all these rate decisions and things of that nature. But if we can get a new demand zone created somewhere in this area, that would be a potential trade for me. But again, I just need it to prove itself and just go ahead and pop above these highs right here, and then return, and then we might have an option. And then now the other thing too is I'd want to definitely be aware of this new supply zone right here on a 1-hour time frame. So there is there's some a little higher, but as far as taking a profit, remember, if I'm trying to short the market off of these supply zones, I prefer the one that's the closest to the origin of the strong move up, which would or a strong move down rather, which would be clear up here. And let me get that drawn real quick. So that would be the spot I would want to short. Now this doesn't count because there was a gap and price revisited, closed the gap, and hit the supply zone for unfilled orders to the downside. So this is no longer good for me. This is good for a potential short if I were to have that bearish bias, which I don't. But and then when it comes to shorting here, it would have to absolutely prove itself. I wouldn't take this short anyway, just because it did hit the higher time frame supply demand. But if we reverse it, and obviously I've got more of a bullish bias on this Ethereum, just like Bitcoin. If this were to play out and I get into this trade off this newly created would-be demand zone, okay, future demand zone, I would definitely want to be careful with taking a profit right here, right? Potential take profit. Now I would trail my stop up, okay, lock in those gains, and then just kind of squeeze it in a little bit. Okay, if worst case scenario, I've got some profits locked in this area, but might as well see if it can, rather than closing it out right at the proximal line of the supply, just give it a little wiggle room to see if it has enough strength to push up to the next supply zone. So that's what I'm going to keep drawing up on my screen for the moment. But yeah, I'm not even going to worry too much about putting an alert yet, because I have to have this part of the price action play out first. And then if I see that, then we can start putting an alert in. So just something I was looking at. Plus Ethereum, I think they had a good piece of news on, what was that? I just saw a good piece of news for Ethereum. Where was that at? Somewhere up here. I don't know where it's at. Ethereum. Oh yeah, there. So they had, what was their news I just saw? Fusaka launches. Okay, so let's see here. Ethereum Fusaka upgrade successfully debuted on the hoodie testnet without any hiccups. So it looks like they've got some more high important stuff going on in that respect. But yeah, I'm not a big crypto trader. I don't really know a ton about. I'll be fully transparent with you guys. I'm not the most up to date on a lot of the currency, fundamental news and all that, but that did look good. Bitcoin looks good.
I'm a bit more of a Bitcoin guy myself. Traded Ethereum back in the past when there was some really good arbitrage opportunities between exchanges abroad and here in South Africa, where crypto tends to be a bit more expensive, especially during the very big moves that we've seen upwards. I think it was 2017. Can't remember, 2018. You could do an arbitrage between an overseas exchange to South Africa, and at some stages have anywhere between 10, 12, maybe even 15% profit on just moving crypto from one exchange to the other. But yeah, I traded Ethereum back in the days. I haven't traded since, and also I don't know, I haven't been watching a lot of Ethereum news. But what's the founder again, or one of the co-founders? I think it's Vitalik Buterin or something like that. Has been very quiet. I haven't heard much from him. And then obviously we don't really know who Satoshi Nakamoto is either.
Right.
Still
There's so many
left in the dark with that
theories.
one. So a lot of conspiracy theories, but either way, Bitcoin has proven itself. So I think it will continue to do so. Just sitting through a lot of worrying times on the crypto markets. But
Yeah, that was just more a technical play off of Bitcoin, the Bitcoin positive fundamentals. But
gotcha.
Did you see this big drop in supply of the oil inventories?
Yeah, I was just going to say, so I pulled that up on the side here. It was minus 6.9.
Yeah, that was huge.
That's huge.
0.9.
That's huge. We can actually switch to my crude oil chart if you want to. You can have a look at that.
Yeah, I was just going to touch real quick on it, just showing where I'm.
Oh yeah, we can stay with yours. Tell me what are you looking at there. Oh, there's mine's on right now, so
no, that's fine.
We'll switch back to you. We'll switch back to you.
Yeah, no problem.
So I still have this. This is on a daily time frame. It could be on a weekly, whatever. But I've got a channel sloping downwards. Been containing price recently. Well, reasonably well is the word I want to use. And then we had this bounce that failed to break these lows that was set in April this year. And price found resistance at the center channel line. Okay, we've since seen a move lower, but now we're getting that little bit of bounce, potentially because of that miss on the inventories there. I'm still hopeful that we could see prices get up into the 64.72, maybe even as high as the 66 region. Maybe an ABC type of move into there and then short it. So long term, I'm still pretty bearish on WTI. I think we could still break those April lows and maybe even make it down towards this lower channel again. Maybe even as low as the 50 or slightly below it before we get a real powerful move upwards. But this is also crude oil, guys. Can be a lot of intervention coming in. Obviously, Saudis or whoever is affected by prices of crude might want to buoy it up a bit more. So they, a lot of things can affect crude oil, not just, global sort of wars and those things. So from just a pure technical perspective, let's make that clear. I want to see price make another move higher, finally break through the center channel line, get into that area, and then get a move lower. Alternatively, I might have to reconsider where the price is going to get there, obviously by looking at what price would do over the next coming days, maybe weeks or so. But if we get price failing to break above last Friday's high, we get a strong continuation low, maybe started thinking that we are actually going to break that April low sooner rather than later. So yeah, interesting. But let's see. It is a difficult market to try to analyze, that's for sure. Yeah, so what was your thoughts on crude there? Maybe we can switch back to you. We still have some time. I'll look at the dollar yen a little bit later as well, so I want to show you something there. But let's get back to yours, Tiger.
Yeah, well, I mean, just in lieu of the very bullish reading that we're now getting, I mean, again, we're getting a +9. So if we're looking at oil, all the sentiment numbers are in favor of the bullish bias.
Yeah.
Seasonality, it's a good season for oil. Trend, okay, it's went across when you're talking the what is it? I'm trying to remember the trend numbers that we use in this algorithm. I think it's a 4 and an 11, 4 and a 12, something like that cross the upside. So that's looking good. And then when it comes to the economic data for U.S. oil, benefit or pro bullish bias, you got the positive GDP, the MPMI, the manufacturing PMI, that is, the retail sales, the PPI, the interest rate decision as well, and really only a couple knocks against it. And that would be the services PMI and then the employment change numbers. So that's when you're just looking at the raw data, the hard data, right? The hard facts. I mean, that's why it's given a nice, very bullish reading. So, but yeah,
but OPEC intervention can swing things as well, right? Whenever they want to.
Yeah, exactly. And not to mention the big decrease in supply, which obviously means higher prices, right? Or theoretically anyway, historically. So we'll see how that works out.
The markets these days tend to do the opposite.
Exactly.
They just tend to not make sense. Yeah.
The challenge right now is, though, we have bounced into a daily and a 4-hour confluence as far as supply. So definitely see it going down.
Hey, can we switch to Tiger's screen? I believe we're still on mine now.
Oh yeah, back in. Yeah, so we did bounce into this confluence of supply zones over here on Friday as well, like you mentioned.
There we go.
And that's a big reason why it's going down. But I've already went over this like 2 or 3 times today. I'm still looking for the breakout of this area so that I can see that this has some strength. So even going further back, we talked about closing that gap way back when. Okay, we did hit this higher, this much older demand zone confluence back on Cinco de Mayo. I know I've beat that with a dead horse. But yeah, we ended up tapping that 4-hour nicely, like you can see there, and then it just went up. In the wake, it creates a new daily and a 4-hour demand. Problem is, though, it wasn't even strong enough to bust through this much higher daily 4-hour confluence. So I'm still looking for this price action to take a stab down here, especially now that it's especially now that it's a very bullish reading from all that economic data just went over. So it's nothing that's going to happen today, likely not even this week. I mean, I don't know. It depends on what the interest rate does for oil, but I'm still requiring it to break this structure and close so that I can potentially get a pullback on that confluence.
All right.
And then buy the other side. But this is much smaller time frames than what you're looking at, right? Because I totally agree with you. Higher time frame, this sucker's just been going nothing but down. So the trend is your friend till the bend at the end. So I'm just trying to look at it from a little bit smaller time frame to see if I can't squeeze out a few pips. But definitely not on my radar immediately. I do have that alert down here, but if this alert hits and this price action hasn't been broken the structure, then probably not going to be too interested in it. So a lot of if thens.
Fair enough. If then, yeah. By the way, guys, we've got about 5 minutes left here during the Forex Fire session. So if anyone's in the chat there, let us know if you want us to go over any of the markets we haven't covered. We'll be more than happy to do that. Otherwise, if you haven't done so already, please hit the like and subscribe button, guys. Also, join our Discord channel if you haven't done so already. Great community on there. All our coaches on there. Great support team. It's a very, very nice trading community. So please do join our Discord channel if you haven't done so already. And you can also stay updated with any sort of discounts that we have and all those sort of things. They do post them there in the Discord. So go check it out if you haven't done so. Cool. We're back in my chart, so that's good. I just wanted to look at the dollar yen.
Oh yeah, that's exactly what I was looking at. The one I went wild over on yesterday.
My trigger finger was getting very itchy to get long here. Again, it's using market geometry, slope to the upside. This time a channel. Look where price moved into that area that we identified yesterday, potential support area. It also aligns with this angular geometry line. Again, just a line I took parallel to one of the channel lines and projected from a previous miss of one of the channel lines, and we pulled back right into that area. But I can't take this trade going into the rate decision and the conference afterwards. We'll have to see how things materialize. I still think that after this double top that price created here on the 27th of October, that we'll eventually break out to the upside. Or even better, maybe do something like this. Get into this gap, maybe start slowly building up again and then get long, which will increase the profit potential if you take a swing trade. So so I was like watching this today during the morning hours my time. I was like, should I get long there? We had a nice little bump upwards, but we're sort of in the middle of today's range here on the daily. So I'll just have to give it a bit more time, see how our price reacts. What's the dollar going to do? We don't know, but that's anyone's guess. It's anyone's guess. Yeah, so that's me, really, on the dollar yen. Say again?
I said it's going to get volatile, I suspect. I do know that.
Oh, yeah. Say that again. Dollar CAD, I mean, you looked at it earlier on. Same thing. Got a channel sloping upwards, where we're looking at a possible projection lower. That was yesterday at 1.3918. Price sliced through that, obviously, after the rate cut in Canada. And now we're approaching this fair value gap here. I think we're going to go probably slice through that. Again, anything can happen with the rate decision, right? We do have this market geometry line here, which is within that fair value gap around 1.3856-ish. Will that hold? Not sure. But yeah, a lot of things turn on its head a little bit. Just very cautious, and I think it's probably a good thing being cautious going into the rate decision. So yeah, that's me on the dollar CAD. We still have about 2 minutes left. Anything else you want to have a look at quickly, Tiger?
Yeah,
I think that sort of sums up my my viewpoint of the markets.
Yeah, just one last thing, and that was just kind of to review what I got excited about yesterday. Speaking of dollar yen, so remember I was talking, we have this double top over here on this is the 15-minute time frame. A higher time frame real quick. I was looking at this demand zone down here, confluence. Price did have a big push down. So my thinking was, okay, it's probably going to get magnetized at least to the demand zone. So from
magnetized.
And then bounce to clear the double top, take the liquidity. So I got excited about this supply zone on this 15-minute time frame yesterday. Remember, guys and gals, I pointed out this liquidity above this double top for a short potential short. Well, I was laying in bed last night, just finished watching a Rocky Horror Picture Show, and I was on my phone. I should have been sleeping, but that's when my alert went off. Price came in. I noticed that it did just peep out the top here. So at that point, I thought, well, I'll just let it go. Well, it just went like 2 or 3 pips more, and then the bottom fell out of it. So a wider stop, a little bit more balls, and then maybe that trade would have worked out. But yeah, I just stayed out of it, stayed safe. Realistically, I would have had my stop loss right about here, just full transparency.
Gotcha.
If I'd have done that, you can see I would have gotten wicked out by a couple of pips. But a little bit wider stop loss, that trade would have definitely worked out for at least a 2-to-1, 3-to-1, something like that.
Yeah.
So,
yeah. It happens,
54.
getting stopped out and then moving in a direction quite often.
3.5 to 1.
Quite often.
Because yeah, that was what I was looking at. But anyway, good stuff. Good show as always.
Good stuff. Thanks for that, Tiger. To all our viewers, thanks for watching. Please do stay tuned. We got news coming up with Sam next, followed by Max 7 Madness, and it'll take us into Power Hour as well as the closing bell. But we'll also be streaming the FOMC thingamajig live, so do stay tuned for that. It's going to be quite exciting. Let's see how the markets react from my side. Take care, goodbye, and all the best. Stay safe. Adios.
Adios. Take care. Have a good one. Stay safe.
Good day, traders. The big story across Forex, futures, and crypto today is simple. Everyone is holding their breath for the Fed. Traders are pricing in a 25 basis point rate cut from the Federal Reserve later today. Markets care less about the cut itself and more about what Powell signals for December. That, are we done cutting or are we still cutting? Tone from Powell is what will decide the next move in the dollar, gold, equities, and even crypto. In Forex, the US dollar index is sitting just under 99, basically flat but tense, because no one wants to take a big directional bet before the Fed speaks. Euro US dollar is stuck in a tight range around its 50-day moving average, with buyers defending dips, but nobody brave enough to chase higher. Pound US dollar is heavy and under pressure near 1.32, which is close to the 3-month low for the pound versus the dollar. Sterling is weak for 2 reasons. First, the market thinks the Fed might still sound cautious, which supports the dollar. And second, the UK fiscal story is spooking investors. In the UK, the Chancellor is signalling possible tax hikes and spending cuts to close the budget gap. And that combination, slower growth plus more tax, makes the pound less attractive. Euro Great British Pound is grinding higher towards the 0.89 handle, with traders buying any pullback, which tells you this is not just a strong dollar story, it's also specifically pound is the weak link right now. Over in US dollar, Canadian dollar, price is coiling just under major resistance as traders wait for a double central bank day. The Bank of Canada and the Fed both announced policy in the same session. Markets expect the Bank of Canada to also cut by 25 basis points today. So if Canada sounds more dovish than the Fed, US dollar, Canadian dollar can pop higher. The other FX pair people are quietly watching is the US dollar Japanese yen, because the Bank of Japan meets tomorrow and expectations are no hike, which keeps the yen weak unless the Fed comes out ultra dovish and collapses US yields. So the tone in FX right now is calm on the surface, but this is the eye of the storm. If Powell hints at more cuts, dollar softens and risk currencies like the Aussie and pound could get a bounce. If Powell hints at a pause, dollar rips, and the pound US dollar probably loses 1.32 fast. Moving to futures, index futures in the US are green into the New York session, with S&P 500 futures up around 0.25% and Nasdaq futures up closer to 0.5%. That tells you traders are leaning towards a soft landing narrative again. Slow inflation, rate cuts still coming, but no immediate growth panic. Dow futures are flatter, which fits the rotation we've seen. Tech and AI-linked names leading, old economy lagging. Under the hood, you're seeing big individual stock moves in pre-market that shows how sensitive this tape is to earnings. Chip and AI adjacent names are getting bought, and some software names are getting hit hard if their guidance doesn't scream growth. Volatility is still bid though. VIX futures are up a couple percent. That's classic pre-Fed hedging. Nobody wants to be naked going into Powell. Commodities gold futures that bounced back above $4,000 an ounce this morning after a few days of bleeding lower. That rebound in gold is basically the market saying we still don't fully trust central banks to land this smoothly. If the Fed hints at deeper cuts, real yields drop and gold tends to rip. Crude oil is pretty flat around the low $60 on WTI, so the inflation threat from oil is not the story today. The US 10-year Treasury yield is hovering just under 4%, and that level matters. Under 4% keeps the Fed can ease without breaking stuff narrative alive and supports equities, crypto, and gold at the same time. Above 4% and staying above, risk assets usually wobble. So if you trade S&P or Nasdaq futures, watch the 10-year more than the candles. In Europe, the FTSE 100 futures are supported by miners and metal strength, and that's been helping keep UK large caps near highs even while Great British Pound is weak. That's the classic UK trade. Weak pound is usually good for the FTSE multinationals. On crypto, Bitcoin is sitting around the $113,000 area after getting shaken out between $111,000 and $117,000 in the last couple sessions. That whipsaw flushed a lot of over-leveraged longs in crypto futures, wiped out funding, and basically reset positioning. That's why you're not seeing panic selling today, just quiet chop. Ethereum is hovering around $4,000, down a touch on the day, but still holding that psychological level. Altcoins are mixed, small red across most majors, but nothing like a full de-risk. Here's the interesting part. Spot Bitcoin and Ethereum ETFs keep pulling in money. We're talking hundreds of millions in net inflows just yesterday alone into Bitcoin and Ethereum spot products. And that is institutional money saying, we still want exposure, we're not leaving. Total crypto market cap is off about 1.5% on the session, sitting just under $3.9 trillion. So we're not in meltdown mode. This is pre-Fed positioning, same as FX. I do excuse viewers. It seems seems I have a little error here. So to sum up today's news, the FX in FX, pound is weak. The kids in class, dollar is coiled, and the euro US dollar is waiting for Powell. Futures, S&P and Nasdaq are tilted bullish, but VIX and 10-year yields don't get cocky. Gold reclaimed $4,000 and is acting like insurance again. Crypto, Bitcoin is calm at $113,000. Leverage got cleared out. ETFs are still hovering coins. Everything today comes down to tone, not numbers. If Powell sounds like he's still worried about growth and is willing to cut again in December, that bullish risk, dollar drops, gold and crypto pop, equities squeeze higher. If Powell sounds like we cut, but that's it for now, that bullish dollar, Great British Pound, US dollar likely breaks down. Nasdaq cools, Bitcoin could see one more flush. So stay nimble. Don't marry a bias until Powell opens his mouth. Up next, we have Mag 7 Madness with Daryl and Paul.
All right, are we on? I think we is. We are live. We are live.
Would help if my mic was on again. So
Yeah,
we are live.
It's
We are live.
okay.
How was the break? How was the break?
Good. Break's good. Break's good.
Awesome.
Yeah, just watching this market before Powell, just doing its thing.
Yeah. I mean, I will say the Mag 7 today is a little bit of a mixed bag. So a little bit of a mixed bag to be had. So good bit of diversity in price action between them to go through for the next hour or so here.
Yeah.
We can start on my screen with Apple, and then we can go down the list, and Daryl can take over as well here. So just switch to my screen.
All right. Let's do it.
Apple might be the one actually that might be one of the more dull stocks in terms of like what we're doing at the moment as of the current price action. We're literally right at point of control from yesterday's session. 269 was point of control that I have marked off from yesterday. So
I do too.
a bit of a comfort area that we are currently in. We opened up at 269.33, so not too far off from point of control of yesterday. We were able to stay above value area high for a little while until the indices, when the indices started trending downwards a bit in the later part of the morning here. We saw that sell off. Obviously, we completely rotated through value, broke previous day's low, and now we're right back into yesterday's value. So this, to me, this is just like, I wouldn't even be trading this, to be quite honest. This would just be a completely pass on the intraday for today with Apple. As far as, a longer term perspective on Apple and everything, I'm not going to necessarily comment. I mean, a nice uptrend over the past week or so that we've now held. I mean, not even a week, obviously. If you keep looking back further and further, you're going to see we've had a super nice uptrend for, I mean, it's just like the indices, very, very nice, uptrend there. But generally speaking, I mean, of course, bullish, just like the markets are in general right now in the longer run here until proven otherwise. But for the intraday, I mean, I'm just staying away from this. This is a bland area for price action to be trading at. So yeah, I've got no other comments on Apple aside from VWAP also being right above session VWAP being above value area high. So maybe price action might want to try to get up to the 269.40 area right below VWAP before maybe finding a little bit of resistance. And then possibly coming back down into value. So but yeah, that's really it for me. This is a super bland name today.
Yep. Totally different than how it's been rocking for the last week, like you said.
Yeah.
So let's see if we get my switched over here.
Yeah, we can switch to Daryl's screen and we can see his distributions.
There we go. All right. So obviously last Wednesday, so we got a full 5 days plus today's developing. We're just obviously trending to the upside. Very simple to see. But if you look closer, like you said, we are trading currently below VWAP and right at yesterday's point of control. What's interesting also, we had the gap that we haven't come back to still, going back between basically the gap from the weekend from Friday into Monday's open. We haven't come back. Maybe we're going to get there if we do get softer here on this stock. One thing I will say, point of control currently is, and we've got a pretty even price exploration, if you will, distribution today. Point of control is currently up here around, what do we got? 270.30, we'll call it. But if we keep trading down here, Paul, and here's VWAP obviously coming down, so we're below that. we're right on point of control from yesterday. But this little area here could become if we get more volume, this will be point of control. So now we'll be down low. We'll have point of control below yesterday. We'll obviously feel treat the auction like we like prices down here. So this could interesting to see what it does here. If we just kind of rotate along point of control, or we do get up and kind of bounce off of VWAP, we could come off and come down. But I wouldn't really get involved in anything. We're right on point of control. Like you said, not much to do on the intraday. Maybe we watch it later on, but I think all of these will move around once FOMC gets announced. But until then, nothing to do.
Yeah. No, I don't think there's anything else that needs to be said about Apple, to be quite honest. I agree.
Moving on.
And we're only an hour away from the FOMC statement, so we are nipping on the heels of this ever momentous occasion that we get to see once every month or once every other month here. So,
and we're going to stream it. We're going to stream it live. So stick around if you guys want to watch it with us. That'll be great.
Definitely.
We'll have live commentary, and we'll get to listen to not only see the announcement, but we'll also watch Powell and his conference a half hour after that.
That will be very fun. I'm sure that's going to be
slow and boring as it is. It'll be fun.
Sometimes
we'll make it fun.
Yeah, exactly. We'll make it fun for sure. Sometimes they organically can be very fun, just like listening to Powell and however he's feeling. Sometimes
questions.
Exactly. Some of the questions really make him answer in more fun ways sometimes than others. So we'll see what kind of day it is today with the questions and whatnot. But on Amazon, a little bit more interesting here.
Look at Amazon here.
Amazon, I like that it's resisting the previous day's high level of 231.50. So we're seeing consolidation below that level, and we can't seem to pierce through it. So I do kind of like that. I like the short on Amazon a little bit. Oddly enough, I mean, Amazon's been on an absolute tear, as we all know.
Yeah.
So it's kind of weird to be on the short side of the bias here. So if I was looking to get short, I'd want to be getting short closer to the top of this consolidation range, as close to previous day's high as I could get for a rotation down into the value area high of yesterday, which is $230 and $230.10 roughly. So I'd be willing to risk probably about like 20 cents to make like $1.40 or something like that. I don't want to risk, especially with a stock that's been on such a heater. Kind of don't want to risk too much on going, fading the trend of sorts. So, but I am relatively short biased, believe it or not, because of this recent price action over the last hour and a half of time or so. But yeah, that's really it. Because aside from value area high of 230.10, my point of control from yesterday that I have actually is pretty low here. It's all the way down at 227.22 or 227.25. So a really large move would have to occur. Pretty large downward move would have to occur for us to break through 230 to then rotate all the way through value. Not saying that it couldn't happen, of course, but I'm not going to count on that to occur, is my point. So, and VWAP, actually, session VWAP real quick, is joined right along with that 230.10 level of the value area high level from yesterday. So
yes, it is.
Look at that. Look at that.
I know. Yeah, it's interesting. We've been talking about Amazon just ripping. Are we at all-time highs with Amazon? I can't remember now.
I will double check for you.
I think we are.
We are close. All-time high would be 242.50.
Okay. So, but interesting, we had that open bar first 5 minutes. We did extend up and we pulled back because we opened about 25 cents higher than we were the high of yesterday. And we opened up with a little bit of a gap, but we filled all that, came back down, came up again, retested the open. Basically, we didn't get back to the actual open nor the actual open swing high in the day. But like you said, Paul, we are consolidating right around the value area high of yesterday. We are kind of, we're certainly above VWAP, but VWAP's right here. We're close to everything. So, I don't know. I mean, it depends on what happens here. It depends on how this reacts to Powell, but I think a lot of this stuff is kind of baked in on these, at this point. It's either going to, I don't know, like, however, if there's a 25 basis rate cut, which we all expect there to be, what's going to happen? I mean, are these going to rip up just because they finally hear it? Are they going to be excited, or are they going to fall back? I don't think so. So I would just sit and wait and maybe see what happens later on the day. But I mean, you said you're what? You're on your hands here, or you're thinking of shorting?
I'm thinking, I would think if we get a little bit of a pop more, like if we could pop up about 20, 25 cents or so here,
yeah,
I would look to possibly get short, put my stop above the high that consolidation area to then look for rotation down the value area high. So,
okay.
Yeah, that's really it. Yeah.
I'm good with that too. Yeah, I mean, like you said, and you look at the chart, we opened up high, we pulled down, we came back up. We're trading at the high of yesterday. So, I mean, I think, like you said, long term, I'm definitely bullish on Apple, of course. It's just on an intraday basis. Are we going to get a pullback to give it an opportunity, or we get a pullback to go long? We'll have to wait and see.
Yeah, definitely. And then I guess the second biggest gainer on the day of the Mag 7, Google. We can move on to Google if you want to, or I can start off with Google.
Google has earnings release today.
You're right. Yep.
Okay, so that's something to remember. At the close, we got three of these names here that are going to be announced. We've got Google, we've got Meta, we got Microsoft, all coming out after the bell. So
yes.
Crazy. Plus, we got some other big stuff like eBay, like Starbucks, like, I mean, massive heavyweight hitters today and all week as we keep talking about earnings. But for Mag 7, we got three of these boys coming out after the close. So that's something we want to be mindful of, irregardless of FOMC, because that's going to be probably the bigger driver on this. Google is acting. It looks like Amazon, but it's not, because we opened up down low and we've been climbing up. So Google has been marching higher, very bullish here. And I mean, God, I don't know what else to say. I don't know. With earnings coming out after the bell, I don't know if I'd want to be in a position. I mean, maybe you can get in and just front run and say, oh, I think this thing's going higher if you want to carry overnight. But, that just depends on how you're trading stocks and what you're doing. But, man, I don't know. This thing could also continue to climb into the close, and then you get out right before the close.
Mm-hmm. Yeah, this is a strong name for sure. I mean, undoubtedly a strong name, but we are at a weird point in the day because of the FOMC, and then on top of that, like you said, with the earnings, like those back-to-back heavy hitting events,
you just want to maybe wait and see, because
any trades you do take, I feel like any trades like that you do take on any of these names, to be quite honest, I probably wouldn't. I would be trading them in a way where I'm out before 2 o'clock. I mean,
I would
it doesn't matter. Yeah, it's just
I would too.
I just wouldn't be in them. But with Google, at least here, the only thing I can see, I mean, we're far above any levels that I have set for Google, honestly, from the previous sessions. So the only thing I could probably trade off from like a scalping perspective or whatever would be that we're in a kind of like we're even still
at 271.
I would something that you don't even like. It would be the fact that we're in a bit of a bull flagging pattern here. So
it's
not
that I don't like it. I just don't. I don't see. I didn't even recognize it because I don't even trade patterns like that.
Yeah, exactly.
But
So,
but to your point, and are we still sharing mine? No, we're sharing yours. But I mean, there's an upward distribution here, and it's a flag. It's a triangle. You can see it. So
yeah,
I just don't. My mind just doesn't recognize that.
right. So I just drew it out right here. So that little flag
There you go.
that's occurring at the
Yeah,
moment,
there
you know,
go.
you
See?
could look to get long as close to the bottom of that consolidation
There's my
range as
flag.
possible. You put your stop
There's my
below,
flag.
you hope that a breakout occurs, and that's really it. So, like, honestly, I mean, it's super simple, and I'm sure, you know, it doesn't have like that necessarily the highest probability. It's probably closer to a 50-50 chance, or maybe a little bit better than 50-50. I couldn't really tell you, but I definitely would keep super low risk on this. Like literally, if I was going to be getting in, I'd be getting in like, you know, in about 10 cents down from here. I'd want to get in at like 271.55 to 60 to then only risk like 15 cents or 20 cents, and that would be it. Like, I'm not gonna
It looks like it's not it looks like it doesn't want to it where it's at, it doesn't want to pull back more, right? It just, so you know, you could just, and if it does, like, you're out, and you just maybe could re-enter. If it does fall down to like VWAP or the lower distribution where point of control was early on, like the first 45 minutes when we opened up and point of control was kind of hanging out around 269. I mean, if it gets down $3 to $3, maybe, of course, get long, but I don't know if it's going to give us that much to come down here. So, like you said, just.
You could also wait for the breakout of the flag, like trend line or whatever, and then take it in whatever direction that it's going. If it breaks to the downside, as soon as it confirms that, you just get in short or you get in long, whichever way it does go. And then that's it, you know, and keep your risk tight and wait for confirmation. But yeah, strong name, super strong name. Unfortunately, we're just far away from any levels that I would normally trade.
But agreed.
So with that being said, I guess we can look at, you want to look at Meta?
It's the second highest earner on the day.
Yeah.
Of these 7. So
yeah.
Let's look at Meta. Meta's a little down, but not, you know, not terrible. It's down.
No.
Maybe almost 0.5%. Meta's doing kind of what it's been doing all week. We opened up with the gap like we did with almost every one of these from the weekend into, it does this all the time, into Monday. So we've just been hanging tough here. We come down. Where do we come down to today? We come down to just a little below yesterday's range, right here, you know, 745-ish. And then where are we at? Well, no, I shouldn't say that. We didn't. We opened up high and we fell down.
Yeah.
So we opened up at, like 754.52. And we swung up as high as like 759.07 only to pull back down. So this does remind me a little bit of Amazon in the fact that we kind of tested the high of yesterday, fell back down, but we've got support here. We're holding this gap, and we've been kind of bouncing around here. Point of control is down low. We're right at point of control on the session. We are, you know, just under VWAP. So I don't know. I mean, we do have earnings also in this stock coming out at the close. So this could be, it could go anyway. I mean, I don't know how I feel about Meta, to be honest with you right now. I mean, everything's AI. There's been a lot of news yesterday that came out about Meta, positive news.
Yeah.
Very positive. A lot of joint stuff with NVIDIA. A lot of these names are doing stuff with NVIDIA and with, just with everybody. So, unless there's a shock in the earnings, I mean, I'm bullish as hell. It's just, where do you get in? Do you get in now or do you wait?
Right. Yeah, because you're seeing, you know, this is a classic situation where we are just, as of today, this is the third day of a kind of range in between 746 and 7, you know, that 759 area. So you've touched 759 twice, you've touched 746 twice, and right now we're hovering below value area low of yesterday. So, like, yes, right now it looks a little bit bearish in comparison to yesterday and where we've consolidated most of the day below 750 and 3/4, which is value area low from yesterday. So yes, that's a little bit bearish because price action is being accepted more at the lower end of yesterday's range. But that's not to say that you're not going to find support again at 746 or 745.50 for another rebound to try and get back into previous day's value. So, and then, you know, like we said, I think this is one of those situations where, especially with where we're trading right now, we're trading literally in between that 750.75 level and 745.60 level that I have for previous day's low and value area low. So trading right in the middle of that, like I wouldn't be taking a trade here. This is literally the flip of a coin. This is just,
you're right in the middle of consolidation on the 3 days of the week. And so, you know, we've traded above here. We've traded below here. We're back in range or right in the middle. It's just like you said, it's just, we're right in, it's like, you're just diddling in the middle, man.
No point. Definitely today's price action, you're just literally just smack dab in the middle. So it's like, just, I don't like it at all. I wouldn't be trading this name. I mean,
we're coming up to VWAP. We just came up and touched VWAP on the session, but you know, with 45 minutes out from FOMC, I'm not doing anything here, right? It's just, I'm not going to front run anything. Don't be a hero. Don't try to guess. Don't try to catch a big move to either side.
Right.
You try to do that, you'll suffer a big move. Typically.
Yeah, exactly. Yeah. The 45 minutes from now, things are going to be very, very volatile, I'm sure. So, or I would guess. So
I would think so. Yeah, for sure. Certainly more than they are now. Anyway, certainly more than they are now.
Yeah. Especially with the indices right now, the indices are just really just settling down. They're nothing really is happening. I think
calm before the storm.
Exactly, calm before the storm.
Before the storm.
That is it. Like, that is it.
Literally. No pun. No pun on Hurricane Melissa or anything, but just
talk about a terrible.
Are you gonna get hit with it? No, you're not. I don't think so.
No,
right? It's turning. Yeah,
it's turning away. But like, my gosh, I saw yesterday. I mean, Jamaica. My
186 miles an hour or something crazy.
Sustained winds. Like, my heart goes out to Jamaica, man. That is a terrible. I mean, there were gusts as high as 252 miles per hour. That is
really.
That is unbelievable. Like, that is just absolutely unbelievable. But yeah,
crude everything.
Oh man, that would any
country,
structure,
anything,
civilization would have a hard time outlasting that. So yeah. All right. So Microsoft, we can move on to here.
Microsoft's interesting. Microsoft is also going to be earnings announced at the close. And it's looking a little soft, kind of like Meta is, just kind of like Meta is. So yeah, I mean, it's interesting. Yeah. So we've been gapping. We've had these gaps. Obviously, we had the gap down here. Where's my pointer? This thing's just slow sometimes when I grab it. We had the gap down here from the weekend into Monday. We had a tight range Monday, consolidated, gapped up big yesterday. We talked about this. We ended up trading, kind of closing in range to point of control down here. And we had a large gap, especially from the open yesterday. Now, if I change this, I'm going to change this now just to the high of yesterday. And then we've come down. We filled a lot of this, but we still got a gap here. And I don't know. I don't know whether that means we may make an attempt to do anything here before we go long. If we do, or we may have an extreme reaction to the earnings or FOMC. I don't know. It's I don't know, man. I mean, you could look at this and say, wow, we're off even from yesterday at the high. We're down, God, what are we down? $12 almost currently. And that's a lot. But there's no guarantee we're going to go up there. The fact that it looks weak to me because, you know, we came up here, God dang it, why can't I grab this thing? We exhausted and we came down, and then we opened up, we went up again, and we exhausted and we came down. So it's just like we've tested highs, we've tested these areas. Yeah, they don't like it up here, right? Okay. Yesterday, this is all yesterday's value right here. This is it. And what do? We came in this morning, opened up, said, yeah, well, we don't like that either. We like being down lower. So we're currently trading, you know what I mean? Like we're currently trading down here. So I don't know what that means. I don't know if that's just
lack of comfort.
This.
That's all it is. Lack of comfort up higher. Yeah. Just we're not feeling comfortable. I mean, which is completely okay. I mean,
literally what it means when you're trading somewhere else on the auction. That's literally how to describe it. But I know it's just a little. Microsoft is again.
It's been on a tear.
It has absolutely been on a tear.
So
and maybe there's some profit taking in some of these names today too.
Could be. Exactly. And could be the case. Like you just see more people trying to, get some gains locked in before, FOMC or whatever with such a nice run up and maybe just like, hedge themselves a little bit.
Look at this run for most of the month of October. I mean, it's certainly from going back here, October 10th, the big Trump tweet sell off. And then we came down a little bit, but we've been ripping all the way up. No end in sight almost until yesterday and today. So I mean, we were way up here yesterday. We were way at the top, up here at 553, 40, I'll call it, maybe 553.60 even. I forget where we were, but whatever it was, we were up there briefly, kind of did a little bit of volume up there and then said, okay, it's too high for us, a little too rich. But the fact that we've been trading up here is still good. And I also think when we get to this next name on our list, after you're done talking about what you think about Microsoft, when we get to NVIDIA, which is next, the fact that NVIDIA, and I don't want to open the can here, but the fact that we're trading so high and $5 trillion market cap, et cetera, maybe that indicates to the sector that, hey, we're really rich here and maybe we need to take some stuff off the table, pull some money off. And that may be what we're seeing. And maybe we'll continue to see that over the next few days here. Just from the fact that NVIDIA is just rocking and it brings all these guys along with it, all the AI, maybe we'll get some profit taking.
Yeah. And as far as right now, like with where we're trading at right now in Microsoft, we can see we are very much resisting session VWAP at the moment, 539.21 or 23 or so. That's where session VWAP is. And over the last literally 2 hours, we have not been able to break above and close a 30-minute candle or any candle really for that matter, any significant amount of time for a candle to close above that level. So we might be I wouldn't be surprised to stay below VWAP here going into oh yeah, let's do that.
You're good.
Let's get my screen up. Production crew.
You're good.
Sweet.
You're
awesome.
Good now.
So I've just got the 30-minute charts up here or the candles up here. And we're just testing this VWAP ever so often over the last 2 hours. So I wouldn't be surprised to see some more consolidation below VWAP here going into 2 p.m. And then whatever happens at 2 p.m. is going to happen. And we're either going to go to try to get back into value from yesterday, which would be value area low would be 541.32. We would have to break above there to then rotate upwards for some bullishness there, or we rotate downwards to fill that that gap of sorts that exists between October 27th's high of day and the gap that we have from back on October 28th's open. So Yeah,
like I said,
still,
we're closing it though. We've been coming down, so that gap is a lot less than it was.
oh
right?
yeah,
I mean,
100%.
it's
There's
so
only like $4 more, if even that, not even.
if
So
that, yep,
yeah,
correct, agreed.
so that'll be that you could see that happening too, for sure. It would, I would have expected, with such a nice sell-off here in the early morning, I'm surprised it didn't make that more of an attempt to just come down a couple more bucks to fill that gap, and then before this FOMC situation, but it didn't. It's not as clean as I would have liked it to be, but that's okay. But I wouldn't be long at this point.
And it wasn't a clear rejection either. It wasn't like a V bottom. You know what I mean? It kind of consolidated there for a good 15, 20 minutes, just in that little area. So it could have come down. It just didn't.
Yeah.
Didn't at all. So
kind of got like a little reverse head and shoulders here at the moment. Got a little shelf and then a little head that dipped down.
There you go.
Buyers came back in, another little shelf, but can't break through VWAP. Just can't do it for some reason right now. For whatever reason, we're trading at 539 right now. Previous day's low was 540 3/4. So we're still almost $2 below previous day's low. So we'll see though. We'll see. We can take a check back at it in about 15 minutes or so after we look at the big boy here, NVIDIA, and we'll look at Tesla as well. But my goodness, Tesla is coming down a little bit. I mean, deservedly so. It's just run up so much in the last 3 days or whatever. And I mean, a high of 212, like right above 212, 212.16, the high of today.
You mean NVIDIA? You were saying
in
Tesla,
NVIDIA.
right? Yeah.
Right. I was just saying, like, we're going to check on Tesla and NVIDIA. So yeah, in NVIDIA here, we got a high of 212 or 212.19 or something like that, like right around that area.
Yes.
And then previous day's high is actually 203.15.
212.16.
Yeah, there you go. 212.16 for the high today, 203.15 or so from yesterday. We are getting closer to that level of previous day's high if we can drop down another $3.50. But again, not expecting too much more movement out of any of these for the next 35 minutes here.
Yeah, certainly not. No,
it's definitely sellers are coming in a little bit more here. They're trying to take a little bit of profit, but not the largest amounts of volume popping up for us today on NVIDIA, to be quite frank, compared to, look at the amount of, you can see the green volume candles from yesterday afternoon, and look how large those volume candles were. I mean, there were a lot of buyers at these higher levels in the 190s and low 200s.
And
so
we were getting all that news at that time yesterday when you and I were long on that ES move where we were just rocking.
Yeah.
And it was all that NVIDIA, more AI collaboration, more stuff with China. Jensen Huang was talking, there was just it was crazy. It was just so much stuff with Meta, with Microsoft, with Amazon, even Google. I believe, I can't remember. It was like everybody. It was like everybody and their brother wanted to get in on a big deal with NVIDIA. And this is obviously when Trump's been over there in Asia. He was he had left Japan after another deal, and he was heading to Seoul for the evening event, right? And then so there was just so much positive stuff coming out of the region, and tech and semiconductors and rare earth minerals and all the other, my God, it's just so heavy right now in this whole thing. But you're right. It was rocking yesterday at this time. And then we obviously gapped, and then we'll see if it does feel a little bit like Microsoft. Like we were just talking about Microsoft, how it came down. It's trading a little bit lower. Obviously, yeah, I don't know. I mean, I wouldn't do anything now.
Right. It's I know what you mean. Like, it's taking a breather just like Microsoft is. The only difference being Microsoft's trading where it is previous or compared to its previous day versus what Nvidia is doing. Nvidia's above its previous day's high, whereas Microsoft is below its previous day's low. So it's like that's the only difference. They're both taking a breather. They're just in different areas compared to their previous day's trading range. So I get exactly what you mean, though.
If we keep trading around this 206 ish area, $206 per share area, we'll build more volume here. We'll probably have point of control on the session drop down. It still doesn't matter. It's still higher than yesterday's total range on the session, higher than obviously point of control and everything from yesterday. So very bullish. Obviously, it's just a matter of will we get a little bit more profit taking here at all. There has obviously been profit taking since the high that we got to this morning. And I mean, everybody's just like, whoa, Nvidia 5 trillion. What the heck? You know, just you knew there was going to be some profit taking. There's just no doubt. So
yeah, it is. That is probably the case.
And they're still up almost 3% on the day.
I know.
That. You know what I mean? Like it's still, as much as it's come down, it's still up 2.9% currently.
It's fantastic. Congrats, Nvidia longs. Congrats, everybody. We did it.
Oh, my God. Everyone that keeps buying the freaking Nvidia dip. If I go to another barbecue and I hear my friends or anyone say, oh, they think they're so smart because they bought Nvidia, I'm like, oh, stop.
I know.
It's like,
gosh, man. I mean, it's kind of crazy to think like, you know, the stock split wasn't so long ago. And then on top of that, like it genuinely doesn't feel like it was more than a year ago to me when we were trading at $120 a share on Nvidia pre-split. So
pre-split, right.
Like this is like
then would be the 250 or what have you. Then they split 100. Now we're double the split, more than double the split. It's crazy.
Yeah, so that would be the equivalent to Nvidia, like 120 pre-split would be the equivalent to Nvidia trading at like $20 right now, essentially. Like it's just versus what it's trading at the moment. So
so nuts.
It's pretty crazy.
So nuts.
It's hard to fathom how quickly we came along on this Nvidia trade in general, with the progress it's made, but it's a good thing, though. It's a good thing. So, all right, Tesla. We can look at Tesla here. A bit of a snoozer, if I'm being quite honest, which is not normal for Tesla, but to me, it's a little bit of a snoozer here.
Tesla's got some news that's probably holding the stock back a little bit today.
Okay.
You know, we have the fact that there's been rumors of the board not willing to go ahead and sign off on Elon's bump in pay. Elon may leave. Revenue, sales are down. Sales on Tesla are down. I forget what it was. Was it in certain models or just across the board? But a little bit soft currently. But again, like you and I were talking, I think you and I talked about this morning, or was it? It may have been yesterday. But when you talk Tesla, you're not talking auto manufacturer. This is not GM. This is not Mercedes-Benz. This is not, Volkswagen. This is a company that is, yes, they make EVs, but they also are heavy on automation, robotics, and the like. And so, there's more to it here.
Yeah, of course.
And
of course,
man, I wish I had, God, it was I had something that I go through this stuff. Like I get all these newsletters and things, and I went through something last night and I saw it was the revenue on Tesla, and I wish I could pull it up.
Well, I was going to say, I could go through the price action real quick. If you can find it, then great.
Yeah. Go
talk about it for sure.
Yeah. Okay. Do that.
Yeah. Awesome. So I would say the reason why I was calling Tesla a little bit of a snoozer today is because, we're essentially trading in the lower bound of today's price action, and which is where we found a lot of just a general support, and where we spent a lot of time at throughout the day today. So we're trading at 458.90 essentially, which as you can tell, if you look at the price action,
yeah,
We've spent about good hour to an hour and a half in this relative $1 range or so between 458 and 459 half, between like 11 a.m. Eastern and 12:30 p.m. Eastern. And now we're back down to this area. So we point of control from yesterday proved to be some sort of resistance, as we tested that at about 1:10 p.m. Eastern this afternoon. So after seeing, okay, VWAP / point of control from yesterday is proven to be a little bit of resistance, and we're trading back below the value area low from yesterday. It's having a little bit of trouble staying afloat, just like the indices are, just like the S&P 500, just like the Nasdaq, etc. So it's kind of mimicking it, the indices in a boring way. But as far, again, like, I think you are, the point of today is to exercise some prudence, like to really be patient, be prudent, and just be smart. Don't try to make a trade happen right now. I think in the next 20 minutes or so before this FOMC statement comes out, and then obviously at 2:30 when the meeting starts, that's a whole other situation. But when the statement comes out, you're going to get algorithms reading through the statement within a half a second, and then moves are going to happen. So but it is good to know that, generally speaking, Tesla is kind of mimicking the indices. It's a little bit sluggish and boring to the downside ever so slightly. We opened up today at around 462.50 or so, and we're trading at 459.30. So we're only trading like a few bucks below where we opened, which is also...
We got as high as... we didn't... Well, we came to yesterday's value area high. We didn't get to yesterday's high on the session, but we came to value area high. So we tested that and we pulled back a bit. But, that's not a bad thing, as we've been talking. It's not a bad thing.
Yeah. No, exactly. We tried to find value at a higher area, couldn't, rejected it, rotated all the way through value. And that's exactly the story. I mean, couldn't say it better myself. And we're literally now, Tesla's literally at 459.73, which is my exact value area low level that I have marked off from yesterday. So this is just just more of an area to just keep your eye on. Like, this is to really keep your eye on and understand, okay, relative to the 459.75-ish level, where are we going to start to find new value after the FOMC statement and the FOMC meeting? Like, after this afternoon, where are participants going to find value? Above that 459 3/4 level or below it? Because if we start to find value above, that means we're accepting new price relative to where we are right now, and basically accepting price in the same area of where we traded yesterday. Or we're accepting below it and we need to consolidate a little bit more to the downside, maybe closer to like the 450 area, to then decide if we want to explore price action even further lower, or we can find some bidders start to come back into the market and find an appetite for Tesla to bring it higher. So my earphones went out there for a second, so everything was a little bit cave-like. So if I felt like I was in a cave all by myself there when I was talking.
That's
for a
funny.
second.
No,
But
yeah, that's fine. Yeah, I don't know. I mean, again, this is fine. We just sit and wait and see what the reaction is here. But I mean, you got with Elon, you're always going to have this stock. It's a bit of a enigma where you got a very outspoken founder. He's not a founder. He's not a founder. He's an outspoken CEO and biggest investor. But I couldn't find what I was looking for, but I did find some snippets here where European sales fell 10.5% as the Chinese automaker BYD has come over and kind of taken up a ton of sales in Europe. So that was a little bit of a notch against Tesla. And they're still doing the CEO search. They're looking for internal CEO candidates to take over for Elon. They're also searching outside, of course. But then there's some people saying that the stock could rip if they find someone else that's not as outspoken and have the politics that Elon has, and with X and all of his tweeting and everything else, right? It's just some of these, and it's no different. We see this all the time with these major, publicly traded stocks. They don't want the drama, right? Investors don't want the drama. The boards don't want the drama. But I'm sorry, Elon is damn good for this stock in this industry. So that's just my take on it. And I think they're just trying to hype it up here.
Yeah. And I don't think
I
haven't heard many
that damn thing.
And I haven't heard like too many headlines recently out of Tesla or anything, aside from the Model Y situation that they were gonna Elon was talking about offering a stripped down version of the Model Y and stuff like that a couple weeks ago or what have you, which people were underwhelmed with because they were thinking a completely new model was going to be coming out, and it was just a stripped down version of a model that already exists.
Yeah, exactly.
Maybe anybody in the chat that knows more about that situation could elaborate on it a little bit for us. But yeah, I don't see too much. And then just real quick, I do see a headline right now coming out from JP Morgan's Michelle. I expect the Fed to cut 25 basis points, as do all of us, and quantitative tightening. And I believe this is a risk management exercise. I don't believe they will see descents to the hawkish side. Yeah. Okay. Well, I mean, what's the guy? Dang it, I forget his name. The board member or the FOMC, the Federal Reserve board member that Trump had fill in temporarily.
I know. God,
that guy is probably going to be the only one.
Yeah, exactly. What's his name? I forget now. Yeah, I know.
Oh no, wait. He wants everything to be cut drastically. That's
drastically.
He wants everything.
He wants everything. He wants every.
Yeah.
He wants like 2 points.
Yeah. He wouldn't hawkish either. I'm thinking who's maybe I'm trying to think of any board member that would possibly be hawkish at this point.
Oh, I could see maybe Austin Goolsbee, maybe Kashkari, potentially.
I think it's one of those two for sure. I agree. They would be
just because they're pretty responsible economists, and I think they just want so much more confirmation and data. We don't have the data. We haven't had data for a month now, over a month, right?
Ooh, Tiger's saying Mirren. Okay.
Oh, Mirren, that's who it is. That's who the Trump appointed.
Got it.
Yes, correct.
Thank you.
Thanks, Tiger, buddy. I knew someone would do it.
I needed somebody with a memory to be able to.
Let's look at Starbucks. Let's look at Starbucks because it's coming out at the close. What is Starbucks?
Oh yeah, sure.
What is the symbol?
I used to follow Starbucks a long while ago.
I just gotta type it in.
There we go. It's SBUX.
Thank you. It is SBUX. All right. So Starbucks obviously changing their business model, changing their CEOs. They got this guy down in my area that keeps flying up to Seattle 3 times a week. Kind of crazy. He's the ex Chipotle guy. I mean, whatever. Hey, if they want to do it, who am I to say anything? Opened a gap down today. Opened down today. Kind of trading just in the middle. I'm just looking here. It's currently trading at 84.42. Okay. Been trending up. Been trending up most of the month. Wow. Geez. So it's had a good run here. At least going back to the Trump tweet. February. God, I did it again, Paul. I said February. October. I don't know what the hell is up with I don't know why, but yeah, October 10, Friday. You know why? I know why. Because I'm about to say Friday, October 10th, and I don't know why.
Yep.
That's what it is. But they've had a huge run up, 10, 12 bucks since that day. And so we've been selling off a little bit. Yesterday we kind of sold off into the close, and then today we gapped down again. Probably this was maybe profit taking. I don't know. I don't follow the stock enough, but I just wanted to look at Starbucks real quick.
Yeah.
Because just another major name at the close with earnings today for anyone who does trade or follow Starbucks.
And speaking of that, real quick, let's switch to my screen. I want to pull up a chart that still baffles me more than most to this day. Carvana is also coming out this afternoon. I do not understand how this company is trading at what it's trading at. I don't get it. I don't understand. Back in 2023, we got down to $4 a share. It traded at $400 a share a few months ago.
I know.
It was up to almost $400 a share, and then plummeted down, and lost like 99% of its value essentially. And then anybody who was getting long Carvana at that like rock bottom level,
they knew something.
Like bankruptcy, almost bankrupt kind of levels.
Yeah.
To then catch this move. I mean, congratulations. That is an insane, just what an insane move. And I don't understand the valuation of this company too much. I have to look into it more. And
the only person who bought there was Nancy Pelosi and her husband.
With that being said, we digress, and we will move into. We're going to take actually a 5-minute break really quickly here, because we're about to in 5 minutes get back to the futures trading session, and we'll all be here to hang and dissect the FOMC statement and listen to Powell together. So stick around, folks. We will be back very shortly.
We will be back.
See you in 5.
See you in a few.
All right. That was great, though. That was hilarious. The only one that... that's the truth right there. Nancy Pelosi and anybody that was buying GameStop stock. Those were the two exclusive people. I'll be right back.
Oh, we're live. Hello, everybody.
Yeah, live.
What is crack-a-lacking?
What is going on? All right. So, how's everyone been? We've had some good action commentary in the Mag 7 that we just finished. That was good.
Definitely.
All right. So
I'm ready
Good
for
indeed.
this. Definitely ready for a little bit of futures action here in the next 10 minutes. I cannot wait to see what the statement has in store for us. For sure. Can't wait.
Yeah.
I just saw that I missed a very good trade.
Oh yeah, this thing's been moving. It's been moving for a while.
Quite a while ago, 2 hours ago. That was a good trade.
Yeah.
Oh well.
Yeah.
You guys could hear me when I was just talking, right?
Yeah. Can you hear you fine?
Okay, good, awesome. Good.
All right. Let's see what we have here. Do we have any trades? Let me look at the footprint. We're coming up to the point of control. I might be looking to short.
I've been sitting in. I'm still in my short trade from before when we went off the air. I'm still in it.
No way.
Yeah. It almost took me out twice.
All right, I'm going in short quickly. I'm going to test something here.
So at this point, I'm going to sit and see if I can benefit from the algo rip. It'll be like an MOC. It's just going to be an FOMC instead of an MOC.
Okay.
That's it. We have 7 minutes. You've got to be out the market, at least for me.
Yeah.
Federal funds rate. That doesn't sound fun. Even though it has fun in the name, it doesn't sound fun.
That is right.
Federal funds.
That is right. Leave.
All right, let's get this short drop in a bit. Let's see. Sellers are coming in. That's good. Let's see if they can push down a bit more. There we are. Not bad. Oh, come on. Don't get absorbed. Oh, come on. Let's not be silly here. What are you doing? Oh, you sellers.
Came right up to point of control and VWAP, which are still on the same. They're basically a tick away from each other on the ES.
Yeah.
They've been so close all day. And they will continue
which is
until
also
we get range extension.
Which is also value area high from yesterday.
That's right.
Isn't that funny how all those levels all work out together? Isn't that interesting?
Yes, indeed.
Almost like someone is manipulating the market.
No.
No. I've never, ever. No, just how the auction works. Just
exactly.
Just how things are.
That's how eBay works.
How eBay. Speaking of eBay, we've got earnings on eBay at the close today. So,
yeah,
that was very good. That was
what
a good segue.
Yes,
perfect, dude. Look at that, man. Great minds think alike. I said auction.
Trying to hold this short. Trying to get this short down. Come on, sellers. I can see the pressure being piled on. Why are you being? Are
you in a short?
Yeah.
Are you? We can go to Sam.
Come on, breakthrough.
I mean, mine's working now. Hey, let me get to break. Let me get to entry. Yay! Come on, let's go.
Yeah, we can switch to my screen. That's fine.
3 minutes. Hold this 4.5 minutes. Let's go, FOMC.
Come on now. There we go. There we go. There's a bit of movement there. That's what I want to see. All right, a bit of buying pressure coming in. Let's see if we can break through those buyers. Okay. Bit of absorption. Let's see if we can keep breaking 55 contracts. I think I'm happy with that. I'm getting out. All right. And now we wait. Now we wait.
Something tells me you'll be back in before.
Nah, no, not before. Not before federal funds rate. Oh, full port.
Yeah.
I should have stayed. I should have stayed.
I told you. Look at this. It's coming down. It's working for me now. Let's go down. Low of day. Let's go. Get below 30.
We can go. We can go back to Daryl.
Yeah,
I'm out the trade.
Come on. I'll try to probably hang on right within 10 seconds of the algo, and I'll get up. If it stays this way, if it stays in my favor, I'm not going to risk going.
You don't have to look at the clock, Daryl. I will count you down. Okay.
I'm looking at the clock. Keep in mind.
Don't worry, just trust me. Trust me, Daryl.
Keep in mind this data is a little behind, so I will be out further. I'm not trusted you. Why would I trust you?
Me.
Really?
I'll tell you to get out at the exact time. Just trust me. Don't worry.
Yes, Mr. Oracle. Put on a helmet. Put on the helmet, maybe. What I can do, based on where we are, I may just trail real close and see if it just drops to the bottom and takes on my TP.
Tom says, I might take the second half of New York PM session. Would love for things to get wild and then calm down so I can get in on some action.
Wait Tom till Jerome starts talking a bit. I'd wait till he stops talking.
So Tom, what you want to do is, just as Jerome's about to open his mouth, full port short.
As soon as the door opens and you see him walk out, you're already short. All right.
Okay.
I have to remember this data is a little bit delayed here. So technically we're a minute out right now.
Still consolidating.
Ooh.
All right.
I mean, there's a ton of sellers in the market, actually.
I'm going to hold. This is going to be fun. I'm holding, guys. This is going to be, I'm going to flatten if it doesn't get to my take profit. Oh, boy. Get down there.
How many contracts you in?
3.
Oof.
He's got to stop, though. At least he's got to stop.
Yeah,
it doesn't mean he's going to get a good execution on the stop.
Yeah, it'll fill at mark. It'll be nasty, but it's okay.
Wouldn't recommend this to anybody, but
I'm getting okay. I'm gonna go to break even. Literally, I'm gonna get an entry.
It's just gonna wick you out instantly.
Maybe, but if it goes down, I can capture that move, and this is perfect.
All right,
it's just like me flat. It's just like, here we go.
We go.
Boom. I'm out.
And you're out.
Got me out right away.
It's a good thing because
I know. It's a good thing. It would have got up.
Let's see. No, you would still be in your.
I would if I held, yes, but
yeah.
But the longer I hold, the more risk it causes. I don't know if I would want to.
And you'd be out. Good thing.
As expected, quarter point cut. As expected.
25 basis points, as expected.
Yeah.
No shaka.
So now we will let the algorithms read the statement.
Yeah. Yeah, exactly.
Okay.
At 4%.
We haven't had a whole lot of range extension still, though. Crazy. We didn't get down like I thought we would.
Man, look how thin the book is on the depth of market.
Oh, it's all black.
So if we want to, I can read the statement real quick if we would like to. It's a small statement. It's not anything crazy. So available indicators suggest that economic activity has been expanding at a moderate pace. Job gains have slowed this year and unemployment rate has edged up but remained low through August. More recent indicators are consistent with these developments. Inflation has moved up since earlier in the year and remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. Uncertainty about the economic outlook remains elevated. The committee is attentive to the risks to both sides of its dual mandate and judges that downside risks to employment rose in recent months. In support of its goals and in light of the shift in the balance of risks, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 3 3/4 to 4%. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee decided to conclude the reduction of its aggregate securities holdings on December 1st. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. In assessing
dual mandate.
And then this last part real quick. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessment will take into account a wide range of information, including readings on labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. Okay, so financial and international developments. So that's it. 70% of that was probably what we've already heard before.
There's your down leg.
But that little part about international developments is, I think he's been mentioning that a little bit more recently. But I think that's the geopolitical stuff, even though they're not supposed to like assume too much based off of it. But all right, big offer on the S&P 500 here at 69.35. That's
I'm short. I got it short about 30 seconds ago.
Am I getting long? It's already gone up quite a bit. God damn it. Damn you, Jerome.
The problem is you gotta keep wide. You gotta get wide stops. You almost gotta be like it's crazy. It's like instead of a 1-to-1, you gotta be like a -2 for 1 on the opposite side. Like, you know what I mean?
Yeah,
like you almost have to to make a little.
Oh,
you have to risk.
cute.
Yeah, the risk to rewards all like not in the greatest.
No, exactly.
Yeah.
That is so annoying. It's just robbed me of like $200 with slow execution.
Got a ton we got a ton sitting here back. 1,000 contracts at the 35 level. Yeah. We ate through it. That's gone. Actually got pulled. We didn't eat through it. We're holding. Let's go to the downside here. We're done the third wave. We've gone down. We went up, and we're back down. Third wave on the algo. So let's see if it continues. And then I can wait for Jerome. The range, though, is still pretty small. 15 points. That's all we've gotten out of this so far.
All right. Still looking to potentially go long. Just
15 points and a little bit more. We just barely tipped the low day. Here we go. So here we go now. Let's go.
100.
Let's go, long. Boy. Let's go.
Come on. Executed ages ago.
Let's go. Get down. Get down.
All right.
Jeez.
Come on.
So
get down.
Some other headlines here. Fed saying beginning December 1st, we will roll over all maturing Treasury principal payments. Fed to conclude aggregate balance sheet drawdown on December 1st. And beginning December 1st, we will reinvest all mortgage-backed security principal payments into Treasury bills. Vote in favor of the policy. This quarter point cut down to 4% was a vote in favor of 10-2, with Fed Governor Mirren preferring a 0.5 percentage point cut, and Kansas City Fed President Schmid preferring no cut. So Mirren is what we were talking about in terms of being even more dovish, because that makes sense, because associated with Trump. But Schmid was the only one that said no cut, or worse than a quarter point. So interesting. That is quite interesting. Everybody essentially agrees on 4%.
Yeah.
Well, I had two little scalps there, both long, but my execution, I would click and it would execute me so late. I got robbed by a lot of money there.
Well, yeah, that's just the latency right now in this market. We're just
not cool.
All right, so Daryl, you're in a short, right? You're in.
Yeah. Yep. Stubbornly, I'm in a short.
Stubbornly. I mean, we're going to be waiting for that good afternoon.
I know.
and then maybe your short will
evaporate. I want to see if it'll get down and take out the low. I want to see if it'll get down to overnight low. We made a couple of moves down here. And it needs to explore the range more. So we'll see. So, yeah, I don't know.
It is interesting that there was a huge offer. That huge offer got taken out on the ES at 69.35. We immediately dipped and then come back to it. That is quite interesting. Feels a little bit bullish at the moment.
Yeah.
Based off of that. But I could see 69.40 showing some resistance, to be quite honest, as well. So.
Correct. That's why I'm putting it. I'm just right here. Come on.
Come on. Load.
It's got enough buyers in there. You trapped enough buyers. Let's go. Let's go.
I mean, we can. I'm trying to get the stream of Jerome Powell.
He won't be talking yet. He won't be talking yet.
It's not.
Yeah, I'm trying to find it.
Just go to AP. Go to AP on YouTube or whatever, and you'll find it.
There's someone else.
Put the link. I'll put the
someone
link.
is playing something on YouTube, but it's an old one. I'm like, why would you do that? And they put it as live. They're being proper sneaky.
You should only be seeing the Fed building. Let me see.
Fed Reserve. Let's see. Live. Here we go. You can't trust all these people putting up.
There, you'll see the Jefferson Memorial Monument right now.
Yeah, I see it now. All right, cool.
You see
there
it?
It is.
It's usually better.
Just go to Federal Reserve channel. Okay.
Exactly.
Yeah, because now there's people on YouTube putting up old clips of him.
Yeah, you'll get a lot of that. Live. Yeah, you get.
I'm like, it confused me for a second. I was like, wait a minute.
It's okay. I don't expect a non-American to know how to find this stuff.
But it's good. It's all good. Who says I'm a non-American? I could be an American, just with a non-American accent.
That's right.
How would you know? I'm a proper American. This is my true voice.
I like cheeseburgers and apple pie.
Got myself a shotgun, and I live in Alabama.
Let's see here. So what's going to happen? We've got a lot on the docket here, guys. We still have, we're going to wait and see what the Fed's going to say. Now, what Paul read was great because it does continue to talk about the dual mandate and what they want. We're down to 4%. I think inflation, he's probably going to state that based on the last data, they were showing like 3.1%, if I recall, 3.1, maybe 3.2, which is a little stronger than they want. They want to see it down to 2. I don't think geez, what are they going to do? How much are they going to, they just talked about quantitative tightening. Now they want a quantitative ease. I don't think they want to do that without data yet. So I don't know. I don't know. I do not know. But I can't recall an FOMC or a Fed chair conference during a government lockdown. I don't remember.
That's a good point. That's a very good point, actually. A combination of those things occurring at it's interesting.
The last one would have been 2018 with Obama. That was probably freaking Janet Yellen, I think.
2018, but Trump was,
or it could have been Bernanke. Was it Bernanke? No,
in 2018. You're saying 2008
was Obama. No, 2018 was the last government shutdown we had.
Okay, yeah. I'm saying, but president was Donald Trump during
Obama.
That time, right?
It was Obama.
2008, 2018,
2018.
Yeah, 2018.
Obama was out of office in 2016.
Oh, yeah. What am I saying?
Trump took 16.
We had a shutdown, correct, in 28. I'm sorry.
Biden.
Well,
so Trump was the last.
I'm sorry. The longest shutdown was through Obama. The last, correct.
Gotcha.
Correct.
Okay.
I'm sorry. And it was Yellen, and then Trump appointed Powell. But I don't know who it was during the actual. Let me see here.
Do you guys know every president to have ever existed? Can you recite it like an alphabet?
Mostly.
No, I could only go down to into the early 1900s, and then it gets sparse from there. There's no way I'm gonna be able to.
I forget the order. Some of the orders I get out. I get out of the order. Yeah. I get some of them.
That's insanity. I don't even know who the prime minister is right now of the UK. That's
you've got Steer comma. You got
wrong way around, but close enough.
Whatever it is,
Keir
Starmer, whatever it is. Yeah, I'm thinking of Steer because of
Steer
cattle
comma.
trade.
That's quite good.
Yeah, it's because he's steering. I don't know. Yeah.
So who's the first president? What is it? Washington?
Yeah, George Washington.
Oh,
exactly. There we go. That's it.
Then who else do I know? I know about
Lincoln.
The Amish looking guy, yeah, Lincoln. That's
Who?
it, Lincoln.
Yeah.
The Amish looking guy.
Amish, I'm sure you know
also got
George
Lincoln,
Bush
got
Senior,
Reagan,
George
JFK.
JFK.
Eisenhower, was he a president? Or
Eisenhower. Yes, correct.
There's another one that you haven't said that is a very popular one that I'm sure you can get. Super popular.
Bush, the two Bushes.
There you go.
Yeah.
That make up a giant plant, technically. Two bushes. A tree. I think they just call them the tree.
Giant plant. You know what? Hey, if you think about it, both Bushes are on Mount Rushmore too, Paul, because there's bushes down there too. You got the rock on the face. You got a bunch of bushes down at the bottom of the cliff.
We can go deeper in this. Two bushes technically make up a hedge, right? So they're hedging. Yes. You see what I mean?
Ooh, my short. Look at my short, guys. Look at my short.
Here we go.
Come on, baby. Come on.
So yeah, that government shutdown in 2018, going into 2019 was when Trump was in office. It was 35 days. Wow.
That's
yes.
Right. That's
35 days. That's that
was the longest one. I guess that was the longest one.
Yeah.
It was through Christmas, New Year's.
Wow.
It exacerbated the length because of the holiday.
Right. That
break.
Makes sense. That makes sense.
Right.
Oof.
Oh, come on, get down here. Get down here. I got 15 minutes before the friggin' rug gets pulled. Let's go.
I really need to do a liquidity dump. I should have done
Go
before.
do it. You go do it. We got 15 minutes. Nothing's going on now.
Full Powell. All right.
Yeah.
Give me a sec.
He just walks off. He just walks away.
How's the
like one of those
so the short's going good?
Who's that Clinton guy in the chat? What's Clinton? Clinton, really? I don't know. I don't recognize. No, kidding. There's lots of popular. Yeah, Tiger Lincoln was probably your height, dude.
when I was thinking popular presidents that like older time presidents that he would be able to remember, it would be like Roosevelt,
Monroe, Adams.
Well,
Jefferson, those you mean like
those
old,
aren't
like founding fathers old, or what are you talking?
No. I was saying like Roosevelt would be an older one, like in the early 1900s, that he would be able to have pulled out. I was thinking.
Oh yeah,
but you're expecting too
like
much.
for him, like even Nixon, like or
yeah.
Biden, I mean, he didn't say Biden, which is funny. We just had Biden. I mean, it's like a walking mummy, but still.
We are doing nothing right now, really.
I know we're not. I got to get out. Next time it comes down below, I got to get out. I want it to. It's just not. It's not ticking below the low yet. Ever so close. 27.75, and I needed to go another 3 points. And why won't you go? Come on, just do a little algo sweep here.
Oh yeah, James Clinton, of course. How can I forget Clinton? The PIMP.
Okay.
Uh-oh. Oh no. Come on, hold.
Dirty dog.
I don't know what you heard about me, but you can't get $1 out of me. Because I'm a PIMP. G unit.
Oh my god.
I can't say the words. I'm being PG.
Gold is also doing like
Nothing.
not much. When the statement released, we actually did quickly go up to that 40-20 area that I was showing as like previous like consolidation area, and then immediately rejected off, and we're trading it right at $4,000 an ounce at the moment. So, but it's not doing a whole lot. It's not moving. It's just like the indices right now, kind of consolidating, not moving a ton. So.
Question is,
James wants us to check natural gas too.
Yes.
Yeah.
Will FOMC potentially close the weekend gap? Who knows? I mean, that would be quite a move.
That would be an insane move. Oh, that would be an insane move.
Okay.
Interesting that you're stock on short on this deal. Interesting.
Yeah.
Thinking the highs are in. Thinking the highs are in.
I still have a short bias. I don't know why.
I know.
I can't tell you why.
I can't fault you on that either, man. I can't. I know.
Weird gut feeling.
Yeah, there's a lot of.
I don't trade based on any technicals. I trade based purely on my gut.
Okay.
Whether you're hungry or not, yeah, I know. I get it.
Exactly. I drink a lot of
fresh local ingredients. If you don't have your fresh local ingredients, it's going to be a bad day. I'm with you, Sam. I know.
All that friendly bacteria in my gut, all that good bacteria,
probiotics,
telling me whether to buy, sell. Like little voices in my head that shoot up my spine and go, "Buy now."
Oh goodness, man. Well, James, real quick, I can just really quickly go over nat gas.
You could show your chart and take over.
Yeah, we'll just show my chart really quickly because it's not going to take too long. To be quite honest, there's not a whole lot going on with the product, but I've got the 30-minute chart up here. And
everyone's waiting for Jerome to open his mouth.
Yeah,
that's the problem right now.
Oh, of course, for sure. And at 2:30, the open outcry is going to be done with for nat gas anyway. So, the thing with nat gas was when we were opening up this morning, we were opening below the previous day's low in terms of like the open outcry session from yesterday. So generally speaking, it was feeling relatively bearish, but at 9 a.m. from 9 to 9:30 a.m. Eastern time here, we did have a little bit of a tick lower, you could see. And I had and I talked about this in the pre-market. I was looking for a possible sell down into the $3.72 area, which is where the December contract had previously gapped up to, done like a weekend gap up towards that area, and that's where we had settled before moving higher. So I was looking for just a retracement down to $3.72 at least, to then be possibly looking to get long if I was going to be getting long this name. But unfortunately, we got down to 376 and immediately spiked back up here. So we're still hanging out below the previous day's low, though. So here's the problem: you're kind of in between a rock and a hard place. You're still relatively bearish in comparison to the last few days because you are hanging out at the low of the last few days. But at the same time, you did have some decent volume here, try to spike us lower, and then we held up. And this is also where we had previously tested down at, on October 24th, we had tested the $3.78 area before spiking back upwards. So it kind of is like a double bottom of sorts over the past week. I wouldn't be necessarily making any decisions off of this yet. I would wait for a little bit more confirmation, either down at the 372 area to then see if we can find some support there, or if we do move up from this level, see if we can't move back into value from yesterday and catch a little bit of a long above the $3.90 area to then rotate upwards towards the top of the range that we've been trading in over the last like 3 sessions or so. So that $4 level, I'm sure, is a very key level as well. We've tapped it a few times over the past few days. So that's kind of my analysis, James. I'd just be a little bit cautious at the moment. The downside targets would be 372, and then if we were to break below that, I'd be looking at $3.60 to $3.50, some sort of support there. So I've got 2 support levels essentially that I would like to see us get to here on that gas before looking for longs, but we're not necessarily going to get there. We could just start going up from here, and then you'd have to look for a momentum long as best as you can, and limit your risk as much as you can. But that's really it, James.
Sounds good.
Very nice.
Yes.
Come on, shorts. Let's go.
I met a Nat Gas before. Her name was Natalie Gas. Nice girl.
Got it.
Did she have gas? Did you date?
Yeah.
Go on a date? She had too much gas, and he said, "I can't date you anymore."
Yeah, she suffered from IBS. So.
Jesus.
Oh, it's so funny when Daryl, I wasn't looking at the chat when you said James was looking for Nat Gas. I thought it was James Perlin, and I didn't realize it was Coach James. So
yeah,
Coach James.
No, it's okay. You kept talking like you kept addressing it, which is funny. I didn't want to ruin your vibe. You were going,
which is hilarious. But now you know why I was talking in that manner, Coach James. So just a classic mix-up. This is what we don't have any chat members named Paul, so you can't mix up my name with anybody in chat. But with you, we can definitely.
Yeah, we have Samantha. We have the one and only Samantha, which is with us now. And we have Derail, and only one Derail, and we're good. We're good. I think Jerome is going to be a little, I don't know, maybe hawkish, because I got that damn crow outside my window.
Eagle-ish.
No way. Was that thing actually knocking on your window?
No. Oh, that's my finger on the desk.
Oh, okay.
No. I was
He's
like,
that would
my
be
neighbor's freaking roof, and I have the window closed, and I can still hear that thing go. I'm just ridiculous. I know it's Halloween and everything. The crows want to come out, but dude.
Yeah.
By the way, it's hot as hell here today, guys. It's almost 90 degrees. It is ridiculous here.
It's Coach James's photo, him as 007. I think it is.
Oh yes, that's great.
Is it?
That's brilliant.
That's fantastic.
Yeah.
I haven't. I'm too busy doing something else. Hang on.
.007 of trading.
All right, we're only 3 minutes away from this speech, so we'll
Get out to dude. Get out to dude. Hello, everybody. I am Jerome Powell. Let's see where we're at. Okay, so
J-Dog.
J-Dog. We're gonna let's see what we're gonna do. We're gonna put it up like a split screen or something here. Oh, I like this.
Yeah,
ooh,
production
this is
is
good. This is good little image there.
Production will put it up when we
Like some
give the go.
ancient
like that
Egyptian
little dovish.
hieroglyphs there.
Yeah, that was cool. That was cool. Dude, come on. There's a poll in the
Nothing's
chat.
gonna happen now, is there?
How do we interpret today's FOMC policy announcement? How do I interpret it? I don't know, man. Quite dovish.
Yeah. Yeah,
Come on,
it's,
yeah. Let's have a look.
I would say dovish for sure.
I would say dovish.
He's still no Jérôme, as you would say in French. Jérôme. Is it Jérôme?
Jérôme.
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 Je m'appelle Jérôme.
Listen to you, man.
Bonjour.
How do you guys
je
see?
m'appelle
How do you
Jérôme.
see? How do you see James' little thumbnail or whatever? Where do you see the 007? How do I open it up?
In the
I guess go to his channel.
you
Go to his
can't
channel.
you can't make it bigger. You might be. Able
Oh,
to
I see it. Go to his channel. I
But
see
you
it. Look
can-
at this. This is AI picture.
How do you
man.
go
It
to
looks
someone's
good.
channel?
It just says it right
do you
there.
do
You
that?
can go to the channel. It just click on. What did I click on? I clicked on his name, and it says like channel activity.
Yeah.
Go to the channel, whatever. I can do the same thing with clicking on his avatar.
It doesn't work. All I get is the option to report or block. I don't get the option to.
I get that too. Report block. Go to channel. Because are you logged in through your? Are you logged in through your own
Yeah,
channel?
I'm logged in. Yeah, that's really weird.
Man.
I don't get that option.
I don't know.
Huh.
Maybe it's. Oh crap! Where the hell is Jerome? Is he gonna say something? I better get the hell out of here.
Yeah, we're gonna put we're gonna get the feed up now so that we're just ready for. He might be a minute late. You never know. Sometimes he's a minute late or so, but
He's gonna be talking any second because by the time we get the feed, it's already late. By the time we get the feed, you know what I mean?
Good afternoon.
Good afternoon.
Oh come on!
Jérôme.
All right. We'll turn on the sound and
watch him open that door and this thing just frickin' drop.
We can't see the sound, can we? From our end, the viewers will, but we.
Oh yeah, I'll have it playing myself as well.
Yeah. Just play here we go. Look at this guy. Oh boy, here we go. Oh shit.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated.
Okay, your outlook hasn't changed, so come down.
In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace.
Come on.
GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer
GDP's
trajectory
weak.
than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. Thank you. There were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Nice.
At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1.
You know what the crazy thing is? I was in a short.
Plan has been to stop balance
10
sheet
seconds
runoff when
before it dropped. I got into a short and I was like, actually, it's silly. Got out at like $200.
Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see,
see the repo
as the size
window.
of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion.
Tell you he's going to close the gap.
As a share of
Big
nominal
offers
GDP,
down at
our
69.
balance sheet has fallen from 35% to
contracts.
21%.
Get down below 6,900.
In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a
6,900 is
portfolio
sitting
consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices.
There she blows.
We remain committed
There
to
she gone.
supporting our maximum employment, bringing our inflation sustainably to our
Oh,
2%
he
goal,
pierced.
and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our 2 goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And
Technically,
the takeaway
no.
from that is that we haven't made a decision about December.
Yeah, I don't think so.
And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook?
Yeah, sell this
or
market.
could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way we
Show your screen,
have
Daryl.
I've been thinking about it is the risks to the 2 goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation.
Beautiful.
We saw a very different picture of the labor market, and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a, I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time.
It got me
neutral.
out. Didn't do anything.
If the 2 goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire. I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor.
Get
I
down.
don't think for anybody.
Oh, wow.
You know,
Okay.
I guess I
Get
would say it
down.
this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, you know, some will be more averse to inflation overruns, and some
He's
will be
quite
more
animated
averse to
today, I will say.
underruns of employment.
Yeah.
And so you
More
put
than
that
normal.
together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, you know, that we haven't made a decision about December. You know, I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
You know, that could be one of the factors, but the reality is we've seen, you know, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, you know, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, you know, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars because, you know, again, the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, you know, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, you know, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Good short, Paul.
Colby.
Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as
Hop
inflation moves
down.
away from the 2% target, seems to be, you know, that there are these mounting
He's already
downside
answering the
risks
next
to the labor
question.
market.
You could
But if
tell it.
those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, you know, that would certainly play into our decisions going forward. So, we do have, you know, we get some data. The labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a sort of a signal of more of the same. We also get, you know, job openings. And we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market. And, you know, the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah.
I think
so, you know,
never mind.
We get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the Beige Book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or a material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, the meeting's like 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion
This
about
frickin' dude every
to the extent
time.
it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it, the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities. And we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
John L.
All right. Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
Turning up a little bit here.
So the September
it's going to drop
CPI report. We didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be.
Sure.
When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components.
Might be some adjustments.
Basically, you've seen goods prices increasing, and that's really due to tariffs, and that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that now. It's been doing that for some time, and we'll expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services. And we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple of things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths. And so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will
I'm with you, Sam. Let's go sell it.
I literally just got in
increase
short.
further, but it is that it will be a one-time increase. And, we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that? And especially when we're seeing potentially labor supply challenges.
Sorry, say the first.
The stubborn
Micro
services
Bitcoin
inflation.
reached a low of 109,250.
Again, the part of services
That's
inflation
what Robert was talking about
coming
earlier
down
here. BTC
as we would like
tanking,
it
yeah,
to, is
definitely
the
was making a
non-market
down
part
move.
of non-housing.
Oh, come on,
services.
sellers.
And
take
overall,
control.
that's just something
the area.
that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market. Is because Fed policy is modestly restrictive. So that should also help get that.
Buyers came in
I want to
again.
say though, we're absolutely committed to returning inflation to 2%. If you look
I
at
might
longer
just take
term
the 300 bucks
surveys
and
or
leave it.
market pricing, you will
getting
see
out.
that's a credible commitment.
Oh, come
And
on, I flattened
there
ages
should be
ago.
no question that that's where we're going.
Chris.
I'm out too.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI
now.
infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all. And could
Now
further
it's
rate cuts
gonna
at this
drop.
point perhaps fuel an excess level of
lots of
investment
buyers
there or
trapped. This is it now.
market bubbles? How is
Has
the
to
Fed
be
thinking
it.
about
Come
that?
on, sellers, come in.
So I don't think that the
Come on, stop faffing about.
You're right. There are a
Came to
lot
the top of the
data
single
centers
prints, though.
being built and other investments
Don't
being
allow
made
those buyers
around
out.
the country,
Don't allow
around
them
the
out.
world.
Don't allow them out.
And big U.S. companies are just investing a lot of resources in thinking about how AI,
Jerome, shut up.
which
You're
will
annoying
be
me.
based on those data centers, run through those data centers, is going to affect their businesses. So it's
Shut
a big
up,
deal.
Jerome.
I
Stop
don't
talking.
think that the spending that happens to build data centers all over the country is
Come on.
especially interest
Only
sensitive.
buyers up there.
It's based on longer run. It's longer run assessments
Ain't
that this
happening.
is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sort of
damn
thing.
buyers
I
coming from?
don't know how those investments
on.
will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. Could you mentioned that you do have data that you're looking at for inflation and
it's a lot
growth
of
in the
volume.
absence of government data. Could you give us a
Gonna
sense,
have
I
to
think
flatten
you know a lot about
the
the
last little
jobs
bit.
data that's out there. Can you give us a sense of what you're looking at to track
Come on,
inflation
sellers.
in the absence of government data? Thank you.
So it's
There
a
they
lot of
come
things,
in.
and it doesn't replace government data, but you know all of these. It's
Come on, sellers.
I'll just mention some of the
Come
many,
in now.
many names.
There you go.
Price
Pile in
Stats,
the positions. Here we go.
Adobe and
118,
others,
120. Wanna see
Sam,
more
shut up.
volume?
for wage inflation. There's ADP data on spending.
I can't hear him, Sam.
You know, there are lots of other things that we look at, but it's many different sources, and again, including what we get out of the beige book, which will be sort of come out mid-cycle as always, and it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the beige book, do you worry at some point you're going to have to start making policy by anecdote?
You know, this is a temporary state of affairs, and you know we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that you know, what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, you know, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Yep. Has that started to become a factor in your policy discussion?
So those are both things you know, that we're watching very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully. And you know, yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are. If you listen to the earnings calls or the reports of, you know, big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you, Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, he said, far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then?
Well, the perspective is of people on the committee that, you know, we've now moved 150 basis points, and that we're down into you're into that range between 3 and 4, where many estimates of the neutral rate live in that 3 to 4% area.
That's
You're
right.
there now. You're above the median number for the committee, but I think there are people on the committee who have
Can't get
higher
much lower.
estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether, in fact, the growth, that the stronger growth that we're seeing is real.
Come on, Algo. He said step back.
Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say
pump the brakes. Say it.
Differing views, strongly differing views.
So on that division, then you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have, in fact, cut 2 more times. And, we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes.
Oh, here's the myth.
And I'm just telling you that's what happened in the meeting.
Come on, Jerome.
Elizabeth.
Tell them you got to park the car. Let's go.
Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is
throw away the keys
now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that
just going to grab some more water, right?
Story. Okay. In addition, labor demand has declined, and so the unemployment rate has gone down, meaning that demand for workers has gone down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand, and and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to 0. So maximum employment doesn't, on a sustainable basis, if you're creating 0 jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last 2 meetings, that it was appropriate for us to react by supporting
Came right to 6,900
with our rates.
Yeah,
and we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were, and that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Of
course.
Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
It won't come down. Once they're up, they stay up. They rarely come back down.
From Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey,
Here we
that's
go.
wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable and whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good.
What are you smoking?
And you don't see too
Relatively
much
manageable
leverage
levels
in
of
the
debt
banking system
in
or the
American
financial
consumer?
system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about. It's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring, and that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. But because there's uncertainty around inflation and the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas
don't pull that shit,
particular
dude.
names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that and has been growing and has defied a lot of, negative forecasts.
Come on now.
Continuing to do so this year. Consumers are still spending. Now, it may be mostly higher end consumers, or maybe skewed that way. But the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI.
It is.
You could point to
the other ones that are doing it are doing on plastic, dude.
You may be growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that where people need jobs because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But you still got the economy growing at a moderate pace.
Andrew.
Come on. Andrew Ackerman with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down when you can't see as far ahead. Others may argue.
Let's drop.
Come on, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to I know those discussions are really just getting going. They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian. Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown?
I love the
So
sarcasm
we do
too,
not
man.
see
I agree with you.
the weakness, as you put it, the weakness in the
You
job
know,
market
households are
itself.
doing great. Yeah,
I
sure
would
they
say, then again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really
From
any
Indeed?
part of the economy is making a significant deterioration. Don't see that.
These guys.
You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular
That we're
section
thinking
of
of?
the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level, that kind of thing. I do think that people,
get down to
we
68,
saw
80,
this
let's
during
go.
the global financial crisis and the
Let's
long
go.
recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along
Sam,
with
you had
keeping
a
prices
decent
stable.
bit of trades
Those
there.
two things.
I saw was saying.
Inflation also hurts people on fixed incomes
Yeah,
more than
Did all
took
right.
one bad hit.
Ah.
That's fine.
Hi, Chair Powell, Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for
waiting for the
renewal at the end
move.
of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this, and I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
So, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile
That's a
credit.
good question.
Institutions having significant losses, and some of those losses
I
are
think
now
this is the
showing
last
up
question,
on the
too.
books of banks. We're looking at it carefully. We're paying close attention. I don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But we're going to be monitoring this quite carefully and making sure that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with the lower income pulling back. How much of consumer spending continuing hinges on the stock market remaining strong? In some odd way, does the market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market, it would affect spending if the stock market went down, but it wouldn't drop sharply unless there were quite a sharp drop in the in the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. But you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
All right, and off he walks. Oh.
Okay.
I am knackered after that. I could have a good nap.
Yeah.
I can imagine, they say hell will be a place filled with fire and all that. I can imagine it will just be having to listen to Jerome Powell on loop. I can't think of.
I know.
It's just the most boring stuff on the planet.
Yeah. Imagine the meetings. The governor meetings. And,
all right, let's see.
Yeah, so that was That was an interesting meeting. Sorry, I was just adjusting a couple of settings there. Looks like my CPU is running a little hot, but I think it was because it was listening to Jerome Powell, and it was starting to get a little tired. But, you know, Jerome definitely felt like he didn't have as many. It felt like his attitude was more so like he was trying to defend something.
Yes, it was.
Than he did feel like super confident about anything.
I totally agree with you.
Yeah, and I'm actually not like surprised that the market's taking it as well as it is, but the fact that there was so much more, I would say so much like a lot more indecision from Powell between like, you know, whether to cut or stay where we're at in December, during the December meeting here coming up in a month and a half. That's kind of the part where I'm surprised the market didn't take that a little bit more negatively. As he continued to go on about that. So maybe the market's just calling his bluff. Maybe they're calling a bluff or something and saying like, yeah, right, dude, you're going to be cutting. Like, don't worry about it. You're going to. But I will say the Fed Watch tool has dipped a bit for December.
I was looking at that too as he was talking. I was looking at the Fed Watch tool, and man, this guy, unbelievable. Yeah.
So we're at 63% chance of a cut in December versus a 33% or. Yeah, 66% versus 63% versus 33% of a staying, and then like a 6% chance of a raise or something, or a 4% chance of a raise or something like that. So
stay even, or a little raise, correct? Yeah. Yep.
Jerome.
Yeah, man, I know. He just kept talking. There was very good questions about the AI stuff too. I thought it was great. He was skirting it big time. I mean. Yeah. And then he started to talk about how all the money that's being poured in by these big public companies into AI. And, you know, doesn't this sound a lot like stock buybacks, except they're putting it into AI. They're not putting it back into their R&D. They are. AI is R&D in a way, but they're not putting it into people. They're not putting it into culture. They're not putting it into what have you, goodwill, client, whatever, forward facing. I don't know. I mean, this is... Yeah, man. He was very, very, very calculated what he was saying today. He did not want to say transitory. That was the word he was trying not to say. He was asked that 3 times. I mean, crazy, dude. This freaking clown.
Yeah, Will Hayford saying long cut, and I mean, hey,
I
man.
know, I saw that. Robert Chicanek made some very, very good comments here.
For sure.
I was very happy to see that. I agree with what he said. It was very, very good. And the sarcasm is right on point, Robert. Right on point for that. I agree with that. I agree with all that crap too. Totally, man.
What actually made me chuckle is when I can't remember her name, son of a gun, but she asked good questions at the end there. And then Robert saying, Jerome, is the market the economy?
I know.
Yeah, it's like, honestly, sum it up in a nutshell, you know. It kind of was part of the question there.
Basically is what she's saying. Basically is what she's saying. It's like...
That's funny.
It's funny. No, it's good. It's good. Well, didn't move as much as...
Very vocal today, though. Very vocal. Much better than most of the time. Most of the time, he's putting everyone to sleep. Today, he was livelier.
I'm going to switch to the closing bell here to off for the last hour. I did like the last interviewer comment about JP Diamond mentioning like when you see one cockroach, there might be more. That's such a good analogy. I feel like
it is.
But you know, but what Jerome's response was actually decent in the sense of this problem, this situation has been developing for a while now. So it's not like you can look at it today in time and say, oh, well, within a couple months, things are going to go, go to the downside, because it's like, no, well, this has been developing for a long time. Delinquencies have been occurring. The timing of it, you just don't know what the timing of it's going to come, when that will be something that does matter to the overall economy. There will be a breaking point likely at some point, but who knows when, if there will be. So,
indeed.
Yeah. Speaking of Indeed, couldn't believe he's like, look at the Indeed. We look at the Indeed employment data. I'm like, because that's all they got now is private stuff, right? And I'm like, really
crazy.
Hey, that's what they can do for now. That's all they can do for now.
But the fact that he said it was hilarious.
I mean,
oh my God.
I guess it's a good sample size, but still, I mean.
Yeah, what? Like, we looked at Monster Inc. and LinkedIn too.
I know, and I get that. I totally get that. But at the same time, would you rather him? It's like, what's his other options to be like? No, we're not doing anything. We're not even trying.
Right.
Facebook is the other option. They could look at Facebook. All right, and just count how many
MySpace. You should have said something.
MySpace would be better.
Would have been great. Or if he said, like, we looked at the classified ads in the newspaper and we didn't see a whole lot.
It's really been dipping.
We looked at Facebook
We noticed that
see how many people are selling their kidneys.
The New York Times has less jobs data in the classified section. That's kind of our cue.
Well, unfortunately, the S&P 500 is just
come on down
in a range here.
We're down
towards the bottom of our 30-minute range. So
come on down. Do
really
a little data dump.
Oh, just stop doing. I don't know. I mean, the market reacted, and that was it. And then
it held at that 68.80 that liquidity came in, and I thought for a moment it was going to go all the way back. I think we're dropping too. I just thought for a moment we were going to retrace all that drop. I'm like, nah.
I'm not seeing. I don't know. Footprint wise, the book is getting a bit better now. Finally, some sort of volumes coming in a bit, but still, I don't know. Oh, wait out. I'm doing all right today.
Oh, you did fine. You were doing good. I was watching you scalping the hell out of that. You were doing fine.
I took one bad hit. It was just.
Oh yeah, the one you and I got ticked out of that move, that long move up. I saw that.
Lost like $500.
I heard you go, oh.
It's one of those trades where you feel it in your chest. It's like a stabbing pain. Like,
I didn't mean to cut you off, but you were going. I just wanted to listen to Jerome, and you kept talking. We were trying to get both of it coming through at the same time.
I completely forgot.
Text you. Sam, shut the F up. I was going to text you. Sam, shut the F up, dude.
You could just mute my mic next time.
We should have.
Gosh.
We should have.
No. It's all good.
So don't forget, everyone, we do have a lot of earnings here. And Robert, he reminds us, we've been talking about it all day. We've got Meta, Microsoft, Alphabet, also known as Google. We've got Starbucks. We've got eBay. We've got about 150 other names after the close here. So, I mean, any softness here in any of this, it could really pull back. We'll be off the air, but I mean, it's kind of like, hey, interesting to see what the overnight's going to bring.
Yeah,
come on down. Get below 6,900. This is where it's been sticking right here. Let's get below.
Do any of you buy any stuff off eBay? eBay.
Oh yeah, I use eBay.
Yeah, I do. I do.
Yeah,
I do. I've been selling some stuff for my son.
Oh,
he put a bunch of stuff up before he went to school. Like, and it's like I said, just keep the ad running. It'll eventually go. And there's like a whole bunch of people buy it, so I have to like package it up, take it to the drop it off. I'm like you're lucky I'm doing this.
I'm a true bargain hunter, so I'm always on eBay buying stuff. I buy everything secondhand. I'm talking, secondhand mics, computers, cars, equipment, toilet paper, you name it. I'm buying it secondhand.
Underwear, secondhand underwear.
Oh gosh.
That's it. I buy it all secondhand.
Another stock I'm kind of interested in here for the earnings is Chipotle. Very interested in Chipotle.
I saw that too. I did see Chipotle today. Yes,
Yeah.
of course. That's only because I mentioned that the former CEO of Chipotle now works for Starbucks, right?
Oh, exactly. 100%. No, I actually am interested because I kind of went on a lull of not buying Chipotle because I was like, I need to stop this. Okay, I think we just transitioned again.
Yeah, it's okay.
All good.
No, it's all
why
good.
Not? Why not?
But I went through a lull of probably a couple years of not eating Chipotle when I was eating Chipotle probably at least once a week. Like Chipotle was a staple of my diet. Oh, I've loved Chipotle ever since I was younger. But
great.
Recently, the last couple of weeks, I've gotten it a few times again, and I'm like, all right, this tastes fantastic, and I'm curious to see how their customer growth is going at the moment. With higher consumer spending and everything going on more than expected, I'm just wondering if Chipotle is reeling some of that in or not. But
right.
I've never tried Chipotle.
I'm assuming they have it there, don't they?
I think like one or two branches have opened. I think it's just trickling in now.
I enjoy it a lot.
Oh yeah. There's a ton in London, but they're literally all just in London.
That makes sense.
Right. Yeah, it does.
Yeah.
That does. And get the tourists and get the Americans.
Exactly.
I prefer Pret a Manger myself. Always go for Pret. Always.
Pret a Manger.
That's just a sad person.
Sam knows what I'm talking about.
Yeah.
I don't even know what that is.
It's
like a
it's not even
shop. It's like sandwiches. They're on every freaking corner though. That's the problem. They're everywhere.
It's where mums go when they've dropped their kids off to school. Little posh mums. With the $5,000 buggies that you see. Exactly.
Yeah.
They go there for a little lunch date with their girly best friends and discuss absolute garbage. That's the kind of place. That's what.
No, Sam's exactly right. I think
there's a lot of animosity in Sam's.
No, I'm just saying. It's just pretentious crap served on the plate, overpriced. And people think it's
overpriced.
Nah.
Okay.
Everything in London's overpriced, just like here. It's no different. Same damn thing.
Gosh.
Come on.
Well, we only got 10 minutes till MOC, so I didn't even realize, Daryl, you're still in a trade, Daryl. That is actually.
I got back in. I got trailed. I got profit for like $725, and then it pulled back and it went above like where am I in at? Like 69.02 quarter. So yeah, I waited for the pullback over 1900, I think, or 1900, 6900. I still think it's going to come down. I still do.
Robert Mashiro says, I sell my underwear so that people can have that pre-stretched comfort.
For Sam. That's what Sam likes. He's like, I like the seats worn in.
I'll take a pair. Do you do international delivery, Robert?
Oh my God, that is so freaking funny. That is so funny. Dude. Was Tom Rogers in an interview too? Both these guys. All right. Tom's here for the MOC. Yep.
Obviously.
Nice.
Where's 350 these days? He always used to come and now
where's
he's
350?
He's just abandoned us. Not cool, 350. Okay, I think I might be going short now. Come on. I've entered. Hurry up. Execute. There we go. I see potential here for a downward move. Oh, they get absorbed so quick. What is going on? This market is just up.
Oh, there's just everything's in the market right now.
Sellers are trapped.
There's algos. There's everything. I don't think they
Trapped,
are. I don't think
at the bottom of this 1 minute count. And I mean, for my
maybe on the
solid
Nasdaq,
trading,
maybe on the Nasdaq they are, but not. I don't think on the ES they're trapped.
exactly where the sellers came in. This
Yeah,
candle.
see, that liquidity just got pulled.
Yeah, see, bullish candle as expected because of a silly trap. Why you do this to me? Come on, sellers, absorb. Give me some absorption. There we go. All right, let's untrap those sellers. Make them proud. Make them happy. There we go. Let them free. Free the sellers. Free my boys.
Let's go.
Come on.
Raw. Cliff dive it. Let's go. Cliff dive.
Come on, bit more, bit more.
Come on, everybody go
more.
in. Everybody dive in. Let's go.
A little bit more. Give me 2K on the day.
Nice. Come on. Let's go.
Boom.
Man.
I'm done.
All right.
I'm
I'd love to
2K
be
on
done
the day,
before
I'm
MOC.
happy.
I want to get done
Nice
before
trade.
MOC. I don't want to deal with MOC today. I know Tom's here for the MOC, but we can watch it. I just don't want to get involved.
Yeah.
I basically felt like I've been riding an MOC for the last hour and a half.
Yeah. Yep.
Right? It's like, oh, man.
I will say it was a little bit less dramatic than I thought it would be. I thought it was
For
going to be a little bit
sure.
of a harsher move.
For
I mean,
sure.
I know
I
that's
agree with
weird
you.
to say when it moved at least like 60 or 55 points or so at one point to the downside within 10 minutes. But
I thought it was going to regather here and go down again. I was surprised that it pulled back so much.
Yeah. Thought there'd be more.
Well,
oh, come on.
The only other earnings that I saw that I was kind of interested in that are like small, a little bit smaller, a little bit smaller of companies, sub $10 billion market cap, just chump change. Sprouts Farmers Markets, that's going to be an interesting one, I think, to just understand consumer spending. And then MGM Resorts International, I think that'll be an interesting one too.
Yeah, you brought up Carvana earlier. Carvana is going to be
Carvana. I don't even.
Crazy.
Yeah, that Carvana is more so for the sake of just like.
I know
for S's and giggles, I don't even. That one just doesn't even make sense to me. That company.
I'm excited about this company called. I don't even know what the hell they do or what they make, but it's called DHT. So I'd like to know about DHT because I seem to have a lot of it. But
DHT.
Too bad I don't get any pay. I don't get any, dividends or anything from them.
I'm so confused.
DHT. Dehydrotestosterone, which makes you go bald for
okay.
in the scalp.
All right.
It's like a
Sorry.
scientific joke there. Wow.
Yeah.
Oh, Daryl, good news though. Good news. I saw on Instagram that some company in South Korea have successfully formulated some kind of formula that can regrow hair within 2 months or something, and it's been proven to work now.
Oh wow!
You should get on they're starting human trials now. They did it on rats. The rats became bushy, I guess, and now they're getting on human trials. You should definitely sign up for that, Daryl.
I need to eat rat food.
That makes
rat
me feel
poison
better.
And rat food. No, you're going the wrong way. Just going into the MOC right here. Look at this. Why are you doing this? Why? I don't know, man. I don't know if I should just get outside of here, get outside of that low volume single prints, just hang out. What's causing this?
See.
What's
The
causing
back end Bhagat says I saw that yesterday too. Exactly. It's big news for people like Daryl. Big news.
Maybe not. No. Not gonna do it.
How How come you don't grow like a big beard, Daryl? Because sometimes when people have like no hair on top, they kind of overcompensate with a big Viking beard.
I could do it. I look like Santa, and my wife hates it. I've done it. I did a 90-day, dude. In 90 days, it's big. Like, but she hates it. I mean, she literally, it's grounds for divorce. It's over. So I either grow it or my life sucks. So I mean, and she just doesn't like. I mean, and it's funny because she has she has like some other Korean girlfriends and stuff, and they like grow it out. It's so I love it. But my wife just doesn't like it. You know, it is what it is. It is what it is.
Moderate Mike is true. Yeah, does not work on fish plankton, Sam. Yeah, the fish plankton trials haven't started.
Exactly. But I can multiply the plankton. We can multiply real quick. So, you know.
Lots of test subjects.
All right, Robert, have a good one. See you tomorrow, my friend.
See you, Robert.
Catch you
All
later.
Right. I held the low volume, which was the single print drop. Let's see if we can get further down here. We are 2.5 minutes out from another good afternoon.
Good afternoon.
Good afternoon.
He walked out pretty excited today. I should have known something was up. Yeah, a little pep in his step. Wasn't dragging. Oh, come on. You were on the right direction. Go back down. Get below that.
It's interesting.
16.95.
Like the only thing I can what I think about when I was listening to him today was like he couldn't find it. Like I don't know. I just come back to this. It's like he couldn't find the right words to succinctly answer some things because he genuinely.
Because he was avoiding.
They didn't exist without seeming like he was making something sound bad or whatever. Like he was having a hard time finding the right words, which put me off a little bit.
It sounded like he was very calculated and he was trying to avoid saying certain things and he was trying to play it in his head. He was just like, he sounded trying to be like a politician. Yeah. I got that too. I totally got that. Oh, come on.
Yeah.
What are you spinning, Sam? What are you doing? What are you spinning on your desk?
AirPod, fake AirPod case. Because Apple's AirPods don't work on Windows computers. Do you know that? Well, absolute
you told me
scam.
that. You're the one that told me that. I actually got it to work. I actually did get it to work on my computer.
Refused to connect via Bluetooth.
But it didn't work. It won't connect with our software. It doesn't work. It's weird. But I got it to work. I got it to operate. I can hear sound. I can talk out of it. Come on.
And the quality of the Apple ones are good. I give them that. Like, good quality. But
yeah, they are. Yeah, for sure. All right. 20 seconds. Woo. I'm probably just going to get freaking ripped.
There we go.
I'm going to get ripped.
You're short, right? Yeah.
Yeah.
I don't know.
Oh, yeah.
I think it might be all right. I think you might just...
I hope. That's what I'm hoping for. There we go. Come on.
Algo time.
Oh, no. Wrong direction, you idiots. No. Oof. See? That's all it took. See? Going up, man. That's crazy. Wow. That's crazy. Interesting. Very interesting.
Wow. I think
we're going at the point of control. We're going to close up there. We're going to fill that 69.40, which is kind of where we started the conference at 69.40. Oh man, suckers. Yeah, we're going up. I think we're going up. All right. Fine. 69.40 it is. go to 41.5 and get ticked out. Let's go. Get me green on the day, for the love of God. Come on.
Yeah, we had the MOC come out.
What was
and
the
I
number?
Didn't even look. It's 1.4 billion or almost 1.5 billion to the upside in the S&P and 1.3 billion almost in the Nasdaq. So large
Frickin'
buying.
the dips are back. The buy the dippers are back. God damn,
A lot
that
of
only
selling.
lasted.
A lot of
That
selling
didn't
in
last very
Google
long.
and Oracle. A lot of buying in Nvidia, Microsoft, Apple, Tesla, AMD.
Woo, 458 contracts is bought right there. Oof. All right. Could be a nice little squeeze to the upside here. We are on VWAP. This VWAP is accurate. And
Sam, yeah, I can hear you, but I think you're black on the stream.
Oh,
You're like
we're back now.
blacked out. There we are.
Yeah, no, I'm back. So my internet just cut off for everything. Just
Oh, that was weird.
But it reconnected like almost immediately. So no idea.
Classic technology.
a little hiccup. Oh, come on. Get up there.
I think this could be a reversal here. I would short, but I would
to the
be so
downside.
annoyed.
I mean, I know I'm thinking that too, but I don't know. I think we're going up.
Just seeing a ton of
The delta's
potentially
strong. The
trapped.
delta's really big on the buy side now. Yeah, we're going up.
Yeah.
Yeah, we're going up. Where are we going? I don't know, but we're going up. Point of control is not going to be shifted at 69.40. There's like 19,000 contracts traded there today. And it just seems right that we get up there because that's where we were trading prior to when Powell started speaking. So when that big drop came down.
I really want to short.
Oh,
But I'm not
don't
going
do
to.
this.
I'm not
Don't
going
do
to.
this, you idiot. Don't do this to me. Don't cry for me, Argentina. Oh, why?
Yeah, those buyers are trapped. They are trapped the road. Trappage.
I don't think they are. I don't
5,
think
6,
they are.
7, 8, 9.
I think the sellers are trapped.
1,000. Nah, sellers are fine. 1,000 buy contracts at the top of that, where the point of control is, came in on one candle, right at the top of that candle. Those, I mean, they could very easily, be let out and they're not trapped, but they're still very much in the market. But
you're looking at the Nasdaq, and I'm not though. That's also.
Yeah. And you know me, I like to bet against people who put too much size on in one area.
Yep. Interesting thing is my VWAP for NASDAQ, like my continuous one that includes the overnight sessions and whatnot. We're trading above that in the NASDAQ, but in the ES and the Dow are trading below it. So it kind of just gives you maybe a little bit of gives everybody a little bit of insight in terms of like the strength of the NASDAQ versus the other indices at the moment. We're resisting VWAP at the moment on the ES, that continuous VWAP I was talking about. We just ticked it in the last 5-minute candle, and we're trying to get back up to it now while we are settling above it in the NASDAQ. So
yeah,
kind of interesting. And in the Dow, we're like 150 points away from it. So we're got a little ways to go in the Dow here.
The Dow. Dowie Jones. what am I doing? I was going to do something. I forgot what it is now.
Can't believe we're only 4 minutes away from cash close here.
Ka-ching.
Flew by.
Here's a good question. What type of food should I go for tonight?
The most important question.
Burgers? Mexican, Italian, Chinese, Thai, Indian. What should I go for? Chat, tell me what I should go for tonight.
Thai food sounds good.
Thai food's great.
Sushi sounds good.
Sushi. Just say some Indian food sounds pretty good right now.
Indian food's good as
I
well.
mean, Hola Prime TV would say Indian food, but you know.
All right, so we have one
Nadine
vote for
says
Indian,
Chipotle.
one vote for Thai. Nadine says Chipotle, so Mexican. Okay.
There we go.
Robert says, I believe that's Chinese food, so we need more votes.
Yeah, Shekwan, that's spicy. That's very good, spicy Chinese food. Very good from that region. Shekwan is super hot.
Potentially one more vote could lock it in for me. Angry chicken. What the hell is that?
Is that a chain?
I love a good
Fried
chicken
chicken
tikka.
type thing, yeah.
Chicken tikka
KFC
masala.
style. Ooh. Oh, Paul, you're selling it to me. Chicken tikka masala. Some naan bread. Oh yeah. I think that's winning for me right now. I think that's number one for me.
Get up there, Daniel. Let's go. Let's go. You know what? This is also going to be sitting here a little bit sluggish because they're going to wait on earnings 5 minutes after. That's some of this stuff. This thing could really rocket. This market could climb. I'm going to stay in this trade unless I get taken out. Chat, just so you guys know. When we get off the air, we're going to be off here in about a minute and a half, but I will still stay long and see if my TP gets taken out at the top here. I'm at 69.41.5 in the ES, which I think is rather doable. That's not a stretch at all. And I'll get me back green on the day, and I'll be happy with that. Coming in for tomorrow. But boy, I normally don't trade like this through FOMC, but we did it for your benefit, guys. Hope it was fun.
Exactly.
Hope it was fun.
Always fun.
Yeah.
All for your benefit.
Whew. Man.
All right. I'm locking in Indian food. That's what I'm going for.
Nice.
All right.
Heck yeah. I like
You
it.
wear your Hola Prime shirt when you go pick it up. You have it delivered.
I'm lazy.
Oh, Sam, hey, say hi to Samesh for us. Oh, yeah, okay.
Sammy. All right. Well, with that being said, I think it is time for us to sign off here. We appreciate it, chat. Fun day. Pretty
You guys were
exciting.
great at the end. You guys were very good in the end. Very active. Appreciate that.
Yeah,
Awesome.
definitely.
Yeah.
And everybody have a good night, and we'll see you back tomorrow, same time, same place. You know the drill. So have a good one,
Everyone be
everybody.
safe.
And
There you
we'll
go.
catch you tomorrow.
Take care.
Take care.
Take care.
Let's
Bye.
go, ES. Let's go, ES.
Pump it up.
Yeah. Ooh, look at this.
Hola Prime. Trade with transparency.
All right.